Hello students, in this particular video, let's start the discussion on another important topic, that is the concept of fiscal policy. Under fiscal policy, let's discuss budgeting concept. Now from the UPC examination perspective, what are the important points here? Will the questions be asked from this particular module in the prelims and the mains? The answer to both of these particular questions is yes. In the last couple of years, questions have been asked on the idea of the budgeting, both in the prelims as well as the mains. So for exams, this particular module is very, very important. Now with this particular caveat, let me start with certain very important points. First, let's try and understand certain important points related to budget. Then we'll discuss the process of budgeting. Then the budget accounts and deficits, very important. Then we'll discuss the FRBM Act and the committee related to FRBM Act, that is the encasing committee. Then we'll discuss certain aspects related to public debt, then important concepts, and finally, we'll have a look at questions. Now let me start with the important points related to budget as such. Now whenever you talk about budget, many of the times you'll come across these particular terms. That is, they will say that there will be general budgeting, there is a surplus budgeting, there is a outcome budgeting, etc. Now what do you mean by all of them? Let me start with the concept of budget itself. Budget essentially is a set of documents which is submitted by the government annually in the parliament. Is it okay? Now why does government submit these particular documents? Very simple. Under the Constitution of India, although we do not have the term budget, remember this particular statement. Under the Constitution of India, the term budget is not mentioned. However, there is one article, Article 112, and this particular Article 112 basically discusses the concept of annual financial statement, AFS. And under this particular Article 112, government annually will have to submit the annual financial statements in the parliament. Now, why there is a requirement of a submission in the first place? Government, whenever they announce a budget, let me boil it down to a very basic concept here, will announce how much expenditure they are going to incur and how much revenue or income they are going to collect. Is it okay? Under the concept of budgeting, government will announce how much expenditure will the government incur and how much income the government will collect. For example, in 1 year, government might simply say, in this year, we will spend 30 lakh crore rupees under midday meals scheme, under Sarva Shikshan Abhiyan, under public distribution system, Atal Pension Yojana, etc. Whatever the names are, don't worry. So government on one side will tell you that they're going to spend so much of amount of money under so many heads. In addition to this, government will also tell you what are the important sources from which government will generate the income. That is, specifically, government will tell you that they will collect certain amount of income from the tax receipts. Government will collect certain amount of income from non-tax receipts. Right? What are the tax receipts, non-tax receipts? We'll understand it later. But generally understand this. Whenever they announce a budget, government will provide you all the information related to how much expenditure will the government incur and how much income the government will collect. And when you talk about the budgets like this, let me start with three important terms. That is the idea of surplus budget, idea of deficit budget, and idea of a balanced budget. I'll repeat the terms here. Follow this very carefully. The idea of surplus, deficit, and balanced budget. Now, whenever you're talking about surplus, deficit, and balanced budget, you are only talking about how much is the total expenditure, how much is the total income. Now, in the context of this, if you say there is a balanced budget, it essentially means the overall expenditure is equal to the amount of income or receipts. In the context of budget, rather than using the term revenue, I'll simply use the term receipt, or I will use the term income. Do not get confused here. So whenever you say a balanced budget, you're basically ensuring that the amount of expenditure that you have incurred as the government is equal to amount of income that you have generated. For example, the government, if they spend 30 lakh crore rupees, they will also be collecting the revenue or income of 30 lakh crore rupees. Such type of budget is called as balanced budget. Second, the surplus budget. In the context of surplus budget, what will happen? The amount of expenditure will be lower than the amount of receipts that the government will collect. That is, if the government of India spends, let's say, 30 lakh crore rupees, and on the other hand, will collect a total amount of, let's say, 33 lakh crore rupees. So expenditure is 30 and the amount collected is 33 lakh crore. There is excess of 3 lakh crore rupees. Such type of budget is called as a surplus budget. And then there is a deficit budget. In the context of deficit budget, what will happen? The amount of expenditure will be higher than the amount of revenue. For example, if government of India this year announces that they are going to spend 30 lakh crore rupees, and on the other hand, government will collect only income of, let's say, 28 lakh crore rupees, there is a deficit of 2 lakh crore rupees. Right? Such type of budget is called as a deficit budget. Done? Now earlier, just to extrapolate on this, earlier in 1990s or before 1990s, government used to come out generally with the deficit budget itself. That is, the government's overall expenditure used to be higher than the overall income or the revenue collected by the government. And whenever you have this kind of a deficit budget, government used to borrow from RBI. I will repeat the statement here. Whenever you have this kind of a deficit budget, government would simply borrow from Reserve Bank of India, that is RBI. And to bridge this particular deficit which used to be having, that is, imagine, I'll just throw in an arbitrary number here. The overall expenditure is 30 lakh crore rupees, and the amount of income that is generated by the government, even by borrowing from, let's say, issuing government securities in the market, if government collects, let's say, 28 lakh crore rupees, the gap between these two is how much? 2 lakh crore rupees. And this used to be referred to as a deficit budget or budget deficit. And this particular deficit of 2 lakh crore rupees was basically bridged by government of India borrowing from Reserve Bank of India. Done? Right, so these are some of the important aspects related to the balanced budget, surplus budget, and deficit budget. Now, in addition to this, there are three more terminologies here. One is called as a gender budgeting. Second one is a zero-based budgeting, and the third one is outcome budgeting. Let's start the discussion here. First one, gender budgeting. Now, whenever I discuss the idea of a gender budgeting, zero-based, etc., please understand these are basically the practices within the budgeting concept itself. That is, there is no separate budget called as a gender budgeting. For example, the government of India actually practices gender budgeting. So, whenever government of India will come out with the budget documents, within this particular budget documents itself, there is a concept called as a gender budgeting. Done? So, have a look at this. What do you mean by gender budgeting? First and foremost, all of us will agree that there is a need to promote women empowerment in India. You need to ensure sufficient access to healthcare is available for them. Sufficient number of well-paid jobs are available for them. Sufficient access to education is available for them, etc. So there is a need for government, because that is the duty of the government, to ensure that there is an empowerment of women. Let me just give you a basic idea why we need to empower women in India. As per the latest World Inequality Report, only around 18% of the incomes which are generated in India are earned by women employees in India. I can understand the statement here. Only around 18% of the incomes that are generated, earned in India annually are going to women employees. In essence, what I'm trying to say here is there is so much of income inequality, gender inequalities which are present in India. So it is the duty of the government to ensure that certain amount of expenditure will be incurred by the government annually under budget, through which government will be basically promoting gender equity in the Indian economy. So governments, one after the other, they'll keep on saying that they are in favor of women empowerment. But now the question is, how do you evaluate the performance of the government? For example, imagine here is one government, again and again it will keep on telling you that it is in favor of women empowerment. But how do you evaluate the performance? How do you basically come to a conclusion, okay, this particular government is not just talking the talk, but also walking as per their talk? That is, in simple terms, the government has implemented certain important measures or reforms through which it is basically promoting women empowerment. And one way to establish that is the concept of gender budgeting itself. Under gender budgeting, what we are essentially doing is, whenever the government will prepare a budget, in the budget, there will be certain various measures through which government will incur expenditure in the economy, such as schemes launched by the government, such as welfare subsidies given by the government, such as housing assistance provided by the government, wage opportunities provided by the government, etc. So now the argument will be, out of all of this particular expenditure which has been incurred by the government, how much of this particular expenditure is basically incurred because of, let's say, women. That is, when I say because of women, I'm essentially saying how much of the money that is spent by the government here will essentially flow to women in the economy. For example, has Government of India launched any welfare subsidy for them? Essentially, has Government of India launched a school where infrastructure will be developed only for women? Has the government developed or constructed any hostels only for women? Is Government of India providing any welfare schemes for women, etc.? Right. So this is how we are basically trying to ensure the government will spend sufficient amount of money in order to ensure that women empowerment or gender equity will be promoted through budgetary principles as such. So it is a policy approach to promote gender equity in the economy. It is done in order to ensure that budgetary policies do not increase the social as well as economic inequalities in the economy, or let's say in the Indian society. Rather, government will be using the budgetary policies to reduce such inequalities. Gender budgeting basically involves three very important core goals. One, the government should basically mainstream, that is basically bring into forefront discussion over the idea of a gender equity, right? And how can government do that? By ensuring some of their policies will have component for promotion of gender equity, right? So mainstream the gender issues within the government policies. Second, promote accountability of the government with regards to gender inequality reduction. That is, we have already established that there are inequalities in the economy in terms of access, in terms of jobs, in terms of incomes, etc. Now, what are the policies that are taken by the government to reduce these particular inequalities? We are trying to hold the government accountable. And the third point, basically to change the policies as well as the budgeting practices. So these are the three very important core concepts related to the idea of gender budgeting. Now, is a need for gender budgeting. First and foremost, there's a huge differing access to services such as education, health for both men and women, or boys and girls. Now, generally you must have seen, not so much in case of urban India. Again, I'm saying not so much, which means comparatively it is much higher in case of a rural India, where in the households always prefer to send the boys to the school and prefer, again I'm not generalizing it, in some of the households it has been seen, and they prefer the girl children to work in the households, right? So basically there's a huge differing access to services such as education, healthcare, etc. And this is not just applicable to education and healthcare. Even the earlier economic surveys have stated that in terms of access to nutrition also, the boys or the children in the households, if they're boys, they get more access to nutrition compared to girl children. So don't you think the government as a responsibility or as a duty should actually promote more and more access to girl children, women, etc.? Definitely yes. Second point, it is the duty of the government. It is the responsibility of the government. They cannot run away from it. Third point, to promote a better usage of labor resources, because there are various sectors where women are very much productive. For example, in textile sector, in tourism sector, etc. Generally, it has been seen that women as workers provide more productivity, more output compared to male workers, especially textile sector, where most of the times female workers or the women workers are actually preferred. Fourth one, in many of these particular cases, whenever the gender budgeting has increased, we have seen that women empowerment will increase, and with higher women empowerment, the violence against women, the instances of violence against women has actually come down over a period of time. So these are some of the reasons why we need government to promote the idea of or inculcate the idea of gender budgeting. Next, now what is the context of gender budgeting in India? How this has moved over a period of time? First and foremost, understand this. Over a period of time, yes, the amount of the total expenditure incurred in the budget has increased. And not just this, how much is the money that has been spent under gender budgeting, it also has increased. Is it okay? I'll repeat both of the statements here. How much is the total expenditure incurred by the government under budgeting? Yes, it has increased. And not just this, how much is the overall expenditure incurred by the government under gender budgeting? That also has increased. You can see this particular graphical representation, you will have an idea. Back in the year 2005 and 6, the amount of expenditure that was incurred by the government for promotion of gender budgeting or for inculcating gender budgeting was more than 24,000 crore rupees. And the overall budget expenditure was somewhere around 5 lakh crore rupees as such. And over a period of time, what has been the overall expenditure under the budget from around 5 lakh crores? Now, as for 2021 is concerned, it is more than 30 lakh crore rupees. Has the overall expenditure increased? Yes. So has been the increase in the gender budgeting. That is, back in the 2005 and 6, how much was allocated under gender budgeting? More than 24,000 crore rupees. And for 2021, how much has been allocated? More than 1.4 lakh crore rupees. So over a period of time, with the rise in the overall expenditure under the budget, the amount of expenditure incurred under gender budgeting also has increased. Done? Having said so, please understand this as a percentage of the union budget. Is it okay? How much is the expenditure incurred by the government for gender budgeting divided by how much is the overall expenditure? Right? If I want to give a very simple example, imagine for a particular year, Government of India will spend 30 lakh crore rupees for overall budget. And out of this, let's say hypothetically, government spends 6 lakh crore rupees for gender budgeting. Then essentially, what does it mean? 6 ones are, 6 fives are. In terms of percentages, 1 upon 5 will be how much? 20%. So as a percentage of total expenditure, gender budgeting will be 20% in this particular example. What has been the situation? If you take the actual numbers in the budget as such, over a period of time, you will see that the amount of the expenditure incurred by the government under gender budgeting is somewhere in the range of 4% to 6%. It has not crossed more than 6%, and for majority period of the time, it has not fallen below 4%. Again, I'm saying for majority period of the time. Some of you might be thinking, sir, right, back in 2007, 2008, this has actually come down. It has actually reduced. What is the reason? These were the years when Government of India was making a budget for Indian economy, which was going through a slowdown phase as such. There was an external event called the global crisis, which started in USA, and as a result of this, there was a huge impact even on the Indian economy, just like it affected other global economies as such. So in this particular crisis period, right, generally the focus was more on a recovery of the economy rather than only promoting or greatly promoting gender budgeting. And that is the precise reason for a couple of years, yes, as a percentage of total expenditure, the expenditure incurred under gender budgeting has been below 4%. But for majority time period, it has been above 4%, below 6%. And that is the cause of concern. Why? The overall expenditure has increased. So has been the expenditure incurred under gender budgeting. Earlier we have seen this. Back in the year 5 and 6, 24,000 odd, that is more than 24,000 crore rupees was spent for promotion of gender budgeting. And over a period of time, it has become more than 1.4 lakh crore rupees. So when you look at the absolute numbers, only the expenditure, you will feel that the overall expenditure has actually ballooned, has increased. But when you look at what is the percentage of this particular expenditure out of the total expenditure, you will not see a perceptible increase or rise in this particular increase in the gender budgeting as such. And that is one point of a concern here. Second point of evaluation with respect to this will be, whenever the government will spend under various schemes, various programs, you can basically divide these particular schemes or programs into two parts or into two groups. And for sake of a simple understanding, what I've done here, I've divided this into two groups, part A and part B. In the context of part A, we will consider those particular schemes which have been specifically been launched by the government, wherein the expenditure will be incurred only for women as such, only for girls, women, etc. Done? For example, widow pension scheme. And when you're talking about a widow pension scheme, you're going to provide these particular funds, or you're going to allocate these particular funds, which will be used only for right the widows as such, that is a female part of the society. And on the other hand, you also have certain schemes, that is a second part or part B schemes, wherein part of the funds which have been allocated by the government will be kept or will be spent for women. That is, for example, midday meals program, etc. Now, what is the importance of evaluating like this? The government should implement more and more these particular schemes wherein the coverage will be exclusively women itself. Is it okay? Right? These particular women-centric scheme or female-centric schemes should be implemented more and more, and the expenditure incurred by the government or allocated by the government under gender budgeting should be more under Part A type of a scheme rather than Part B type of a scheme. But what is happening in reality in the context of India? In the context of India, remember this, basically what you'll see is a majority of the expenditure that has been incurred, okay, majority of the expenditure that has been incurred is for Part B type of an expenditure schemes rather than Part A type of an expenditure scheme. Again, you do not have to mug up these particular numbers. Numbers are not important here. You cannot be expected to mug up the data for last 15 years as to how much is Part A, Part B type of expenditure for all the 15 years. Not required. Essentially, what you need to understand is simply this. Whenever you talk about gender budgeting, it essentially means what? It is a practice. It is a policy wherein we will inculcate the idea of allocating expenditures for women in the policy of budget. Is it okay? In all the expenditures that is going to be incurred by the government, we will ensure that some of the expenditures will be incurred for upliftment of a women, empowerment of a women, promotion of gender equity. Right? And these are some of the very important points related to this. Done. So this is one type of concept within the budgeting. Let me go to the next one, zero-based budgeting. Now, what do you mean by zero-based budgeting? Before looking at zero-based budgeting, let me give you an example. Imagine situation one. Here is the finance minister, and here is a minister for a particular ministry. Okay, education, health care, whatever it is. So in this year, the finance minister will basically tell the minister, last year I had allocated, let's say, 1,000 crore rupees for your budget. This year, I will increase this by just 20% like this to 1,200 crore rupees. Is it okay? Last year the allocation was how much? 1,000 crores. This year I will simply increase it to 1,200 crores. So in this particular example, finance minister has not asked, does the ministry want 1,200 crore? What kind of schemes are being implemented, etc. What they've essentially done is they've increased the budget allocation from 1,000 crore to 1,200 crore. That is increased by 20%. So such type of budgeting exercise where the budgets are allocated, where the funds are allocated this year based on how much funds were allocated last year. Is it okay? I'll repeat the statement. This is a practice wherein the funds which are allocated this year are determined based on the funds which were allocated last year. That is essentially how much was allocation last year? Above and over that, some more allocation, right, will be provided to the ministry. Such type of a budget exercise is essentially referred to as incremental budgeting. But opposite to incremental budgeting, there is something called as a zero-based budgeting, ZBB. Now, what do you mean by zero-based budgeting? Let's take the same example, second situation, right? This particular minister will approach the finance ministry, demand for 1,200 crore rupees. Now, the finance minister will basically say, give me the reasons why should I allocate 1,200 crore rupees to you. That is, in case of a zero-based budgeting, look at the name here, zero-based budgeting, finance minister will simply start with the allocation of a 0 rupees to this particular ministry. Is it okay? Assume it is 0 rupees. Now, you tell me what you require money. What is the reason you need funds? Right? The minister might simply say, I want to launch a new scheme for which I will incur expenditure of 600 crore rupees. Okay, allocated. Then the minister will say, I want another 500 crore rupees to develop certain infrastructure. Minister will say, okay, allocated. The minister will again say, I need another 100 crore rupees to pay for, let's say, salaries, right, to certain employees. Or rather than saying salaries, I'll simply take another example, interest payment. Okay, I've borrowed certain amount of money. That is, my ministry has borrowed certain amount of money from the market. They need to pay interest on this. So have a look at this. 600 crore, 500 crore and 100 crore. We start with the allocation of a 0 rupees for this ministry. And we'll start building, right, these particular allocations. This particular exercise where every expenditure has to be justified. It is called as a zero-based budgeting. Look at the points here. In case of a zero-based budgeting, every program is started at zero base and every allocation will be justified. It covers both the existing as well as newer programs. It will provide a mechanism using which government can use the resources very efficiently and will also help the government in making credible and rational allocations or reallocations. What do you mean by this? First and foremost, always remember this. The amount that is there with the government, and that is the funds that are there with the government, for allocation purposes, there is a limited amount of money. Some of you might be thinking, sir, why doesn't government simply print money and use it for any kind of an expenditure? Very valid question. Because you are simply saying the amount of money that is there with the government is limited. Anyways, government has a printing presses. Why don't they simply print the money and use it for expenditure like this without any limit? Very valid question. In addition to this, I will add one more question here. Some of you will have this particular question at one or the other point of a time. Government has printing presses. Why doesn't government simply print currencies and give it to poor people in India? Because there are so many poor people who cannot afford 2 square meals a day. So many people who cannot afford certain limited, let's say, housing services, they cannot afford limited amount of clothes as such, right? Basic necessities. They are not able to provide money for the basic necessities. So why doesn't government actually print money and give it to them? Very valid. Both of the two questions are very valid questions. But the argument here is always remember this. Just because government can print currencies doesn't mean it will continuously print currencies for all of these particular exercises. They will not do that. Why? Whenever you print currency and issue the currency in the market, follow the example here. Whenever you print currency and issue the currency in the market, you need to ensure that the amount of money that is being supplied in the market will not be very, very high compared to amount of goods and services in the market. Right? What is the problem? Problem is if the amount of money that is supplied by the government crosses over is much higher compared to amount of goods and services in the economy, it will cause inflation in the market. Sir, how? How does it cause inflation? Let's take a very simple example. Imagine here is a government. Government will print currency notes, give money to all of us. Whatever the amount, let's say 10,000, 50,000, 1 lakh, whatever the amount is. For every Indian, the government will provide, let's say, 10,000 rupees. Now, when government amount, let's say 10,000, 50,000, 1 lakh, whatever the amount is. For every Indian, the government will provide, let's say, 10,000 rupees. Now, when government will let's say 10,000, 50,000, 1 lakh, whatever the amount is. For every Indian, the government will provide, let's say, 10,000 rupees. Now, when government will take 10,000 rupees, all of us will 1 lakh, whatever the amount is. For every Indian, the government will provide, let's say, 10,000 rupees. Now, when government will provide 10,000 rupees, all of us will not sit quietly with 10,000, especially middle income households, lower income households, poor households. They will take this particular 10,000 rupees, try to purchase goods and services in the market. Now, when they will try to purchase goods and services in the market, demand for the goods and services will increase. And when the demand for goods and services will increase, what do you think will happen to inflation in the market? The inflation will start skyrocketing in the economy, and that is the precise reason why government cannot keep on printing currencies and distribute it to poor people, cannot use it for its own expenditure like this. Done? So have a look at this. Whenever you're talking about zero-based budgeting, it essentially is a tool that is used by the government in the process of budgeting exercise in order to ensure that whatever funds are being used by the government, they're used very, very efficiently. There is a justified reason as to why this particular money has been allocated for a particular ministry as such. Now, what are the objectives under the zero-based budgeting? Allocations are justified. There is no complacency in the system. What do you mean by this? The ministries will not spend the money left and right. Now, they will be very, very careful as to what is the reason they want to take this particular money from the government. They will be very, very careful about it because they will have to justify, right, what is the need for this particular money to the Ministry of Finance. No wastage of resources, allocation of resources are very, very efficient enough. Ensure that important tasks are given importance. That is, the government would want to spend money for various exercises or various needs as such. But out of all of this, which of these particular requirements are necessary, are very, very important for the government? They will give the preference to that first, then other requirements will be taken care of. The tasks or activities will always be under the constant watch and review. In the context of India, zero-based budgeting has been introduced post 1980. It started in 1983, Department of Science and Technology, and 1986 has been expanded to all the ministries. Done. Second one is zero-based budgeting. Third one is outcome budgeting. Okay. Now, what do you mean by outcome budgeting? Budget expenditures are presented in terms of functions, programs, performance units, etc., which will reflect the governmental output and its cost. This is a definition of outcome budgeting. But this particular definition very difficult to remember. Let me simplify first, then we will give you the basic definition of outcome budgeting. Follow this very carefully. Let me take the earlier example itself. Government of India to a particular ministry wanted to allocate 1,200 crore rupees. Out of this particular 1,200 crore, I told you this particular minister wanted to start a new scheme at a cost of 600 crore. I'll take another component here. Wanted to develop infrastructure by spending 500 crores. Now the question is, what is the output that the government trying to achieve, or what kind of output the ministry is trying to achieve by launching this particular scheme, as well as developing this particular infrastructure? For example, let's say this is a scheme where Government of India will provide certain free vaccination, or let's say will provide free nutrition to the poor households. So under this particular welfare scheme, the objective will be what? To reduce the number of people who are unable to get access to nutrition. Right? I will keep a target saying that I want to cover so many households or so many number of people, and I want to provide the food grains to these particular people. And let's say I'll throw in an arbitrary number here. If the government wanted to cover, let's say 2,000 households, what I'm trying to do here, I'm trying to connect the amount of expenditure that is incurred by the government with the output that the government is trying to achieve. repeat the statement here. Context of outcome budgeting, we are trying to connect the means as well as the ends. That is, how much is the expenditure incurred by the government, the amount of input provided by the government, and as a result of this particular input, what will be the output. For example, let's say, hypothetically, government wants to set up new schools under infrastructure. So government, that is the ministry, wants to set up number of schools. And once the number of schools are set up by spending, let's say, 500 crore rupees, the enrollment in these particular schools must increase. Enrollment essentially means what? Children are getting admitted. Children, sir, will start using the school infrastructure. So have a look at this. In case of this particular 600 crore, the government, I'm just taking a hypothetical example here, government wanted to cover 2,000 households and provide food grains, right, to these particular households, reduce the poverty numbers, or basically try to address access to nutrition of these particular households. And on the other hand, by spending 500 crore rupees, the government wanted to increase the number of children who are there in the schools. That is, the enrollment ratio or enrollment numbers must be increased. So in both of these particular examples, what I've done essentially is I'm trying to connect the amount of input with the amount of output. Is it okay? We are trying to connect between, or we are trying to establish a connection between how much is the overall expenditure incurred with what is the outcome related to these particular expenditures. Such type of budgeting exercise is called as outcome budgeting. Is it okay? This is referred to as outcome budgeting. And in India, every ministry basically prepares a document related to outcome budgeting. And what is the importance of this? It establishes the relationship between the inputs as well as the output. The budgets are developed based on the relationship between the funding as well as expected results. And the advantage of outcome budgeting is that it will enhance the visibility as to how the government policies are actually leading to or yielding certain results or certain outcomes in the economy or in the society as such. So in this particular budget, allocations are always measured in terms of outcomes, which could be monetary terms or in terms of physical assets. So such an exercise is called as outcome budgeting. Done? So for what we have discussed, I've just given you what is the basic idea of a budget. And under the budget, we have discussed surplus budget, deficit budget, balanced budget, gender budget, outcome budget. And we have also discussed another type of a budget, that is a zero-based budget. Done? So these are certain important concepts related to types of budget. Now let me enter into the process of budgeting. Right? How the budget is actually prepared. Simple procedure here. You don't have to mug up all of these particular steps as follow the sequence. First one, the budget is annually prepared by the finance ministry. Now many of you will say, so this is very, very simple. Everybody will know, even if he is not preparing for UPSC, he will know that it is the finance ministry which will prepare the budget. Absolutely correct. But UPSC will not ask you this. UPSC will not ask you this because this is very, very simple. And if they are going to ask you this, you should not make a mistake there. But within the finance ministry, this is where the details are important. Within the finance ministry, there is a department called as a Department of Economic Affairs. Now, just a factual information here. In UPSC, you might ask you this. The finance ministry actually consists of 6 departments. What are these particular departments? One, I've already mentioned, the Department of Economic Affairs, DEA. Second one is Department of the Revenue. Third one is Department of Expenditure. Fourth one is Department of Investment and Public Asset Management. Fifth one is Department of Public Enterprises. And the sixth one is Department of Financial Services. Is okay? So these are the 6 departments which are present in the Ministry of Finance. Please remember this. Why? The question can be asked in the UPSC. That's the first one. Second one, the Department of Public Enterprises was there under different ministry, and very recently this has been transferred, has been brought under the Ministry of Finance. So there is a possibility of question being asked there. So remember this. I'll repeat it again. First point, regarding budget, the Ministry of Finance is responsible for preparation of the budget. But within the Ministry of Finance or Finance Ministry, there is a Department of Economic Affairs, or in short, DEA, which is responsible for preparation of the budget. Next point, just an additional point here. I told you the Ministry of Finance actually consists of 6 departments, and these particular departments are DEA, Department of Revenue, Department of Expenditure, Department of Investment and Public Asset Management, DIPAM, Department of Public Enterprises, and Department of Financial Services. So these are the 6 departments within the Finance Ministry. And now within the Department of Economic Affairs, there is a division called as Budget Division. Is it okay? Within the Department of Economic Affairs, there is a division called as Budget Division. And this is the division which is actually involved in the preparation of the union budget. Done? So it is a budget division within Department of Economic Affairs, which is under the Ministry of Finance, which will prepare the budget in annual preparation or in annual exercises. Now, what generally happens, the process is not important, just have a glimpse here. In case of the budget, first, the budget division will send a circular to all the ministries or departments. Is it okay? The budget division will send a budget circular to all the ministries or departments, asking how much requirement they will have for the upcoming financial year. And these particular ministries or departments will send in their requirement. The Ministry of Finance, that is basically the budget division, now will consolidate all of these particular requirements, come out with budget documents. Is it okay? Consolidated estimates are prepared, and this particular sum is essentially the idea of the budget documents. Then, so this is how the budget documents are actually prepared. Now, should you remember this particular sequence? Not required for UPSC. What is important is this point as well as these 2 points here. Now, before I go to the next point, that is how the budget is actually passed in the parliament, let me tell you certain important points. Whenever you talk about the concept of a budget, already mentioned, the budget is not present. The term budget is not mentioned in the Constitution of India. Rather, there is one article, Article 112, which will basically say that, or which basically ensure that government will come out with annual financial statement annually. Next, the budget. Please understand this. When I say budget is presented, it is essentially list of documents, a group of documents which are submitted by the government on the floor of the parliament. There is appropriation bill, there is a finance bill, tax expenditure, FRBM document, summary document, medium-term fiscal policy statement, etc. Large number of documents are actually submitted on the floor of the parliament. Right? Understand this? Right now, focus on 3 important documents. One is the appropriation bill. Second one is finance bill, and the third one essentially is summary document. What do you mean by all the 3 terms here? Whenever you say the budget is presented, government will come out with the announcement of how much expenditure they are going to incur and how much income they are going to collect. Is it okay? How much expenditure, how much income. So whenever you say appropriation bill and finance bill, the appropriation bill will basically provide you with all the information on how much expenditure is going to be incurred by the government. Is it okay? How much expenditure is going to be incurred by the government will be provided under the appropriation bill. Now some of you might be thinking, sir, what is the requirement? Why is Government of India introducing an appropriation bill in the first place? Answer is very simple here. There is a fund called as Consolidated Fund of India. And if Government of India wants to withdraw even a single rupee from the Consolidated Fund of India, then the government has to take the approval of the parliament. I will repeat the statement here. There is a fund called as Consolidated Fund of India. In the polity, you will come across 3 types of funds: consolidated, contingency, and the third one is a public account. I'm focused only on one here, Consolidated Fund of India. So if Government of India wants to withdraw even a single rupee from the CFI, then it has to first take the approval of the parliament first. Done? So have a look at this. Under the budgeting, government is essentially saying, this is the amount of expenditure we are going to incur. So for that, government requires money. Government requires funds, right? That is why there is a bill called as appropriation bill. Under appropriation bill, the government will basically give you all the information related to how much funds they are going to withdraw from Consolidated Fund of India. And on the other hand, in the budget, government will also give you information related to how much income tax they are going to collect, how much corporate tax they are going to collect, how much GST they want to collect in the next financial year, etc. And all of that information is provided under the finance bill. Okay? All of it is provided under the finance bill. So done. One is appropriation bill. Second one is finance bill. Now what is this? A summary document here. Whenever the budget is presented on the floor of the Lok Sabha as such, that is, whenever you see finance minister reading out the budget or providing the details of the budget on the floor of the parliament, the finance minister will be holding a piece of paper. That is, right, a list of papers or list of documents will be held by the finance minister. The finance minister will keep on reading page after page from this particular document itself. And that particular document is nothing but a summary document. Is it okay? Right? That is, whenever you are basically going through this particular budgeting exercise, I would strongly advise you or strongly recommend that you just watch what the finance minister does when he or she will present the budget in the floor of the parliament. There will be basically a set of documents, and the minister will keep on reading these particular documents one after the other as such. That is one page after the other page. And that is the summary document. And what is the summary document? It will basically give you the gist of the appropriation bill as well as the finance bill. Because please remember this, whenever you look at the appropriation as well as the finance bill, it will consist of a lot of the data as such. All the details are provided under these particular bills. Do you think the finance minister will have so much of time to explain to the parliament, or let's say to Lok Sabha, right, everything that is there in the bills as such? No. Right? Within short period of a span, let's say 2 hours, 2.5 hours, whatever time is taken by the minister here, within that particular period of time, right, they will simply provide the gist of the budget to the parliament as such. And that is called as a summary document. So one, appropriation bill. Second one is the finance bill. Third one is the summary document. Fourth one is a FRBM document. We'll have a look at it later. Under FRBM documents, again, there are 3 more additional types of documents, such as a medium-term fiscal policy statement, etc. Plus, there is also tax expenditure that the government needs to provide right to the parliament, etc. So there is a lot of these particular set of documents which are submitted by the government to the parliament when they say budget is presented. That's the first point. Second point, whenever you talk about budget presentation, there is no mention on which date this particular budget has to be presented in the parliament. Is it okay? In the Constitution of India, it has not mentioned on which date, right, at what time, etc., the budget has to be presented. All of these that we're actually following today is the type of a practice or a convention that we have been following earlier. Earlier, the budget was presented on the last working day of February. Government of India stated, no, let's present it on the first working day of February. Earlier, the budget was presented in the evening. Now we are presenting the budget in the morning. Again, please understand, this is just a convention. There are no such strict rules which are given or enshrined in the constitution as such with respect to the budget as such. Generally, when you study about the parliamentary sessions in the polity, you will come across three parliamentary sessions. One, right, is a budget session. Second one is a monsoon session, and the third one is a winter session. So the first session in a new year is always a budget session, and it is during this particular budget session that the budget exercise is conducted by the government. Next important point, right? Remember this: the finance minister might be from Lok Sabha or Rajya Sabha. Is it okay? Right? Because whether he is a Lok Sabha member or Rajya Sabha member, they can be appointed as ministers. So have a look at this: the finance minister, whether he is from Rajya Sabha or Lok Sabha, the budget is actually presented or read out on the floor of Lok Sabha itself. Done? Now, whenever you discuss the concept of appropriation bill, that is basically withdrawal for expenditure purposes, the expenditures can generally be divided into two types. One is called as expenditure charged, and the second one is expenditure made. Now, what is this expenditure charged and expenditure made? Expenditure charge are essentially those particular expenditures which are going to be incurred by the government, wherein the parliament can only discuss but cannot vote upon these particular expenditures. I will repeat the statement here. Expenditure charge are those expenditures which can be discussed in the parliament but cannot be voted in the parliament. Now, what do you mean by cannot be voted? The parliament can discuss these particular expenditures, but they cannot alter these particular expenditures. For example, they cannot vote and reduce these particular expenditures, not allowed. What are these kinds of expenditures? Best example, the salaries which are paid for constitutional bodies. So can the parliament discuss upon these particular expenditures? Yes. But can they vote and change these particular expenditures when the government wants to withdraw for these particular expenditures from the Consolidated Fund of India? No, not allowed. And on the other hand, there is a term called as expenditures made. Expenditures made essentially are referring to those particular expenditures which are discussed as well as voted upon, right, by the parliament. I will repeat the statement here. Expenditure charged can be discussed in the parliament, cannot be voted upon. Expenditures made can be discussed as well as voted upon in the parliament. Right? The parliament through voting can alter the expenditures made. That is one point. Second point, whenever I'm talking about appropriation bill, remember this, there is a term called as demand for grants. Right? Now, what do you mean by demand for grants? In simple terms, the finance minister is taking the approval of the parliament to withdraw the funds from Consolidated Fund of India. Is it okay? Right? The finance minister is taking the approval, is asking for the permission of the parliament to withdraw the funds from Consolidated Fund of India. Now, essentially, when the finance minister is asking, he will give, right, for what purposes the expenditures are required, that information to the parliament. For example, if I'm the finance minister and you are part of the parliament, I'm going to tell you why I would require, let's say, 30 lakh crore rupees this year. I will basically tell that, right, this much amount for midday meals is required. This much amount for public distribution system is required. This much amount is required for Pradhan Mantri Awas Yojana, etc. And these particular demands, right, demands are essentially means what? Finance minister is demanding for withdrawal of the funds from the Consolidated Fund of India. Is it okay? There is a demand for withdrawing or taking the money out of the Consolidated Fund of India. These particular demands which are given by the finance minister are essentially referred to as demand for grants. Done? So these are some of the important basic points that you need to understand in the context of budget. Now, so far what we have seen, right, what do you mean by budget? The different concepts of budget, how the budget is prepared. Now, how the budget will be passed, right? First, the budget will be laid down on the floor of Lok Sabha by the finance minister. Okay. Next step will be for the next couple of days, that is for 2 or 3 days, there is a general discussion that is held in the parliament. I will repeat the statement, right? First step is what? The budget is laid down on the floor of the parliament, that is a Lok Sabha, by the finance minister. And second step, there is a general discussion about this particular budget for next couple of days in the parliament. What do you mean by general discussion? For the next 2 to 3 days, the parliament essentially will discuss, right, how does the budget look like? Is this particular budget going to revive the economy? Is the budget going to bring black money into India or recover the black money in India? Is the budget going to promote corporate sector? Will the budget help the rural households? Will the budget reduce poverty in India? Will the budget create employment? Does the budget have anything to do in promotion of agriculture sector in India, etc.? So for the next couple of days, this kind of a general discussion is conducted. And one more point that you need to remember here is, whenever I say general discussion, none of the demand for grants are actually discussed at this particular stage. Is it okay? Demand for grants are not discussed here, right? So that is a general discussion of the budget. And once the general discussion is over, right, basically we are going to set up standing committees, and to these particular standing committees, we are going to allocate, right, the demand for grants. Is it okay? I'll repeat the statement. We are going to set up the standing committees after the adjournment of the parliament. We are going to set up the standing committees, and we will basically allocate this particular demand of grants or demand for grants to these particular standing committees. What is the objective here? Objective is very simple. If, right, have a look at this. If the Lok Sabha starts taking up all the demand for grants one by one, starts evaluating how much money is required, gets into the details of every demand for a grant, the time taken for Lok Sabha to pass all of this will be very, very high. And as such, please remember this. Earlier, right, even though we practiced the same process, we used to announce the budget on the last working day of February, and by the time the budget was actually passed and the president would give the assent, it would be somewhere in the month of June and July. So we are announcing budget for the next financial year, and by the time the president of India will give the permission by signing on these particular documents, we have already entered into next financial year, right? So there was a delay, and that is the precise reason the government of India has preponed the presentation of the budget. Rather than presenting the budget on the last working day of February, now government says we will present the budget on the first working day of February and ensure that the budget documents are passed and the government will be allowed to withdraw the funds from the Consolidated Fund of India even before the new financial year actually starts. Now some of you might be confused with this particular statement. Let me give a basic example here. Right? Imagine on 1st of February 2022, the finance minister will present the budget. Is it okay? The 1st of February 2022, the finance minister will present the budget on the floor of Lok Sabha. So for what year is the budget presented? We know that it is being presented on 1st February 2022. But for which year is the government presenting the budget? It is presenting the budget for the year which will start from 1st April 2022 till 31st March of 2023. Is it okay? This is the duration for which the budget is presented by the government. Now, some of you might be thinking, sir, is only one budget presented in 1 year? Not necessary. Generally, the practice is one budget is presented. But in a particular year, right, let's say hypothetically, in the month of April and May, elections are there. Now, the government wants to announce the budget for the next financial year, but this is an outgoing government because they are going to announce the budget in the month of February, but for next financial year. But what is the guarantee that in the next financial year, same government will be there? Don't want to provide an option to the new government to make a new budget? Definitely yes, because the new government, whichever party forms it, the new government must be given the right to form a new budget because it is held responsible for the next financial year. And that is the precise reason whenever there is an outgoing government, there are two possibilities. Is it okay? Whenever there is an outgoing government essentially means what? They are announcing a budget, but in the next couple of months, there are elections. So have a look at this. Whenever you have an outgoing government, there are two possibilities. One, the outgoing government will simply announce something called as vote on account. And second, they might announce interim budget. Two possibilities, understand this. They might simply announce vote on account, or they might simply announce interim budget. One of the two will be done. What is the basic difference? Whenever you say interim budget, it is just like a normal budget itself. The government will give you the full announcement in the budget. That is, the government will tell you how much is the total expenditure for full financial year and how much is the total income collected by the government in full financial year. Even though this is an outgoing government, they will provide you with the full budget, just like a normal budget. It will have both the sides, that is the revenue side, that is the receipt side, as well as the expenditure side. And understand this. Right, some of you will be thinking, sir, what if the elections are held, the government which has announced a full budget will lose, right? That is, the party will lose the election and another party will win the election. In that case, what will happen? The party which will win the elections will form the government, or which has a majority will form the government, and that particular party can come out with another budget. Is it okay? Right? The new government can come out with another budget. Generally, it is called as a mid-year budget. Now, what is the idea of a vote on account? The outgoing government, rather than announcing full budget, that is the expenditure as well as the revenue side of the budget, will simply announce part of the expenditures. Is it okay? Will simply give you data on expenditures. It will not give you full budget. It will simply give you data on expenditures. And what is the reasoning there? let's say the elections are going to be held in the month of April and May, and from June a new government will be formed for 2 months, that is April and May, which is part of the new financial year. The government will allocate certain expenditures. Is it okay? So remember this, vote on account will basically discuss the expenditure side of the budget. It doesn't discuss the full budget like an interim budget or like a normal budget. Done? Now, once the budget is presented, there's a general discussion on the budget here. Then the standing committees are formed. These particular committees are allocated with the demand for grants to these particular committees. They will evaluate all of these particular demand for grants, submit a report to Lok Sabha. Now, once the report is ready, there is a detailed discussion as well as a voting that will take place in Lok Sabha. Is it okay? Once the standing committee will give you the report, right? This particular report will be used for the detailed discussion as well as voting on these particular demand for grants. Now, what is this idea for voting? Essentially, right, whenever you discuss these particular expenditures that need to be withdrawn, the members in the Lok Sabha will have to approve these particular expenditures. Done? And that is why voting is required here. Next, once the voting is done, all these particular, right, the demand for grants will be consolidated. You have appropriation bill. Now this will be passed, sent to Rajya Sabha. Now there is a, right, a finance bill discussion in the parliament. Done? Once these particular bills, again, that is a financial bill, is discussed, passed in Lok Sabha, sent to Rajya Sabha. Rajya Sabha will pass it, send it to President of India. President of India will give his assent or signature. That is essentially the end of the passage of the budget as such. Done? So these are some of the very, very important points related to how the budget is prepared, how the budget is passed. Having seen the process of preparation of the budget, let's enter into the important concepts here. That is the budget accounts and deficits. Now, generally, when you talk about the union budget, and for UPSC, focus on union budget, not too much about the state budget. The budgets are divided into two parts. Is it okay? The budget is divided into two parts like this. One is revenue budget. Second one is capital budget. Now, you will ask me, sir, why do we divide the budget into two parts like this? Generally, the idea here is, whenever you say budget, either you will have to talk about, one, the incomes that is collected by the government, and second, the expenditures which are incurred by the government. Either you have to talk about either incomes or expenditures. But please understand, rather than only focusing on the idea of income and expenditure, because anyways, when I say incomes, I'll be talking about the receipt side in the budget. Is it okay? I'll be talking about receipt of the budget. Receipt, essentially, remember this, in the concept of the budget, receipts are nothing but incomes. Is it okay? So when you say budget talks about the incomes, that is the money that is earned by the government, the incomes are divided under two heads. One is called as a revenue receipt and the second one is called as a capital receipt. Now, what are there under revenue receipt? What are there under capital receipt? We'll understand it later. But generally, why do we divide these particular terms or the budget into revenue and capital? Remember two factors here. One, either they are associated with assets or they are associated with liabilities. I'll repeat the statement here. Either they are associated with assets or they are associated with liabilities. For example, whenever you talk about the revenue side of the budget, this particular revenue side of the budget, either it is a revenue receipts, means what? Incomes are coming for the government, which can be called as a revenue side, or revenue expenditure, expenditures which are done by the government, which are part of the revenue. Why do we call this particular segment or part as a revenue? For a very simple reason, these are dealing with either expenditures which are incurred by the government for conducting day-to-day operations or day-to-day governance operations, or else they are basically referring to those particular incomes which are collected by the government which are not repaid back by the government. I will repeat the statements, understand this very carefully. Right? What is this revenue side of the budget? Revenue side of the budget basically consists of those inflows, those particular incomes which are collected by the government which do not create any liability for the government. Some of you will be thinking, sir, what do you mean by liability here? Liability essentially means repayment is done. Is it okay? Liability essentially means what? Right, where there is a repayment is to be done. For example, if I take 100 rupee money from you, or if I borrow 100 rupee from you, underline the term borrowing here. Borrow essentially means what? I will have to repay that 100 rupees to you. That is essentially idea of a liability or repayment here. So whenever you talk about revenue side of the budget, one, these do not create any liability. These are basically incomes which are collected by the government, which do not create any liability. Simply collected, that's it. Government doesn't repay this particular money back. Sir, can you give an example? In the next slide, couple of slides in fact, a lot of examples are there, but let me simplify it here itself. Right, best example is income taxes. Is it okay? Corporate taxes, etc. So when you pay income tax to the government, do you think government will return back the income tax that you have paid along with the interest to you? Absolutely no. Right? If a company pays a corporate tax to the government, do you think government will repay the corporate tax back to the company? No. So have a look at this. Right? In the revenue side, when you talk revenue receipts, these are the incomes which are collected and there is no repayment liability on the government on these particular incomes which are collected. They are simply going to collect it. That's it. Right? The government will not repay this particular amount back. What about the revenue expenditure? The revenue expenditures are the expenditures which are incurred by the government for conducting day-to-day government operations or governance operations. Examples are maintaining law and order, making subsidy payments, welfare schemes, etc. So for these, right, we generally refer to those as revenue expenditures. Shift to the other side, capital. Right, whenever you come across the term capital, so for these, right, we generally refer to those as revenue expenditures. Shift to the other side, capital. Right, whenever you come across the term capital, what does it essentially entail? What does it mean? These are associated with assets or these are associated with the liabilities. For example, let's start capital receipts. Right, capital receipts are those incomes which are collected by the government, which right will increase the liabilities for the government, or else right these are associated with assets for the government. Right, these are essentially going to reduce the assets, increase the liabilities. Sir, can you give an example here? Yes. Whenever government owns a particular company, public sector enterprise, government will sell this particular company in the market. So it will reduce the assets owned by the government. But on the other hand, government will be collecting, you can understand, government will be collecting money. So these are associated with assets or these are associated with liabilities. Both the capital side, both are associated with assets and liabilities. For example, in the context of capital receipts, government will borrow from the market. Is it okay? Government will issue G securities, borrow from the market. So these are associated with liabilities. Yes. Same thing with respect to capital expenditure. Government will spend money on infrastructure. So assets will be increased under this. Right? Government will basically repay loans. Right? So liabilities will be reduced under this. So have a look at this. Whenever you say capital side of the budget, these are associated with assets and liabilities. Either the assets will increase, liabilities will come down, or right the assets will decrease and the liabilities increase. This is how you divide the capital side into capital receipts and capital expenditure. Next, now looking at this particular budget concept, what I'll do is just to simplify the concept here, we'll try to divide this particular budget right first into receipts and then into the expenditures. And again, I'm repeating, receipts essentially means what? Incomes for the government. So the incomes which are collected by the government can be divided into two parts. One is revenue receipts, second one is capital receipts. Right, the revenue receipts are further divided into tax revenues and non-tax revenue. Tax revenues, example, direct tax, indirect tax. Right, for example, earlier there was right sales tax, service tax, etc. Now most of these have been merged into GST. Is it okay? Right, and on the other hand, the direct taxes such as income taxes, corporate taxes, wealth tax, etc. And on the other hand, non-tax revenues. These are the incomes which are collected by the government but not associated with taxes. For example, interest receipt. What do you mean by interest receipt here? Imagine the government has a given loan, and when the government gives a loan, it will collect a certain interest on this particular loan. Is it okay? Government will collect interest on this particular loan. So the interest that is collected by the government is called as interest receipt. So first one is interest receipt, profits and dividends. For example, government will own certain amount of stake, certain shares in the public sector enterprises, public corporations, etc. Part of the profits, right, or dividends are given by these to Government of India. Fees and fines which are collected by the government, external grants, right, special assessment or certain types of taxes which are imposed by the government can be examples of non-tax revenue. Right? What about the capital receipts? Three very important components here. One, the government will recollect the loans. So that is, the loans have been given by the government and the government is recollecting these particular loans. Disinvestment essentially means what? The government owns certain stake, right, in these particular public sector undertakings. So government will be selling the ownership in the market. Is it okay? Government will be selling ownership in the market. For example, Government of India has sold Air India. So earlier, 100% of Air India was actually owned by Government of India. So when Government of India sells Air India, right, collects some money. Is it okay? Right. So this is the basic idea of a disinvestment. Again, within disinvestment, narrowly speaking, disinvestment majority of the times refers to minority stake sale. Right. I will not be discussing all the concepts of disinvestments here, because under industries, we'll discuss right, what kind of a public sector undertakings are present in India, what do you mean by public sector enterprises, public sector corporations, right, public sector departmental undertakings, etc. And that is a context where I'll discuss everything related to disinvestment. Right now, what you need to understand, government will be selling the assets in the market, collecting money, and that is called as a disinvestment. Third one is borrowings. Government, for example, can issue G securities and borrow from the market. Yes. But having said so, please understand this also. The borrowings that are done by the government can be domestic in nature, can be external in nature. That is, the government of India can borrow from the domestic market, can also borrow from external market. But essentially, all of these three put together, I'll call this as borrowings. Now, have a look at this very carefully. Revenue receipts, government will collect, government doesn't repay. It's okay, there is no liability on the government. Income taxes simply are collected by the government. Government will not give it back. Done. The dividends of public sector companies, they will give it to government. Government doesn't repay it back. Government has basically, let's say, sold a company in the market. Government will collect money. Government doesn't give back anything. But essentially, look at this. What I'm trying to do here is, I'm trying to divide all of these particular receipts into two groups. Is it okay? I'm going to divide all of these particular receipts into two groups. And these particular two groups are, one group consisting of all the revenue receipts plus disinvestment as well as a recovery of loans. Follow this very carefully here. One grouping is, I'm going to take the tax revenue receipts. I'm going to take non-tax revenue receipts. I'm going to take recovery of loans as well as a disinvestment, and I'm going to club all of these together. Essentially, what I've left out of this particular picture, I've left out only one component, that is a market borrowings here. Okay. Now, what is this idea? If you talk about the revenue receipts, government will collect the money. Government doesn't have to repay anything. If you talk about a recovery of loans, government will recollect the loan. Government doesn't repay anything. If you talk about disinvestment, government will sell the assets. Government will not repay anything. But if you talk about market borrowings, government has borrowed. Government has to repay this. So when you talk about the total receipts that I've given in this particular slide, I can basically divide these particular receipts into two parts. One type of a receipt which creates a liability for the government. That is, today government might collect the money, but tomorrow or in certain future date, government has to repay this particular money. And second, the government has collected money and doesn't create, that is, this particular money doesn't create any liability for the government. This side, the example is market borrowing. This side, the example is rest of the receipts. Income tax receipts, yes. Corporate tax receipts, yes. Wealth tax, GST, dividends, recovery, disinvestment proceeds, etc. And on this side, market borrowings. Borrowings, today they will get the money for the government, but in the future, government has to repay the money. Although there is one criticism here, the criticism is borrowings are not at all income for the government. That is one criticism. But essentially what I've done, I've divided these particular receipts into two parts. One receipt which will create a liability for the government, and another is a group of receipts which do not create any liability. I will use a technical term now. One group will be referred to as debt creating receipts. Right? What is a debt creating receipt in the example that I've taken? Market borrowings. Debt means liability, repayment. And market borrowings will create a liability for the government. So debt creating receipts. And club, put together all the remaining receipts that are there in the slide, you will get non-debt creating receipts. Done. So receipts can be further divided into two parts here, debt creating and non-debt creating. Now, what is the importance of this classification? You will understand when I take up deficits. Next concept, the expenditure side in the budget. The expenditure side are divided into two parts here. One is the revenue expenditure. Second one is capital expenditure. Revenue expenditure examples are such as subsidy payments, welfare schemes on which government will spend money, interest payment. Government has taken a loan. On this, it has to pay interest. Law and order expenditure, defense expenditure, pension payments, etc. Again, I've just straightforward given the examples here. Many of the times, the defense can be classified under both revenue as well as capital. Don't worry about it. Right? So these are some of the revenue expenditures. What about the capital expenditure? Whenever government will spend money and create assets such as infrastructure, that is the capital expenditure. Government will repay the loans. Government will give loans to union territories, the state governments, etc. All these are the capital expenditures. Done. Now, having looked at the revenue expenditure as well as capital expenditure, let's use both of them to understand the concept of deficits. Okay. Now, what is this a deficit? First and foremost, after the independence, post 1950s, remember this, we have been using only two types of deficits. One, the revenue deficit. Second one is budget deficit. And whenever you talk about deficit, it essentially means what? There is a mismatch, right? What is the mismatch that I'm talking of in this particular situation? I'm talking about the mismatch between the expenditure as well as the income side. That is the receipt as well as expenditure. There are certain mismatches, and these particular mismatches are generally provided in the form of deficits. One is a budget deficit. Second one is a revenue deficit. Third one is a effective revenue deficit. Fourth one is a fiscal deficit. Fifth one is a primary deficit, and sixth one is monetized deficit. So remember this, To begin with, after independence, that is post 1950s, we used to practice only two types of deficits. One was the budget deficit, second one was the revenue deficit. But over a period of time, what we have done post 1990s, we have restructured the calculation of deficits. Today, we do not follow budget deficit. Budget deficit is not calculated. We do not follow monetized deficit, but we do calculate a new type of a deficit called as the fiscal deficit, a primary deficit, right? And we've also introduced one more type of deficit called as effective revenue deficit. So in the budget documents, which I'm definitely sure you will come across in the coming days, right? One is a revenue deficit, data will be provided. Effective revenue deficit, data will be provided. Fiscal deficit, yes. Primary deficit, yes. So these are the four types of deficits on which the information will be provided in the budget documents as such. Now let's start the discussion here. First, budget deficit. Budget deficit is basically the difference between the total expenditure as well as the total receipts. Earlier, understand this, before 1990s, what we used to do is simply this. We used to calculate total expenditure incurred by the government and total receipts collected by the government. And under receipts, we used to consider the government borrowing done by the government. And earlier I've told you a criticism against this. Whenever you're talking about government borrowings, these are not the incomes. Government borrowing is a liability. It is not an income. But we used to consider that as a part of the receipt. Even today, in NCIT books, etc., they have considered this as a part of receipts. That is part of capital receipts as such. Now have a look at this. I will calculate the total expenditure and I will calculate the total receipts. And let's say hypothetically, I'll just take an arbitrary number here. Imagine the expenditure is 30 lakh crore rupees and the total receipts is 28 lakh crore rupees. Then the difference between that is a 2 lakh crore rupees, essentially was nothing but budget deficit. But always remember this, the data will be given with respect to the absolute deficit. Absolute deficit means in terms of rupees, how much is the gap? Should you mug up this particular data? Absolutely no. Whenever you talk about deficits, the budget documents will give you deficits under two heads. One, they will give you absolutely in terms of rupees. That is, how much in terms of rupees is the deficit. For example, here, in terms of rupees, the deficit is how much? 2 lakh rupees or 2 lakh crore rupees. If I simply write crore here. But in the context of UPSC exam, you don't have to mug up these particular absolute numbers. Rather, it will help you if you can remember these particular deficits as a percentage of GDP. That is 3.4% of GDP, 5.8% of GDP, etc. Done? So first one, budget deficit. Earlier we used to practice this. Today we do not follow this. Why? We have discontinued budget deficit and in place of budget deficit, we have actually introduced fiscal deficit now. Let's go to the next one. Revenue deficit. Under the revenue deficit, look at the formula first. Revenue expenditure, revenue receipts. Now, what do you mean by revenue expenditure, revenue receipts? If you remember the earlier picture, I have given you this particular classification. Budget accounts are divided into two parts, right? One side, I will write the revenue and the other side, I will write capital. Under revenue, I would have written revenue expenditure and revenue receipts. And the revenue deficit will arise when the expenditure side is higher than the revenue receipts. That is under the revenue account or revenue head. Imagine you have collected 10 lakh crore rupees in the form of a receipt, but you have spent 15 lakh crore rupees under this. So essentially what will happen? Right? Essentially that will lead to the deficit on the revenue side. Hence this is called as a revenue deficit. Now please remember this. Under the FRBM Act, which I'll discuss later, under FRBM Act, we wanted to reduce the revenue deficit to 0%. Right? What is the reason? What is the advantage? We'll have a look at it later. Third one, effective revenue deficit, ERD. Now what is this effective revenue deficit? Look at the formula first. Revenue deficit minus grants for creation of capital assets. Now this particular idea is very simple. Under this particular revenue expenditure, look at this. Under revenue expenditure, there is one component called as grants for creation of capital assets, GCCA. Is it okay? Grants for creation of capital asset under the revenue expenditure head. Now what is the idea here? Whenever the central government will directly spend and develop infrastructure, is it okay? Whenever the government, that is the central government, directly spends and develops infrastructure, we will consider this expenditure as a part of a capital expenditure. Is it okay? That is under capital head. But certain points of time, what happens is, central government will give this particular fund, let's say, to state government or to a particular authority at the state level, and this particular authority or the government will spend money to develop infrastructure. Understand the difference between this and this. In the first case, central government is directly spending money on infrastructure. And in the second example that I've written here, central government is not directly spending. Central government is allocating funds to a different authority, and this authority is actually incurring this particular expenditure. So these kinds of expenditures which are indirectly allocated by the government, which are indirectly spent by the government, but on development of assets or infrastructure, are referred to as grants for creation of capital asset. And in the earlier calculation, when I calculated the revenue deficit, I considered GCCA as a part of expenditure. But if you remember the classification that we've discussed earlier, anything that is related to assets, is it okay? Anything that is related to assets should not be part of a revenue side, should be part of the capital side. But because central government is not directly spending this money, I've classified this GCCA under the expenditure side, that is the revenue expenditure side. So the argument here is whether it is directly spent or indirectly spent by the central government, it is associated with asset, and if it is associated with asset, you should not count it as a part of revenue account. And that is the reason, have a look at this. Effective revenue deficit is equal to revenue deficit minus grants for creation of capital assets. Done? So, some of you might be getting confused here. Revenue deficit is like this, revenue expenditure minus revenue receipts, right, is a revenue deficit. And if I write minus grant for creation of capital asset, it essentially means I'm subtracting GCCA from the revenue expenditure side, right? And if I subtract that, I will get a new type of a deficit called as effective revenue deficit. Done? Next one is the fiscal deficit. Fiscal deficit is nothing but total expenditure minus non-debt creating receipts. Is it okay? Fiscal deficit is nothing but the total expenditure incurred by the government minus non-debt creating receipts. Now, what do you mean by this particular formula? If you remember earlier, the structure that I had given was within the receipts, I divided these particular receipts into two parts. One, debt creating receipts and non-debt creating receipts. Right? I remember that. I divided the receipts into two parts, debt creating receipts and non-debt creating receipts. Right? And what I'll consider in this particular calculation is the total expenditure, means the revenue expenditure plus capital expenditure minus non-debt creating receipts. Those particular receipts which are not creating any liability on the shoulders of the government. Right? For example, tax receipts, non-tax receipts, proceeds from disinvestment, recovery of loans, etc. These are non-debt creating receipts. So on one side I will write total expenditure, and on the other hand I will write non-debt creating receipts. The difference between that is called as a fiscal deficit. And remember this very carefully. Now I basically give you the difference between budget deficit and fiscal deficit here. Earlier in the context of budget deficit, the expenditure was greater than the total receipt. And right, remember this, when I say total receipts, and even considered the market borrowings that are done by the government. For example, the borrowings that are done by the government by issuing G securities. And even after borrowing from the market, there was a deficit which was referred as a budget deficit, which was essentially 2 lakh rupees or 2 lakh crore rupees. Now some of you would be confused earlier. So you're saying government is spending 30 lakh, but they have only 28 lakh rupees. How is that particular thing possible? How can I spend more when I have lesser money? The answer to that is, under budget deficit, government used to follow a process called as a monetized deficit, where government would essentially borrow from RBI. Is it okay? Where government essentially would borrow from RBI. That is, government would issue or sell the G securities to RBI and borrow this particular money worth 2 lakh crore rupees from RBI to bridge this particular deficit. Whereas in the context of fiscal deficit, what I'm doing is, any kind of a liability that the government has, whether it is borrowed from RBI, whether it is borrowed from the market, etc. Because the criticism is that when government raises money from the market by selling G securities, it is under liability. And the G securities, which were earlier were considered as a part of the receipts, and now the argument is these are not incomes. So they should not be considered as part of receipts. So what we have done, we have basically taken out these particular borrowings from the receipts, right, in the form of debt creating receipts. And that is the difference between the total expenditure as well as non-debt creating receipts. And the difference between this and this essentially is total liability or the borrowing done by the government to bridge this particular gap. Done? So these are the different deficits. Now in the context of deficits, what has been the trend of deficits? Right? You don't have to mug up all of this particular data. Please have a look at the trend. Why? Generally UPSC will ask you questions related to trends in the deficits. They simply say fiscal deficit has consistently increased in the last 5 years. Fiscal deficit has a decline consistently in the last 5 years. Primary deficit has consistently increased in the last 5 years, etc. So these kinds of trend-based questions are asked in UPSC. From where do you get this particular information? From budget documents. For example, I will get this, right? Has a fiscal deficit consistently increased? No. Right? Has it been the same with respect to any other type of deficit? First and foremost, only 4 deficits are required now. You don't have to worry about monetized deficit. Why? We have discontinued it. Although there's a provision under the FRBM amendment now, right? But we are not using monetized deficit now. Budget deficit discontinued, replaced with fiscal deficit. Now I will get this. In the context of the deficits, 4 are important. One, fiscal deficit. Second, revenue. Third one is effective revenue deficit, and the fourth one is primary deficit. And these are the 4 types of deficits which are provided here. Right? If the question is in the last 5 years or in the last 10 years, has either of them consistently decreased, consistently increased? Both of the statements will be wrong. Why? There is no fixed trend or a pattern that has been followed by these deficits in the last 1 decade or in the last 10 years. Neither they have consistently decreased nor they have consistently increased. Certain number of years they have consistently declined, but after a certain number of years they have consistently increased and again declined. So this kind of a zigzag pattern you can find in the context of deficits. Next, whenever you go through the budget documents, okay, you don't have to mark up any of the numbers here. You don't have to mark it up. Why I'm using this particular table? Just to tell you the idea that whenever you go through this particular budget numbers, the government will give you data related to 3 years. That is, one, government will provide actuals for a particular financial year. Government will provide budget estimates of 2 years here, and government will provide revised estimates for one particular year. So what is this? It is very confusing. Let's take a very simple example. Don't worry about this table. Now follow the next example. Okay, imagine on 1st of February 2022, government will announce a budget. Is it okay? Government will announce the budget or come out with the budget. As mentioned earlier, when the government announces the budget on 1st of February 2022, they will announce this particular budget for the next financial year. And next financial year will be what? It will start from 1st of April, right? That is 2022, and will go on till 31st March of 2023. And whatever data is given by the government for this particular financial year, that is coming financial year, these particular data or these particular numbers are called as estimates. Is it okay? These are referred to as estimates. So have a look at the points very carefully here. I am in the financial year 21-22. Is it okay? 1st of February 2022 means what? I'm still in the financial year 21-22. So when I'm going to announce the budget in this year, the announcement will be for the next financial year. That is the estimates for the next financial year. First point. Second point, what is the previous financial year? Right? Before 21-22, what is the previous financial year? The previous financial year will be financial year 20 and 21. So for the previous financial year, I will give you actuals because the financial year is already over. Is it okay? Assume you are on 1st of February 22. This particular financial year is over. So for this particular year, you will provide actuals. For the next financial year, you will provide the estimates. And for the current financial year, have a look at this. You are in the financial year 21-22. For the current financial year, you will provide revised estimates. So 3 sets of data. One, for the next financial year, estimates. For the financial year which is already over, actuals. For the next financial year, revised estimates will be provided. Right? So these are some of the important points with respect to budget documents. Now, having looked at the concept of budget accounts and deficits, let's start with another very important concept here, a committee recommendation related to the FRBM. Okay, so one concept of FRBM we'll discuss, and a committee related to FRBM which has given the recommendations very, very recently. We'll have a look at those particular recommendations also. Now, first and foremost, whenever you come across the term FRBM, what does FRBM essentially stands for? FRBM essentially stands for fiscal responsibility and budget management. Remember this. FRBM stands for fiscal responsibility and budget management. Now the concept was earlier, that is before 2000, government of India used to borrow heavily from the market, borrow from RBI, etc. As a result of this, the deficit, both the revenue deficit, fiscal deficit, as well as the debt of the government was very, very high. Now to address these particular issues, government introduced the bill in the name of FRBM, and with implementation of FRBM, which was passed post 2003 in India, we have been able to control these particular deficits in the economy. Now what is the importance of such a bill? And why FRBM becomes very, very important for a country such as India? Generally, they'll talk about the concept of intergenerational equity. Intergenerational equity. Now what do you mean by this? Imagine a particular government, let's say hypothetically, in the year 2022, will borrow heavily from the market. Okay, the government of India, for whatever purpose, they want to develop infrastructure, they want to construct a road, they want to provide subsidies, they want to launch a new welfare scheme, whatever the reason is. But the point is that they've spent a lot of money, they've borrowed a lot of money. Now when the government borrows, let's say in 2022, a huge amount of money, can I simply say that this particular borrowing has to be paid by the government in the future? Let's say in 2027, after 5 years, the government needs to repay this particular amount. Now, let's say after 10 years from 2022, that will be 2032, government has to pay the borrowing, right? The repayment has to be done. So the argument here is the government, when they borrow heavily today, is okay, the government, when it does huge amount of borrowing today, the repayment has to be done. And in the future, imagine there is one more government, that future government will have to pay this particular amount. And the problem here is, the future government, when they will start making a repayment, there will be constraint on the money that they're supposed to spend in that year. So what do you mean by this? Let me give you a very simple example. Imagine in this year, that is in 2022, government of India has borrowed 1 lakh crore rupees. And when government borrows 1 lakh crore rupees, let's say in 2022, having a maturity period of let's say 5 years, can I simply say that after 5 years, that is in 2027, government has to pay back this particular 1 lakh crore rupees? Now, it is a different matter of fact that annually, government will pay interest on this. Okay, annually, certain amount of money has to be paid by the government in the form of interest. That will be done by the government. But in addition to this particular interest, after 5 years, this particular principal amount has to be paid back by the government. And as a result of this, let's say hypothetically in 2027, government of India wants to spend 10 lakh crore rupees totally under the budget. Is it okay? Government of India wants to spend 10 lakh crore rupees under the budget. And out of this particular 10 lakh crore rupees, government is essentially spending this particular 1 lakh crore rupees because they borrowed and they're supposed to repay this. So in the future, that is the future generations or the future governments will have to bear the burden of the borrowings done by the government in the past. So it should not put a restraint. It should not basically impose certain constraints on how much government can spend money in the future. And if the borrowing is very, very high, then basically the repayment in the future will also be very, very high. And the ability of the government to provide for welfare, to provide for infrastructure, etc., there will be a constraint on this because of past borrowings. Right? So in order to streamline the concept of a borrowing, in order to include more accountability in the system, government introduced and passed a fiscal responsibility and budget management act. What are the important provisions under FRBM? One, the revenue deficit has to be reduced by 0.5% annually, and we should eliminate it by 2008 and 2009. Is it okay? Revenue deficit has to be reduced by 0.5% annually, and by 8 and 9 we must eliminate this particular revenue deficit. And the fiscal deficit should be reduced by 0.3% of GDP annually, and we must be able to bring it down to 3% by 8 and 9. So what is the meaning of this? Right? While we are supposed to bring down revenue deficit to zero, eliminate it completely, but fiscal deficit of 3% is okay. What is the meaning of it? Let's start. Earlier we have discussed this. Generally, the budget can be divided into two accounts. One is called as the revenue account, and the second one is called as the capital account. Again, revenue account can be divided further into revenue receipts, revenue expenditure, and capital account can be further divided into capital receipts and capital expenditure. Now let's try to understand the importance of these two numbers here. We will have to reduce the revenue deficit and eliminate it completely by 8 and 9. What is the meaning of this? Revenue deficit essentially means the difference between the revenue receipts and revenue expenditure. I will repeat it. Revenue deficit essentially means the difference between revenue receipts and revenue expenditure. The revenue expenditure is higher than the revenue receipts, and as a result of this, there is a deficit which is called as the revenue deficit. Now, in the international market, there is something called as golden rule. Is it okay? In the international market, there is something called as golden rule. And what does this particular golden rule essentially state? It states that whenever the governments borrow from the market, is it okay? Whenever the governments borrow from the market, it should be for investment purposes and not for consumption purposes. So what do you mean by this? Whenever government of India will use the borrowings under the revenue head, it is being used for consumption purposes. Whereas the government borrows uses it for development of infrastructure. Is it okay? Uses it for the development of infrastructure. For example, the government can use this particular money for development of national highways, can use this money for development of warehousing, can use this particular money for, let's say, construction of dams, bridges, manufacturing facilities, etc. All of these are essentially investment type of expenditure which will fall under capital head, Whereas government borrowing money and using it for, let's say, providing welfare schemes to the people, payment for pensions to the workers who are basically in retirement, or spending this particular money for, let's say, repayment of interest, etc. These are called as using the borrowings for consumption purposes. And what is the argument here? Whenever you borrow from the market, don't use it for consumption purposes. Use it for investment purposes. Okay, use it for investment purposes. So keeping in mind all of these particular points, right, the government of India now wants to ensure that they will reduce the revenue deficit annually, and ultimately they will eliminate this particular revenue deficit. Now some of you might be saying, sir, you're talking about 2008 and 9. I'm in 2022, I'm in 2023. What is the relevance of this? Please understand this. Initially, when we implemented these particular norms as such, from 2003, we were able to manage or control these particular deficits. But back in the 2007, 8 and 9, there was a crisis in the overall global economy, which is famously referred as global financial crisis. Is okay? Back in the 2008, there was a crisis in the global market, which is famously referred as global financial crisis. And Indian economy, as a result of this particular crisis, was affected. And whenever there is, let's say, a slowdown, a recession, or there is certain impact on the economy, governments generally don't focus on controlling the expenditure. Rather, they will start spending more and more during that period of time. And it makes sense that the governments spend more money during, let's say, a recession for a very simple reason. If government of India doesn't spend money during a recession or during a slowdown, generally you will see that the private sector investment is very, very low. Is okay? The private sector investment is very, very low. And even if the government reduces in investments, again, even if the government reduces their investments, what will happen? The overall investments will further fall down. If nobody is investing, who will create jobs? Who will create a demand for goods and services? Who will create demand for raw materials, etc.? And that is the reason it becomes the duty of the government to ensure that during a recession or a slowdown or a depression, the governments spend more and more money so that the recovery happens. So argument is initially we started implementing, we were able to control these particular deficits, but because of the crisis, these targets were not met. And even today, you must have seen, right? These particular targets, even today, we have not met these particular targets. We are still in the process of eliminating or reducing revenue deficit and controlling fiscal deficit. Now, some of you simply say, sir, we agree. Okay? The revenue deficit should be reduced to zero. You explained it. We'll agree to that. But in that particular case, why should we keep the fiscal deficit to 3%? Why not eliminate even the fiscal deficit? The argument for this is fiscal deficit essentially refers to borrowings. Is it okay? The fiscal deficit essentially refers to borrowings. And when the government borrows from the market, okay, when the government borrows from the market, the government should use this particular borrowings to spend on infrastructure. Is it okay? Right? It is taken or it is granted that governments do borrow from the market. So does USA government borrow? Yes. Does Indian government borrow? Yes. Does UK government, Germany government, etc. do they borrow from the market? Yes. These countries actually borrow from the market. But it is always favorable if the governments borrow money and use it under the capital head rather than using it under the revenue head. Why? Under the capital head, what kind of expenditure do you incur? You will incur expenditure on infrastructure. Okay, so you incur expenditure on infrastructure. You incur expenditure to build roads. You incur expenditure to construct tunnels. You incur expenditure in order to generate or revive demand in the market. And that is the precise reason we say that borrowings are allowed. Right? To what extent? 3% of GDP. But these particular borrowings will be used for capital head purposes, not under the revenue head. And these are the first two and the most important provisions under the FRBM. Next, central government, generally when the state governments as well as the public sector entities borrow, central government will provide guarantees for these particular loans. And please understand when the central government provides guarantees, it is essentially exposing, it is having a higher exposure. So under this particular provision, the FRBM document simply says that wherever government of India will provide guarantees for the loans taken by the state government or let's say public sector undertakings, government of India should not provide a guarantee for more than 5% of value of GDP. So what do you mean by this? Imagine the GDP is let's say 100 crore rupees, then 0.5% of this should be the value of the loans for which the central government will provide guarantees. Beyond this, it should not simply provide the guarantees. Why? More guarantees provided, more the exposure for the central government here. Okay. Next, total liabilities of the central government not to increase more than 9% per year. Okay, liabilities of the central government. What do you mean by liabilities? Central government, please remember this, will have a liability in the form of public debt. Okay, remember this. Central government will have a liability in the form of public debt plus other liabilities. What are the other liabilities? For example, the amount of money that is there in the public account. Is it okay? Public account. Right, so money that is there in the public account, the government of India has the liability of repaying this particular public amount as such. So whenever we talk about total liabilities means total amount of money that the government of India should pay back. Right, so that is in the context of getting a sum total of public debt as well as other liabilities. And this particular public debt plus other liabilities from 1 year to next year should not increase by 9%. Is it okay? The public debt plus other liabilities of the government should not increase by more than 9%. Now, what do you mean by this? A simple meaning is, understand this, there is a huge amount of borrowing which is done by the government. Public debt essentially means what? How much is the total borrowing which the government of India should repay back? I will repeat the statement. What do you mean by public debt? How much is the total borrowing which government of India should repay back? Right, sir, what do you mean by this? Let me give a very simple example. One, there is a fiscal deficit. And what happens in a fiscal deficit? Fiscal deficit is measured annually. For every year, we actually measure fiscal deficit. For example, in the current fiscal, that is a financial year, government of India will borrow, let's say, 100 crore rupees. Okay? In the current financial year, government will borrow 100 crore rupees. And in the next fiscal, government will again borrow 200 crore rupees. So have a look at this. Whatever is the borrowing done by the government in respect to financial years, it is called as a fiscal deficit. It is called as fiscal deficit. So I'll simply say, fiscal deficit for the current financial year is 100 crore rupees and the fiscal deficit for the next financial year is 200 crore rupees. But when I say the total amount of loans that are supposed to be repaid by the government, the total amount of loans that are supposed to be repaid by the government has to repay this particular 100 crore rupee loan. Government also has to repay this particular 200 crore rupee loan. So total amount of loans that the government has to repay will become 300 crore rupees. I repeat, the total amount of loans that the government of India has to repay becomes 300 crore. And this in simple terms can be referred as public debt. Is okay? This in simple terms can be referred as public debt. So total amount of borrowing which government pays back, whether government of India has borrowed it directly or indirectly doesn't matter. So what do you mean by indirect borrowing? I'll come to that just give me some time. So whether the government of India has borrowed directly or indirectly, that will be counted under the public debt. Whereas in case of fiscal deficit, only the government borrowings which are done directly by the government of India is counted in the fiscal deficit. So the public debt plus other liabilities of the government are referred as total liabilities. The total liabilities of the government should not increase by more than 9% annually. Next, annually, government of India would simply place 3 more documents along with the budget documents, and these particular 3 documents are referred as macroeconomic framework statement, medium-term fiscal policy statement, and fiscal policy strategy statement. Is okay? These are the 3 documents which government of India has to submit in the parliament along with the budget documents. Now, what is the meaning of all of these particular 3 documents as such? Under the macroeconomic framework statement, remember this. Under the macroeconomic framework statement, government of India essentially will provide what is the growth outlook for the next financial year. What is the growth outlook for the next financial year? For example, whenever the budget is presented, the government of India will say that in the next financial year we will end up achieving, or we can estimate a growth rate of let's say 8%, 9% like this. So this particular growth estimate essentially is provided by the government under this particular document, that is macroeconomic framework statement. In addition to the growth estimate, the government also has to provide the overarching viewpoint of the economy. That is the overall viewpoint of the economy in terms of how the agriculture sector is going to grow in the next 1 year, how the industries are going to perform in the next 1 year, how the banking sector will perform in the next 1 year. These kinds of estimates are to be provided by the government under the macroeconomic framework statement. Whereas in the context of medium-term fiscal policy statement, generally the government of India will provide rolling targets for the next 3 years. Generally, the government will provide rolling targets for the next 3 financial years. Now, what do you mean by rolling targets? Rolling targets essentially means for the next 3 financial years, how much will be the target in each of the years for parameters such as a fiscal deficit, for parameters such as a debt to GDP ratio, public debt, etc., and even revenue deficit, etc. So various parameters, on these particular parameters, government will tell you what they are trying to achieve in the next 3 financial years, and those particular targets are called as rolling targets. And next one, fiscal policy strategy statement. Okay, fiscal policy strategy statement. Under the fiscal policy strategy statement, essentially the government will provide what is the strategic area or what kind of a policy they will have in the next 1 year. For example, the government might simply say, under this particular strategic statement, tax revenues is the focus area for them in the next 1 year. They might simply say implementation of GST is the focus area. They might simply say promotion of industries or agriculture sector is the focus area. So essentially, in the next 1 year, what will be their focus area? On what basis the policies, or for what sectors the policies will be mainly framed? That will be provided, or that information will be provided under fiscal policy strategy statement. And next one, at the end of the second quarter, the finance minister will have to make a statement on the trend of fiscal indicators and corrective measures taken for that. Right, the finance minister will have to give information such as what kind of fiscal deficit, right, or what kind of borrowings is being done by the government, how much borrowings is being done, are we going to meet the tax receipts of this particular target or not, etc. And the finance minister, along with the situation, what is the situation, they will have to give that information. Along with that, the finance minister also has to state if there are any issues under these particular parameters, what measures are being undertaken by the government to address that particular issue. And so these are certain very, very important points with respect to the FRBM Act as such. Now, government of India, in order to review the FRBM, set up one committee, NK Singh committee. Okay, I'll repeat it again. The FRBM was passed back in the year 2003, and we are in the year 2022, 23, etc. Now, don't you think this FRBM document is a very old document in that sense? So there are various changes that have happened in the economy. So we need to address these particular changes and change the FRBM document accordingly. So government of India set up FRBM review committee, or else known as NK Singh committee also. And what are the important recommendations of NK Singh committee? One, it has proposed a draft debt to management and fiscal responsibility bill. What do you mean by this? Under the NK Singh committee, it has recommended that rather than focusing only on fiscal deficit and revenue deficit, which we in fact do, under the FRBM focus was what? Reducing revenue deficit and completely eliminating it, and reducing the fiscal deficit, right, to 3% of GDP. So rather than focusing on fiscal deficit and revenue deficit only, we should also target the public debt and reduce the public debt. Is okay? Make public debt the priority now. Reduce the public debt. Now, just a couple of minutes ago, I discussed what is the basic difference between the fiscal deficit as well as the public debt. I hope you remember that. So this committee recommended that rather than only reducing the fiscal deficit and revenue deficit, we should also target, make public debt as a priority, reduce this particular public debt. And what is the recommendation here? The public debt should be reduced to 60% of GDP by 2023. Is okay? 60% of GDP by 2023. Now please be very careful. The committee has given recommendation for reducing fiscal deficit by 2023. It has given recommendation to reduce revenue deficit by 2023. They have given recommendation for that. But in addition to this, the committee has recommended that the fiscal deficit plus revenue deficit, apart from that, we should also focus and make this particular public debt as a priority and reduce the public debt to 60% of GDP. Out of this 60% of GDP, 40% of GDP essentially will be the target for the central government, and the remaining 20% will be target for the state governments. Is okay? What do you mean by this? Imagine the total amount of repayment that the central plus state have to do is, let's say, 60 crores. I take a very simple number. It simply means out of 60 crores, 40 crores should be the repayment amount to be done by the central government, and 20 crores should be the repayment amount, that is the loan repayment done by the state governments. Right? This particular 60% is the slab which has been recommended by this particular committee to reduce the debt to GDP ratio. Now, the situation in case of India, the debt to GDP ratio, that is overall the debt in India. And when I say overall debt, please remember this. Overall debt essentially refers to the debt of central government as well as state governments. Okay. Overall debt essentially refers to the debt of the central governments as well as the state governments. Okay. So the overall debt of the general debt in case of India today is more than 90% of GDP. Today it is more than 90% of GDP. In fact, when this particular committee recommendation was given, the overall debt central plus state somewhere was around 70% of GDP. But because of the pandemic, the borrowings are done by the central government as well as the state governments have ballooned, and as a result of this, today the overall debt of the general debt is more than 90% in case of GDP. And that is the precise reason these particular targets could be rewritten. Please be very, very careful. So one, how will get this? We must prioritize or target even the public debt and reduce the public debt to 60% of GDP. And how will get this? To achieve this particular ratio, there is a target number. Yearly targets have been proposed, and the governments will have to keep on achieving these particular targets, and by 2023 will be able to meet these particular targets. Now, please be very careful. Although in the slide I've written 40% limit for the center, the exact number that has been provided by the committee is 38.7% of GDP. Okay, 38.7% of GDP is the public debt target that has been given by the committee to the central government. Next important set of recommendations: it has recommended autonomous fiscal council. We do not have it as of now. It has recommended autonomous fiscal council. What do you mean by autonomous fiscal council? It will basically be set up by the government, which will consist of experts in the financial matters. Is okay? It will be consisting of experts in the financial matters as such. And this particular autonomous fiscal council will keep on giving recommendations to government of India, right? And these are some of the very important points related to the council. It will prepare multi-year fiscal forecast for the government, so that according to the forecast, the policy changes can be done by the government. It will also recommend the changes in the fiscal strategy for the government. How much should you borrow this year? How much can you borrow next year? How much of the borrowing should be in the form of market borrowings? How much should be in the form of treasury bills, etc., etc. Right? So fiscal strategy recommendations will be provided by this committee or the council. It will also promote improving the collection of the quality of fiscal data. Right? For example, what do you mean by this? Right? For example, earlier, generally monitoring of expenditure done by government of India was done manually. There was no centralized system. But today, the government of India set up a system called as public financial management system. Okay, public financial management system. And through public financial management system, all the expenditure that is incurred by the government under central sector scheme and centrally sponsored scheme, all of these particular disbursements will be done using this particular system itself. So what has the government of India done? Government of India, by setting up this particular system, has ensured that now we can easily find out, right, how much money is being spent by the government, to which state how much money is going, right, what is the quality of expenditure, etc. All of that information can be obtained. So in the same way, can we improve the quality of the fiscal data in Indian economy? It will also advise the government if there are any conditions which will allow the government to deviate from the target. What do you mean by this? Imagine there's a continuous recession that is happening in the economy. Is okay? There is a recession in the economy. There is a drought situation as a result of which agriculture sector has been destroyed, right, in let's say a couple of years. There has been certain issues which have basically plagued the industrial market in the economy. So if there are any such situations, government of India naturally will have to spend more money in that particular year to provide assistance, to provide support to these particular industries. And when they will spend so much of money, obviously they will not be able to meet the targets, right, such as revenue deficit, fiscal deficit, and even public debt targets. So are there any situations in the economy which will allow the government to deviate from the target? If yes, the committee will advise, or the council will advise the government on that. And finally, it will also advise the government to take corrective action if they are not following the recommendations given by this particular committee. Okay, next, what are the grounds? Right? What are the situations under which government of India will be allowed to deviate from these particular limits as such? Right? For example, have a look at this. If there is a war which is being fought by government of India, so obviously the focus will not be on controlling the debt, focus will be on winning the war. If there are any important reforms which have been implemented by the government, which have basically disrupted the economy, as a result of which government will have to spend more money to support the economy now. Structural reforms are implemented even in that particular context, and the government can deviate from these particular targets. Decline in the real output growth of at least 3% below the average of the previous 4 quarters. In a sense, what was the GDP growth rate? Real GDP growth rate in the last, right, 4 quarters, average of last 4 quarters. And if the current GDP growth rate has declined by more than 3% compared to the average, even in that particular case, right, the deviation will be allowed. But more importantly, the deviation will not be more than, or the deviation allowed will not be more than 0.5% of GDP. Okay, the committee has recommended that the 15th Finance Commission should be asked to recommend debt trajectory for individual states. That is, for individual states, how they will have to reduce their debt to GDP ratio. For the state governments, recommendation should be given by the 15th Finance Commission. So these are some of the very important recommendations given by NKC committee. Now let's try and understand the concept of public debt a bit more. Now have a look at this. Whenever you say public debt, I've told you this already. It essentially means how much is the borrowing which government of India has to repay back. Is okay? How much is the total borrowing which the government of India has to repay back? Now please understand, general debt means central plus state governments. Overall debt means central plus state governments. But whenever they use the term public debt, they generally are referring to the debt of the central government alone. Okay, they're referring to the debt of the central government alone. Now in this particular context, let's try and understand what is going on. First and foremost, please understand the overall liabilities of the government. Is okay? The overall liabilities, that is, what is the total amount that the government needs to pay back, for which government can be held responsible, will be the sum total of the public debt as well as, right, the sum total of extra budgetary resources as well as other liabilities. Now you start asking me, sir, what do you mean by extra budgetary resources? In the context of extra budgetary resources, what do you mean by this? These are basically the borrowings which are done by the government-owned entities or agencies. The government-owned entities and agencies will borrow, and these particular entities are generally borrowing to take care of the government expenditure itself. The government wants to spend money, but it doesn't have all the money that they want to spend. So rather than government of India directly borrowing in the market, it will ask this particular authority, such as National Highways Authority of India, or let's say Food Corporation of India, etc., to borrow from the market, and this particular borrowing essentially is paid by the government over a period of time. Such kind of resources are called as extra budgetary resources, and there's a technical term for these kind of borrowings, and that is called as off-budget borrowing. Is okay? There's a technical term for this, off-budget borrowing. Okay. Now what is this public debt? Public debt again can be divided into the internal debt and external debt. Now what do you mean by internal and external debt? Imagine government of India will issue the bonds in the domestic market and borrow from the domestic market. Is it okay? The government of India will issue bonds in the domestic market and borrow from the domestic market. So whenever government of India is borrowing from the domestic market, I will simply refer to this as internal debt. And same government of India, imagine they will borrow from World Bank. Is it okay? Right? They will borrow from World Bank. And when the government borrows from the World Bank, essentially what will happen? This particular borrowing which is done by government of India from World Bank essentially has to be paid by government of India. Right? Government of India has to pay it, but this particular borrowing the government has done in the external market. And because the government has borrowed from external market, I'll simply call this as external borrowing or external debt. Is it okay? So remember this, right? So internal debt plus external debt. Okay, internal debt plus external debt. That is A1 plus A2. A1 is internal debt and A2 is external debt. Right? So both of them put together will essentially give you the public debt of the government. And in addition to this, the extra budgetary resources, the public account, etc. Both are also the liabilities because government has to repay this particular amounts as such. And that is the reason the total liabilities of the government will be A plus B plus C. But public debt essentially is this particular amount which the government has borrowed either in the domestic market or external market on consolidated fund of India, on the guarantee of consolidated fund of India. Is it okay? Okay. So this is called as a public debt. Now what are the features of a public debt? India's public debt to GDP ratio has always been significantly lower than high global debt levels. When you compare, again, don't say the last 1 year because last 1 year is an unusual situation, not a normal situation. So generally what you're saying is India's debt to GDP ratio compared to let's say the global average as such, India's ratio has been generally lower. India's debt to GDP levels are lowest amongst the group of G20 OECD countries and also lowest amongst the BRICS communities. Overall debt and the public debt of India has been reducing post 2003 and has been stable since 2011. But please understand, in the last couple of years because of the pandemic, there has been a spike in the public debt as well as the overall debt. The government debt is characterized by low foreign exchange risk as the external debt is just 2.7% of GDP. Now what do you mean by like the low foreign exchange risk and the 2.7% of GDP? What is the meaning of it? Generally, whenever they discuss the public debt, I told you it can be divided into internal and external. And when you say right the low foreign exchange rate risk, please understand this. It simply means out of the total debt, public debt, mind you, the external debt is very low. I can understand this. The external debt is very low. And how much is it? From 1 year to another year, it will keep on changing. Right? It is around 5.9% of total central government liabilities, which essentially means out of the total debt of the government, very small amount is in the form of external debt. And what is the advantage here? Advantage is imagine you borrowed $1 in the foreign market. Okay? Imagine you borrowed $1 from the external market, and the exchange rate of $1 was let's say 50 rupees, which means you borrowed 50 rupees from the external market today. But what if after 1 year the exchange rate is $1 is equal to 60 rupees? Is it okay? What if after 1 year the exchange rate is equal to $1 is equal to 60 rupees? In that particular situation, what will happen? You will have to pay $1, but to get to $1, you will have to pay 60 rupees. Okay? Because we don't print dollars in India, mind you. We don't print dollars. So you need to purchase $1 from the market and pay it back. But to get that particular $1, now you have to pay 60 rupees to get it. Right? So when your borrowings in the external market are very, very low, when your borrowings in the external market are very, very low, right? This particular exchange rate risk, the amount that you will be facing, right? Or the risk that you will be facing because of exchange rate volatility will be very, very low. Okay? Next, composition of the debt as such. Majority of this particular debt, that is general overall debt, is in the form of central government. Makes sense because central government is responsible for overall economic performance. Okay? And most of the debt that government of India has is in the form of internal debt, and very small percentage is in the form of external debt. 70%. I've already discussed this. Total public debt is held by the center. This is because central government is bearing the responsibility of macroeconomic management. The government also has a portfolio of majority long-term tenure bonds. This tends to limit rollover risk and insulate the debt portfolio from interest rate volatility. So what is the meaning of it? So much of technical language has been used here. Let me give a very simple example. Imagine, let's start with a very layman example, then we'll come back to government. Imagine here's a person, X. He has taken 100 rupee loan today, and the rate of interest is let's say 3%. Okay, and the tenure for which he has taken the loan is let's say 3 months. I understand this? He has taken for 3 months. So after 3 months is over, he has to repay this particular 100 rupee, but he needs 100 rupee. I understand this? He wants 100 rupee. He has some use of this particular 100 rupee asset, but after 3 months he will repay this 100. But he wants 100 rupees, so he will borrow 100 rupees after 3 months again. But what if after 3 months the rate of interest is actually 4%? And what if after 3 months the rate of interest is actually 4%? So he needs 100. He will borrow 100. Under both the situations, or under both the transactions, he has borrowed 100. But in the first case, rather than borrowing at 3-month period or for 3-month duration, what if he had borrowed let's say for 12 months? And even then he had paid only 3% rate of interest. It would have worked in favor of him. Now because he has borrowed only for 3 months, he will borrow again after 3 months, but the rate of interest now has gone up to 4%. Don't you think he's going to pay more rate of interest now? That is exactly what I'm trying to say here. Imagine government of India. Now it is guaranteed that the government of India will borrow from the market. Now the question is whether the government borrows for a shorter duration or for a longer duration. Let's say for 2 years, 5 years, 10 years, or 20 years. And the advantage is if you borrow for 2 years and you will repay after 2 years and you again borrow, and if the rate of interest is very high, you're paying a higher rate of interest. So rather than that, borrow for let's say 10 years, borrow for let's say 30 years. So whenever the interest rate is changing, that is not going to affect your cost of borrowing. That is exactly the meaning of the statement. And the government of India, majority of the bonds that are issued in the market have a longer tenure. So interest rate will not have an impact on the government borrowings. Now, a couple of more important concepts here. Let's try and understand. One is gross budgetary support. Okay. First one is gross budgetary support. Second one is rolling over, and the third one is off budget financing. What do you mean by this? Let me start with gross budgetary support. It is the financial expenditures which are earmarked for the government to meet the planned expenditures. What do you mean by this? Understand the statement here. Now, what do you mean by gross budgetary support? Let's try and understand. Right, again, I'll repeat the definition here. The financial expenditure which is earmarked or reserved for the government to meet planned expenditures. Right? The definition, you would simply feel this is very technical. Right? Now, let me explain and understand it. Government of India, imagine this year, wants to spend 10,000 crore rupees on development of national highways. Is the total amount that the government wants should be how much? 10,000 crores. 10,000 crores should be used for the development of national highways. But please understand, out of 10,000 crores, 8,000 crore will be spent, let's say, by government of India from the, let's say, consolidated fund of India. And remaining, let's say, 2,000 crore rupees will be spent by the National Highways Authority of India. So have a look at this. The total amount that is supposed to be spent on national highways is how much? 10,000 crore. But is central government spending the full amount of 10,000 crore? No. Central government is not spending the full 10,000 crore. It is spending essentially 8,000 crore out of 10,000 crore rupees. It's okay. It is essentially spending 8,000 crore out of the 10,000 crore rupees. So when you say only 8,000 crore is spent, right, this is called as gross budgetary support. That is out of the total central plan. Central plan is to spend 10,000 crores. Out of the central plan, how much is the support? How much money is actually coming from the central government? It is called as gross budgetary support. So the financial expenditure which is kept aside, which is reserved by the government to meet the planned expenditures, right, that is called as the gross budgetary support. What do you mean by rolling over? Rolling over essentially means government, rather than spending money this year, will simply roll over these expenditures to next year. I will simply repeat it. Rolling over means postponing, right? Postponing the expenditure. Now some of you say, okay, government of India postpone the expenditure. Let me give a very simple example. Imagine here is government of India. I'll give both of them. That is rolling over as well as off budget financing or off budget borrowing. Here is government of India. They want to spend let's say 10,000 crore rupees on food subsidies. Rather than government of India spending all the 10,000 crore, government will simply allocate let's say 7,000 crore rupees here, and it will ask Food Corporation of India, which is the implementation authority, to bring 3,000 crore rupees. Borrow from the market, bring 3,000 crore rupees, and 7,000 plus 3,000 total expenditure will be 10,000 crore. So total expenditure that is supposed to be incurred is how much? 10,000 crore. But does government of India spend all the 10,000 crore? No, government of India spends only 7,000 crores here. There is nothing but the concept of gross budgetary support itself. And remaining 3,000 crores, which should also be spent by government of India. But please understand, government of India has asked the Food Corporation of India to borrow this, and government will pay this particular 3,000 crore to the lender, maybe let's say after 3 years, after 5 years. So what has the Government of India done? Rather than paying or rather than incurring expenditure of 3,000 crore this year, it is postponing the expenditure. Okay, so it is simply postponing this. Right? The money will be spent, but it will be borrowed, and the money will be returned back by the government in a later year. That is what is rolling over. And off budget financing or off budget borrowing, the government agencies or government-owned enterprises such as Food Corporation of India, National Highways Authority of India, when they will borrow from the market on behalf of the government, government is not borrowing. The agencies, the public sector undertakings are borrowing for meeting government expenditure purposes. Right? Such type of borrowing is called as off budget borrowing. And why this is called as off budget? Reason is very simple. Generally, whenever the government wants to spend money from the budget, it's okay. Whenever the government wants to spend money from the budget, it has to take the permission of the parliament. Right? But in case of off budget borrowing, government is not taking the permission of the parliament. These agencies are directly borrowing from the market. That is the reason this is called as off budget borrowing. So these are the various aspects related to the concept of budget. Now let's have a look at some of the questions here. Consider the following statements. The Fiscal Responsibility and Budget Management Review Committee report has recommended a debt to GDP ratio of 60% for general, that is combined government by 2023, comprising 40% for the central government and 20% for the state government. Statement is true. The central government has a domestic liabilities of 21% of GDP as compared to that of 40% of the GDP for the state governments. Okay, statement 2 is wrong. In fact, central government had around 47% and the state governments had somewhere around 23 to 24%. So statement 2 is wrong. As per the Constitution of India, it is mandatory for the state to take the central government's consent for raising any loan if the former owes any outstanding liability to the latter. Yes, this particular statement is correct. If the states have any liabilities, that is, the states have money to repay to the central government, in such cases, they will have to take the permission of the central government to borrow from the market. And this is important for a very simple reason. Generally, you see that in the budget, as a union budget, central government will announce how much is supposed to be the borrowings done by every state government. So third statement is true. Right option will be option C here. Next question. There has been a persistent deficit budget year after year. Which action or actions of the following can be taken by the government to reduce the deficit? Reducing revenue expenditure. Yes, if you can reduce the revenue expenditure, revenue deficit will come down and budget deficit will come down. Introduce new welfare schemes. Exactly opposite to the first point. The expenditures will increase, revenue expenditure will increase, deficit will increase. Rationalization of subsidies. Yes, when you go for rationalization of subsidies, essentially what will happen? For example, direct benefit transfer in LPG. Under subsidies, will read about it. Under the direct benefit transfer in LPG, government of India has identified the beneficiaries, and to these particular beneficiaries, government is actually transferring the benefits now. So as a result of this, multiple beneficiaries which was leading to leakages, duplication, etc., have been removed. The government of India's expenditure under subsidies actually being controlled. So rationalization, yes. Reducing import duty, no. When you reduce the import duty, the amount of the taxes that the government will collect will come down. The overall receipts will come down, and that will lead to increase the deficit. So 1 and 3 are correct. Right option is option C here. Okay, so this is the total discussion related to the concept of the policy of budgeting or the practice of budgeting in case of India. Thank you. We'll have a look at some of the very important recommendations and we'll analyze these recommendations of 15th Finance Commission. Now, with respect to UPSC exams, please have a very clear picture with respect to the idea of Finance Commission and most importantly, what are the important recommendations which have been provided very recently by the 15th Finance Commission. Now, before I start the discussion on the recommendations, let's try and look at some of the very basic points. First and foremost, Finance Commission is a constitutional body which is set up once every 5 years or whenever there is a requirement of it by the President of India under Article 280. That's the first very important point. Second, this particular Finance Commission is set up because there is a concept of a fiscal imbalance between central government and the state governments and amongst the state governments. Now, this particular idea of fiscal imbalance, please understand this. As per the powers given by the Constitution of India, some of the very important taxation powers which have a pan-India character, such as the corporate taxes, income taxes, etc. These kind of the taxes are imposed and collected by the central government. This creates a certain imbalance or fiscal imbalance between the central government on one side as well as the state on the other side for a simple reason. On one side, the central government is collecting these kind of important taxes all throughout India, but on the other hand, with respect to development, with respect to administration, majority of the expenditure in case of India is incurred by the state governments. So there is this kind of imbalance which has been created. This imbalance between the central government and the states is called as a vertical imbalance. And on the other hand, because of certain features or characteristics associated with the states, for example, availability of natural resources or the growth rate which is achieved by these particular state governments, there is also a horizontal imbalance which has been created. To address these kind of vertical imbalances as well as horizontal imbalances, we set up the Finance Commission, which will give recommendations. What are the types of recommendations? We have a look at it later. And whenever the Finance Commission is set up, basically you have a look at the concept of terms of reference. That is, under what parameters the recommendations are provided by the Finance Commission. Please understand that the first and the most important recommendation which will be given by the Finance Commission will be the distribution of the tax proceeds between the central government and the states and amongst the states. That is basically whatever taxes are imposed and collected by the central government, these are kept under the concept called as a divisible pool. From this particular divisible pool, the tax revenues are distributed amongst central government and the states. And once this particular distribution has been done, now you have to again define how these particular tax revenues which have been allocated to the states will be distributed. For example, let's take a hypothetical number here. If a 40% and 60%, this is how the distribution happens. That is, imagine the divisible pool is 100 crore rupees. Out of this, 40 crore rupees will go to the central government and 60 crores will go to the group of states. Now, how the allocation will be done amongst the states? This is called as basically the horizontal devolution. So first will be the vertical division between central government and states. That is one very important recommendation. And second one is horizontal division amongst the states, how the distribution is done. And one more very important point here. When I say all the taxes imposed and collected by the central government, please exclude the cesses as well as the surcharges. The cesses as well as surcharges are not a part of the divisible pool of taxes. Second, the grant in aid which is given by the central government, on what basis this particular grant in aid should be provided to the states. Now please understand this, because there is an imbalance between the central government and states and among the state governments, just providing a tax devolution like this will not be helping addressing all the issues which are faced by the state governments. Because these particular state governments might be finding it very difficult to meet all the required expenditures with these particular tax as well as non-tax revenues. In such situation, Finance Commission will also provide a certain grant in aid to these particular states. Under the Finance Commission, 5 different types of grant in aid are provided, or recommendations on these are provided, and we'll have a discussion related to all these particular 5 grant in aids later. Next, what kind of measures should be taken by the state governments in order to increase or augment the consolidated fund of the states? And why this particular augmentation is required? So that the distribution or the money that is allocated to the third tier will also be much higher. And any other matter which is referred to the Finance Commission will have to study and give a recommendation to the central government. Now, when I say recommendations, please make a note of this particular point. Whatever recommendations are provided by the Finance Commission to the central government, these are just advisory in nature. These are just advisory in nature. These are not binding on the central government. Whether to accept them or to reject them is exactly or is absolutely left to the central government. Now, this particular caveat, let's look at a question based on this discussion. Consider the following statements. Recommendations of the Finance Commission are binding on the central government. Statement is wrong. All the tax revenue collected by the central government forms part of the divisible pool. Again, this is also wrong. Cesses and surcharges, which are again the type of taxes which are imposed by the central government, are not part of the divisible pool of taxes. So based on this, the right option will be option D, both are false. Let's continue. With respect to 15th Finance Commission, let's focus our discussion on the 15th Finance Commission here. With respect to 15th Finance Commission, the first 3 terms of reference are same. That is basically to recommend a vertical devolution as well as a horizontal devolution. That is the first one. Second one is how to augment the consolidated fund of the states. That is also there. And the third one is the grant in aid, the principles governing the granting aid, on what basis the grant in aid should be provided to the states. These three, as usual, are present. But if you remember the fourth term of reference, any matter or any other matter which is referred to the Finance Commission, I said the Finance Commission will study and give recommendation to the central government. Now, under this, many other terms of references were provided to the 15th Finance Commission, and on these, majority of these, the Finance Commission has taken a stance and given recommendations on what basis they are given. We'll have a look at it later. But some of these particular terms of references were to study the impact of the foreign Finance Commission recommendation on the finances of the central government, review the debt level of the central government as well as the states, and to recommend a roadmap, study the impact of GST on the economy. Recommendations have been provided. Recommend performance-based incentives for states based on their efforts on areas such as to control population, promote ease of doing business, control the expenditure of population measures, so on and so forth. And another very important, the term of reference which was given was, should there be the concept of a revenue deficit grant? What is the meaning of all of them? We'll have a look at it as and when the time is appropriate. Now, let me start with the recommendations which have been provided by the 15th Finance Commission. Follow the discussion very carefully, henceforth. The first very important recommendation is with respect to the vertical devolution as well as horizontal devolution. That is basically, central government has collected these particular taxes and has transferred this into divisible pool, again exempting the surcharges and cesses. How these particular taxes will be devolved between central government and the states and then amongst the state governments. With respect to vertical devolution, please remember the 15th Finance Commission for the time period 21 to 26, for the time period 21 to 26 has recommended that the vertical devolution will remain at 41%. And when using will remain at 41%, please make a note of this. Generally, the Finance Commission is appointed for a tenure of 5 years. That is, whenever the Finance Commission is appointed, they will give recommendation for a period of 5 years. For example, 14th Finance Commission, the tenure was 2015 to 2020. So 15th Finance Commission, the tenure should have been 20 to 25. But later, what happened was Government of India, once they set up or once they appointed the 15th Finance Commission in 2017, they basically say because of certain issues, give us recommendation for only 1 year, that is for 2020 and 21, and later provide us recommendations for a tenure of 5 years. That is the reason I'm saying the recommendations are applicable from 21 to 26. That is basically 2021 to 2026. So understand this, in case of the 1 year recommendation or the report for 1 year which was provided by the 15th Finance Commission, they recommended a formula of 41%. Now some of the books or magazines will say 41% and some magazines will say 42%. Don't get confused here, there's a reason for this. In case of the earlier Finance Commission, that is the 14th Finance Commission, it had basically allocated this particular vertical devolution formula. And 15th Finance Commission says we'll stick with the same devolution formula in order to ensure there is a sustainability and there is a continuous stream of revenue between the center and the states. Now please understand why they're saying 42% is basically this. The Finance Commission in the document says we'll stick with 42% but we'll adjust to this particular 42%. Is it okay? I'll repeat the statement here. We'll stick with 42% but we'll adjust to this particular 42%. Why? One of the states has been converted into union territories now, and basically the finances of union territories are taken care of by the central government. So rather than just allocating 42% like this, we'll take out 1% and allocate this to Jammu and Kashmir and Ladakh, and the remaining 41% will simply allocate it to the states. Okay, so if they say 41%, that's also correct. If they say 42%, adjust it to 41%, that statement is also correct here. Okay, so with respect to vertical devolution formula, this is how the vertical devolution formula has been decided by the 15th Finance Commission. Now I'll just give you certain data here. You remember this particular data. Not everything, but especially the last statement is very, very important. Now understand this. For the tenure from 21 to 2026, the 15th Finance Commission basically estimates that the total tax collection of the central government will be 135 lakh crore rupees. Is it okay? From 21 to 26, the total tax collection of the central government will be 135 lakh crore rupees. Out of this, I'll basically exempt cesses as well as surcharges. I will arrive at the divisible pool or net proceeds of taxes, which comes at around 103 lakh crore rupees. Out of this, if I basically take 41%, that particular 41% share of the states will come to 42.2 lakh crore rupees. And apart from this, the grants have been also provided by the Finance Commission to the states, which we are yet to discuss. That value is at 10.33 lakh crore rupees. Total transfer to the states because of the recommendations of the 15th Finance Commission for this particular duration will come out to be 52 lakh crore rupees. Should you remember all of this particular data? For UPSC, it is not required. What you need to remember is this particular data. That is, out of the total divisible pool, that is 103 lakh crore rupees, 52 lakh crore rupees which will be transferred from the central government to the states for this particular tenure between 2021 to 2026 comes at around 50.9%. This can be used in the form of a statement in UPSC prelims. Please be very, very careful. Now this is with respect to vertical devolution formula. Now based on this discussion so far, I've given an MCQ here. Consider the following statements. 15th has recommended vertical devolution formula 41%, correct? The total transfer to the states based on the recommendations of the 15th Finance Commission is over 50% of the divisible pool. Just now we have seen this, it is 50.9%. Even this particular statement is correct. Based on this particular analysis, option C, both are true, is the right option here. Now once we have taken care of the vertical devolution formula, what about the horizontal devolution formula? That is, yes, just now we have come to an agreement that from 103 lakh crore rupees, the states will receive how much? 42 lakh crore rupees from the divisible pool. Now, how this particular 42 lakh crore rupees will be distributed amongst the states? That forms the crux of the horizontal devolution formula. Now, please understand this. For the 1 year, that is for 2020 and 21, this particular formula was provided by the 15th Finance Commission. Now, the same parameters, same formula, same weightage, again has been given in the form of a horizontal devolution for the tenure of 2021 to 26. But having said so, understand the next very important point here. Does it simply mean that whatever devolution, whatever money went to the states, same money will go to the states even for this particular devolution? Absolutely no. I'll give the statement here. Same formula was given by the 15th Finance Commission for 1 year, 2020-21. And again, we are using the same formula for the tenure 2021 to 2026. Does it mean that states will receive the same amount of tax devolution as they received in 2021? Absolutely no. Please be very, very careful. Why? The reason is when we are calculating some of the parameters such as, let's say, tax and the fiscal efforts, income distance, the parameters or the base years which were taken for the calculations will change. For example, have a look at this. What do you mean by income distance here? Okay, and the weightage of 45% has been provided. What do you mean by income distance? There are states in India. We'll basically arrange these particular states from the one state which has the highest income to the state which has the lowest income. Is okay. We'll arrange the states from the states which has the highest income to the state which has the lowest income. Now, on what parameters it is arranged? Follow this very carefully. It is arranged based on per capita gross state domestic product. Basically, states income in the concept of a state will be what? Gross state domestic product. But how do I calculate the state of this particular state in India? We will basically calculate per person in these particular states. Per capita GSTP. Remember this particular term. Per capita GSTP will be used to arrange the states from highest to the lowest income parameter. But more importantly, for this per capita GSTP of which year? We are going to take an average of 3 years here. That is basically from 2016 to 2019. This will be the income distance parameter calculated for 21 to 26. Whereas for the previous year, 2020-21, the income distance calculation was the same, but the base year was changed, or the years which were taken for calculation were different. They considered 2015 to 2018. So have a look at this. In case of income distance calculation, tax and fiscal efforts calculation, the years which were chosen to calculate these particular parameters, the years have changed. And when the years have changed, obviously the performance of the states will change. And when the performance of the states will change, the allocation for devolution will also change. Now, what are the parameters considered here? Population. But when I say population, please make a note of this. This is a 2011 population. Please remember this statement. 15th Finance Commission is the first Finance Commission which has chosen the population of 2011. Earlier Finance Commission had basically chosen the different population parameters. For example, have a look at this. 14th Finance Commission had chosen the population of 1971 as well as the population of 2011, and the total weightage which was given was 27.5%. Whereas in case of 15th Finance Commission, this has been reduced to 15%. We'll come back to this particular table as of now. Second, area will have a weightage of 15%. Forest and ecology basically refers to how much is the dense forest area. How much is the dense forest area in this particular state divided by the total dense forest all throughout India. Is it okay? In a particular state, how much is the area which has a dense forest divided by total area in India which has a dense forest. Based on this, we have given the weightage of 10%. Income distance, we already taken care of it. Tax and fiscal efforts, which basically means what is the efficiency of tax collection in these particular states. Is okay, repeat it. How effective are these particular states, or how efficient are these particular states in terms of collection of their particular taxes? And any state which has the highest efficiency will be given more allocation under this particular formula. Tax and fiscal efforts have been given a weightage of 2.5%. And please understand this, in the earlier finance commission, this particular tax and fiscal efforts was not given any weightage, whereas in the 11th and 12th finance commission, definitely yes, the weightage was given to tax and fiscal efforts. With respect to demographic performance, right, it has been provided with the weightage of 12.5%. Please make a note of this for a simple reason. I'll connect the first as well as the last parameter. Now, when the terms of reference were announced for the 15th finance commission back in 2017, and the central government or the president of India asked the 15th finance commission to give weightage for the population of 2011, some of the southern states opposed this particular term of reference. Their argument was very simple. In terms of contribution to corporate taxes, income taxes, these production states such as Maharashtra, Karnataka, Tamil Nadu, etc., are contributing very, very high. But in terms of population, right, some of these northern states have got very, very high amount of population, or very high population numbers. And if you take the weightage of 2011, or if you take the population of 2011, obviously the northern states which have not successfully implemented or which have been lacking in terms of population control measures and have higher population will be getting more allocation. So the states were opposed to this particular terms of reference and even approached the 15th finance commission and raised their concern. To address the concern of the southern states, the 15th finance commission basically said, since the central government has directed us to consider population of 2011, we do not have any other option. But what we'll do is, in order to incentivize your efforts also, because southern states have been much more successful in controlling the population, implementing the population control measures, we will try to incentivize you also. We'll try to provide something for you people also. In this particular regard, the demographic performance, which has been given a weightage of 12.5%, has been introduced. Remember this particular parameter also. Now, on what basis demographic performance will be considered here? They are going to basically consider the fertility, total fertility rate. That is basically how many children are given birth by a woman in the life. Okay, so basically higher total fertility rate, the allocation will be lesser to that particular state, and that particular state just control the population. Obviously, total fertility rate or TFR will be lesser in that state. Allocation as per this particular parameter will be higher there. So these are certain very important parameters which have been used by the 15th finance commission to give the horizontal devolution. Now, in terms of comparison, how the parameters have been used, or which new parameters have been introduced, are there any similarities between this finance commission horizontal devolution formula with the previous ones? Let's have a look at it. Now, have a look at this particular first parameter, population, 1971, 2011. The previous finance commission, 14th FC, gave around 27.5% weightage to population. Whereas in the 15th finance commission, the population weightage has been reduced to 15%. And what's the importance of this? Finance commission says, see, although we have taken population of 2011 only, we have given lower weightage to overall population. And since the southern states have been successful in controlling the population, by reducing the weightage given to population in the horizontal devolution formula, we are trying to address the concerns of the southern states. First, very important point. Area, over a period of time, the weightage which has been given to this particular area of the states has increased. Forest cover was introduced in the 14th finance commission with a weightage of 7.5%, has been increased to 10%, but please understand, in the 14th finance commission it was simply forest cover. But in case of the 15th finance commission, it is the forest and ecology, which basically dense forest, which covers dense forest. Okay, income distance. Earlier the income distance weightage was 50%, now it has been reduced to 45%. What is the importance of this? Understand this. There is this idea of providing equity to the states. What is the idea of equity? Ensuring that whatever funds will go to the states using these particular funds, the states are able to provide services on a comparable level. Is it okay? Services on similar level are able to be provided by the states. That is the basic idea of equity. Whenever you discuss the idea of equity, generally they give an example of Australian equity formula. But understand this, even in the case of 15th finance commission, they have said that in order to promote equity among the state governments, we are going to provide a 45% weightage to income distance. But basically understand this, any state which has a lower per capita GSTP, I'll get the statement, any state which has a lower per capita GSTP, that state will be allocated with higher devolution based on the idea of income distance. Because the basic idea is what? The government should help more the states which are more poor. Is it okay? The government should provide more devolution to the states which are more poor. And in this particular regard, the idea of poor is calculated based on the idea of income distance. Next one, fiscal capacity distance. Earlier in the 13th FC it was provided, but now it has been removed. The previous FC has not provided any weightage. Same thing has been done by 15th FC also. Tax effort was there in the 12th finance commission, was there in the 11th finance commission. The parameter was not given any weightage, but has been reintroduced in the 15th finance commission, and weightage is 2.5%. Fiscal discipline, no weightage has been provided. Demographic performance has been introduced for the first time, and the weightage is 12.5%. Total weightage has to be obviously 100% here. Now, based on this discussion on horizontal devolution formula, I have given a question. Consider the following statements regarding 15th FC. The tax efforts parameter has been used for the first time by the finance commission for horizontal devolution. Underline the term for the first time. As already discussed, or if you have observed the table, tax effort was earlier recommended in 11th as well as 12th FC. So this statement is wrong. It has been used, or it has used the population of 2011 and 2001 for recommending horizontal devolution. 15th FC, no, it has only used the population of 2011. Previous 14th FC had used both 2011 as well as 2001 population. So based on this, the right option will be option D, both are false. Another question here, which of the following parameters have been used by the 15th FC to recommend horizontal devolution formula? Population of 1971, 15th FC, wrong. Population of 2011, yes. Income distance, yes. Forest and ecology, correct. Tax effort, yes. Fiscal capacity distance, wrong. Okay, so based on this, 2, 3, 4, 5, option B is the right option here. Okay, now please understand with respect to tax effort, the right term would be tax and fiscal efforts, but again, I'm just saying, just to clarify that. Now, what have we done so far? We have taken care of a vertical devolution formula. We have taken care of a horizontal devolution formula. The first term of reference is done and dusted. Let's go to the second term of reference. What is the second term of reference? Principles which are governing the grant in aid. The principles which govern grant in aid. Recommend those particular principles. In simple terms, there are different grant in aid which is provided by the central government to the states based on the recommendation of 15th finance commission or the earlier finance commission also. But on what principles, on what grounds, and how these particular grants in aid should be provided by the center to the state. Now, please understand, generally in case of a finance commission, even historically, 5 types of grants in aid have been provided. These are revenue deficit grant, sector specific grant, state specific grant, grants to local bodies, and grants for disaster management. We'll have a look at all of these, but within this, most of the discussion has been concentrated on the idea of a sector-specific grant, because the Finance Commission has provided sector-specific grants for 8 sectors. And in case of these particular 8 sectors, some of the sectors, the incentives have been linked to the performance of the states. And in case of some of these particular incentives, these have been given or have been provided to the states on some of the parameters. Okay. Now let's have a discussion with respect to revenue deficit grant. What's the basic idea for revenue deficit? Understand this. At the central level and at the state level, generally what you see is the expenditure. Again, when I'm talking about expenditure here, I'm specifically looking at revenue expenditure. The revenue expenditure is higher than the revenue receipts. Is okay? The revenue expenditure is higher than revenue receipts. And whenever this kind of a feature exists in the budget parallels, we basically say this is the revenue deficit. With respect to revenue deficit, the 15th Finance Commission was asked by the central government that should we provide any kind of a revenue deficit grant to the states? That is basically, in order to address the revenue deficit of the state governments, the central government will provide certain grant in aid. So the question that was asked to the 15th Finance Commission was basically look into it and tell us whether should we wipe out any of these particular grants which we provide to the states. Now, with respect to this, 15th Finance Commission has basically awarded 2.9 lakh crore rupees for 17 states. Follow this very carefully. The revenue deficit grant which has been recommended by the 15th Finance Commission is not applicable to all the states because the performance of individual states will differ. The expenditure incurred by individual states will differ. Now, how these expenditures have been incurred? Are they providing administrative services? Are they providing a population measure? All of these parameters will be considered. So the 15th Finance Commission basically has come out and stated that for the awarding period 21 to 26, provide a 2.9 lakh crore rupees. Some of the magazines, some of the books will convert this to a rounded off to 3 lakh crore rupees because it's almost 3 lakh crore rupees. Anyways, for the awarding period, the amount of revenue deficit grant which has been recommended by the 15th Finance Commission is 2.9 lakh crore rupees. And please remember, this has been provided for 17 states and not all the states. And in addition to this, the 15th Finance Commission also has asked the states to basically take off or address this issue of revenue deficit, reduce this to zero over a period of time, nullify this revenue deficit. This is with respect to one grant in a revenue deficit. Next, very important, sector-specific grant. As earlier mentioned, the sector-specific grants have been allocated for 8 sectors. Very, very important, for 8 sectors. And how much is the total allocation? 1.3 lakh crore rupees over a period of time. In some of the sectors, it is for 3 years, 4 years, some of the sectors it is 5 years. Now, what are these particular 8 sectors and on what basis the allocation has been recommended by the 15th sector? Let's have a look at it. First, most important, health sector. With the onset of the pandemic, basically what are the issues in the health sector? These particular issues have been focused on now. Or because of these particular lack of infrastructure, lack of the facilities in the healthcare sector, the impact of COVID was very, very heavy or has taken a very heavy toll on the Indian system as such. To address some of these particular loopholes in the healthcare or the drawbacks in the healthcare sector, the Finance Commission has recommended a total grant of 1.06 lakh crore rupees under the healthcare sector. Is okay? Total of 1.06 lakh crore rupees. But in this particular slide, I have only provided a grant of 31,755 crores. This information has been provided here. Right? Please understand this. The total allocation is 1.06 lakh crore rupees, but this allocation is in the form of granted to local bodies, etc. The allocation has been divided like this. That is the reason here with respect to the discussion on sector-specific grant, the allocation is 31,755 crore. But again, you come across the allocation even under the concept of the grants to local bodies. Okay, so we'll have a look at the allocation later. Now, second very important sector, education. And again, under the education, again there are two different sectors of recommendation. One for school education and the second one for higher education. Now, please understand this. In case of India, we spend anywhere around 3% of GDP on education sector. Is okay? We spend anywhere around 3% of GDP on the education sector, and more than 80%, in fact, around 84% of this particular expenditure on the education comes from the state governments itself. And when you compare how much we are spending on education with our peer economies or peer countries or competitors in the global market, we are spending far lesser compared to their expenditure. As a result of this, there are various issues which are plaguing the education sector. For example, in case of school education, there is a problem with respect to pupil teacher ratio, the retention ratio, or the infrastructure that is required for ensuring that learning outcomes are efficient, or the vacancies with respect to school teachers, so on and so forth. In order to address some of these issues, Government of India has already announced a new education policy. Right? And with this particular policy, they are trying to address some of these issues which are plaguing in the education sector. Now, in order to address some of these issues, the 15th Finance Commission with respect to school education has recommended 4,800 crore rupees. And this will be provided in installments of 1,200 crore rupees every year for the duration of 4 years. Is okay? 1,200 crore rupees annually like this for a duration of 4 years between 23 to 26. But understand this, these particular 1,200 crore rupees will just not be given like this. There are 10 parameters based on which the performance of individual states will be considered, and based on the performance of the states on these particular 10 parameters, the allocation will be provided or the incentives will be provided to the states there. Next, with respect to higher education. In case of higher education, again there are certain issues. For example, in accessibility, some of the states or in some of the regions, the students are able to get higher access to higher education, and in some of the states it's very, very difficult. And especially because of the pandemic, the problem with respect to getting access to online education has been much higher. So in order to address all of these issues in case of higher education, some grants have been provided in the 15th FC. The grant for the higher education have been provided under two categories. One, promotion of online education. The amount which has been provided is 5,078 crore rupees. Again, with respect to UPSC exams, you need not mug up all of these allocations, but you have to remember these kind of allocations. In case of higher education, two categories. The allocation has been done for promotion of online education, 5,078 crore rupees. For development of professional courses in regional languages, 6,143 crore rupees has been allocated. So this is another sector where allocation has been recommended by the 15th Finance Commission. Now, agriculture sector. The Finance Commission has basically discussed what are the issues in the agriculture sector. Let me put it in a nutshell to you. The Commission basically says there are issues which are plaguing agriculture sector, such as the idea of efficient usage of water. In case of water, the Commission says that in many of the states, the electricity that is supplied to pull up the water or take the groundwater to pump for irrigation purposes, electricity is either subsidized or it is provided free of cost. And in many of the states, this is a very, very sensitive issue, politically, to be more precise. But understand this, the issue with respect to this is because we are providing either subsidy or free of cost for this particular electricity, one, the water level is actually depleting. In many of these particular states, we have already seen that the water level or underground level of water is actually falling down. And the Commission says that it is an irony that in case of India, on one side, 90% of the water is used by agriculture sector. 90% of the water is used by agriculture sector. Even after that, more than 50% of the area under cultivation is actually rainfed. That is, on one side, 90% of the water has been used by the agriculture sector, but more than 50% of the land on which we are cultivating is dependent on the monsoon. So don't you think there is no rationality between how much we are using and how much we are actually dependent on the irrigation system here? The reason for this, the survey as well as many of the experts already have stated that most of the farmers in case of India are using the flood irrigation methodology. We are using flood irrigation methodology. That is basically flooding the whole field using this particular water which we are pumping up like this. This will lead to certain inefficiencies. Okay. In addition to this, with respect to land, understand this. In many of the states, we are basically following the concept of a land lease. That is, there is a tenant farmer. Imagine you are the owner of the land and I am a tenant farmer. Both of us will enter into an agreement under which your land will be used by me, cultivated, and will enter into an agreement. What will be the amount I will pay to you, or if I basically share the amount of a crop, I will refer to the share crop here. But please understand this. Though in many of the states, more than 40% of the cultivated land is under the concept of a land leasing itself. Most of these particular agreements are informal in nature. Most of these agreements are informal in nature. That is, verbal agreement has been entered into. And whenever this kind of informal agreement is entered, there is insecurity with respect to tenancy farming. In addition to this, the Commission also says that these particular tenant farmers are already facing certain issues with respect to the amount of support they are actually supposed to get. For example, these kind of croppers are not covered under PM Kisan Yojana. These kind of croppers who do not own the land find it very difficult to get access to institutional credit. So basically, all the odds are stacked against them. Right? So we need to address the issue with respect to land leasing also. In this particular regard, NITI Aayog had earlier set up a committee, and this committee has recommended the concept of land leasing. And over a period of time, NITI Aayog has tried to promote the idea of land leasing to be adopted by the state governments. Some of the state governments, such as Uttar Pradesh, Rajasthan, Madhya Pradesh, some of these particular states have at least adopted one or the other ways, or at least part of the idea of land leasing. In many of the states, it is yet to be adopted. So there is a need to promote the idea of land leasing also. With respect to the exports, understand this. India on one side is the second largest producer, right? Agriculture sector produces the second largest total output in the global market. But with respect to the exports, Indian exports in the global market account for only 2.5% of the global exports as such. And on the other hand, because of the input subsidies which are provided by the government and the output prices which are guaranteed by the government, such as MSP, in case of India, what has happened is over a period of time, the total production or the growth rate in the total production has been much higher than the growth rate in the demand. I'll repeat the statement here. The total growth rate in the production has been much higher than the total growth rate in the demand. As a result of this, we are seeing India is a surplus country with respect to agriculture sector now. So we need to find out newer avenues to which we can export these agricultural commodities. And as per the data we have seen earlier, India lacks with respect to agriculture exports. Now finally, with respect to the vegetables, or to be more precise, the oilseeds and pulses, the story in case of India's agriculture is completely different. With respect to oilseeds, 60% of the domestic demand with respect to oil, we basically import it. It's okay to meet the demand. In case of India, we import the vegetable oils from the rest of the world. And whenever we are heavily dependent, any change in the policy, any change in the relation between these countries will have a definite impact on the import of the oils. And with respect to pulses, the domestic production basically has stagnated in the last 1 decade with respect to pulses. India being the largest producer of the pulses is also the largest importer of the pulses, largest consumer of the pulses. So on one side we are producing surplus commodities in the form of the cereals and we are exporting them, and on the other hand we are heavily dependent on the import of pulses, import of oilseeds. So under this, basically there is this big argument that India should become self-reliant or Atmanirbhar. So based on these 4 parameters that we have discussed, in case of agriculture sector, the Finance Commission has provided a total incentive of 45,000 crore rupees, but these will be performance-based incentives. That is, on these 4 parameters, how the performance will be done in each of the states, weightage has been provided. For example, with respect to land and lease reforms, the governments in these states will have to create a legal provisions for the liberalization and recognition of the agricultural land use. Sustainable and efficient usage of water. In this particular regard, the Commission basically says that the state government must keep on checking the stock of groundwater and also follow the water table. Basically, have a check with respect to the usage of water. For this, again, the weightage of 25% has been provided. Export promotion, in case of a surplus production, we will have to increase the export in the agriculture sector. Weightage of 25% has been provided. In case of Atmanirbhar Bharat idea, in case of the oilseeds, pulses, wood and wood products, or wood-based products, these are the 3 groups covered here. Oilseeds, pulses, wood and wood-based products. The idea is we need to double the growth of these particular commodities. Right, based on what was the total output between 2011 to 2017-18. Again, the weightage of 25% has been provided. Having said to understand this, agriculture sector is a very sensitive matter. Here is the issue. Yes, 45,000 crore is a very huge amount in the agriculture sector, but please understand, agriculture sector is a very sensitive matter. Case in point is the recent farmer protest with respect to the bills which have been, all the acts which have been introduced by the central government in the agriculture sector itself. This has been mentioned even in the Finance Commission that the particular reforms will basically add to the total investment, will add to employment generation, will add to the revenue earning capacity of the farmers. But please understand, will any state or any of these particular states will they bite the bullet with respect to, let's say, ensuring the idea of a sustainable, efficient usage of water in the agriculture sector? For example, how do we address this particular issue of inefficient usage of water in case of India's agriculture? The Finance Commission basically says that whatever free electricity or subsidized electricity you are providing right now for pumping the water, please remove this. And instead of this, introduce the concept of a direct benefit transfer to the farmers. Now, whether the state government will do it, even if the state government does it, whether the stakeholders such as farmers will accept this, we'll have to wait and see. Okay, so this is with respect to the sector, that's agriculture. Let's go to the next one. Maintenance of Pradhan Mantri Gram Sadak Yojana roads. Now, first and foremost, this particular idea for PMGSY was implemented post 2000 in case of India. The basic idea for PMGSY is to provide all-weather roads to identified locations. And these particular roads are very, very important in order to connect these particular regions. And these are going to benefit in terms of increasing economic activity and adding to the income capacity of these particular regions. And whenever these kind of roads are constructed, which as per the Finance Commission is more than 6 lakh kilometers, they need maintenance. From time to time, they need to be maintained. And maintenance basically here means funds have to be allocated. So the Finance Commission has allocated 27,539 crore rupees for the period of 2021-26 to maintain the roads which have been constructed under this particular Yojana. Next, with respect to judiciary, before looking at the grants here, why the allocation has been done in the first place? Please understand this. In the judiciary, crores of cases have been pending at the district as well as the sub-district level itself. As per the Finance Commission, more than 3 crore cases are pending. Obviously, this is burdening the judicial system. Not to forget the delay in the justice delivery to the people. On the other hand, not just related to the idea of civil cases here, what about the economic cases? What about the economic cases where certain economic assets are getting stuck up? With the delay in the justice delivery, what happens is the time period which is taken for resolving these economic cases will be extended. For example, imagine a stretch of highway has to be constructed. Somebody will file a public interest litigation. The case will be taken up. The delay will happen. As a result of this, it will happen that the construction cost might increase. The cost of the imports or cost of raw materials might increase, which essentially means the overall cost of developing this infrastructure might increase. And on the other hand, what about the borrowing cost? This particular asset might ultimately become a non-performing asset. This might basically hinder private sector investment in the infrastructure. So the delay in the judiciary system or the burden of the judiciary system is not only having an impact in terms of delaying the justice delivery, it also has an impact on overall economic growth potential of Indian economy. So in order to address this, grants of 10,425 crore rupees has been done by the Finance Commission for fast-track courts in order to ensure there is speedy justice delivery. This is with respect to judiciary. Next, with respect to statistics. Now understand this. The Finance Commission says that the states must be developing a better methodology to collect stats. Now, why this is important? Based on the right amount of a stat in simple term data. Is it okay? The right amount of data which has been collected by the states, the policy can be formulated. If the data collection itself is lacking or is not sufficient, don't think it will have a direct impact on what kind of policy is formulated. In order to increase the efficiency of statistics at the state level, the Finance Commission has provided 2 types of grants. Basically, the grants will have 2 components. So that is a fixed component of a grant as well as a variable component in the grant also has been provided. Every district basically will be allocated with 1 crore rupees fixed grant, and based on their performance in these 2 parameters, that is level of statistical capacity and development, utilization capacity, there is a variable grant component also involved here. Now, total amount of grant with respect to statistics provided is 1,175 crores for a period of 2022-23, that is financial year 23 to financial year 26. This is with respect to statistics. And finally, the 8th sector, that is aspirational districts and blocks. With respect to aspirational districts, please understand, the idea of aspirational districts has been introduced by NITI Aayog. And NITI Aayog basically wants to ensure that these particular districts will have a socio-economic development. These particular districts will experience socio-economic development. And under this particular aspirational district program, so far we have identified 112 districts. And in these particular districts, the focus will be on main 5 themes. What are these particular 5 themes? Health and nutrition, education, agriculture and water resources, financial inclusion and skill development, and basic infrastructure. These will be the 5 areas where the development or the focus will be laid. And with respect to these aspirational districts, the Finance Commission has basically allocated 500 crore rupees over the 5-year award period, that is 2021-26, for incentivizing the development or socio-economic development in these particular aspirational districts. So these are the sector-specific grants which have been provided. That is basically 8 sectors have been provided. Some of these particular grants, which you must have observed, are performance related, and some of them are basically allocated to the states or districts here. Based on this question here, consider the following statements regarding 15th Finance Commission. All the sector-specific grants are given based on the performance of the states in these particular sectors. Statement is wrong. In case of education, majority of the expenditure is incurred by the central government. This is also wrong. 84% of the expenditure in education is incurred by the state government, and these particular statements are from the Finance Commission report itself. So based on this, right option is option D. Both are false. Next, you have taken care of vertical division, horizontal division. The granting within this particular granting revenue deficit grant is over. Sector-specific grant is over. Next one, state-specific grants. In order to address again the horizontal imbalance amongst these particular states, the Finance Commission provided state-specific grants. The total amount of state-specific grants which has been allocated is, I'll just round it off now, 49,600 crore rupees. To be more precise, it is 49,599 crore rupees. But please understand how these particular state-specific grants will be provided. These particular grants will be provided in these particular areas: social needs, administrative governance and infrastructure, water and sanitation, preservation of cultural and historical monuments, high-cost physical infrastructure, as well as tourism. But please understand this. Apart from this, the Finance Commission also says that the Finance Commission has already dictated certain terms or conditions based on which these particular state-specific grants should be allocated. Okay. Finance Commission has stated on what parameters the allocation has to be done by the central government to the state. In addition to these particular conditions, central government should not impose any kind of condition. Is okay? The conditions which have already been imposed by the Finance Commission only should be the conditions. Central government should not impose any conditions further. That's the first very important point. Second very important point: how these particular grants are being used. Right? How these particular grants are being used, right, for these particular areas, or development in these particular areas. There should be a high-level committee which is headed by Chief Secretary of the state, and this particular committee should keep on reviewing how the grants have been utilized for these particular areas. And third, very important point related to this: annually there should be a committee which is headed by the Chief Minister of the state. Annually there should be a committee which is headed by the Chief Minister of the state, and the role of this particular committee is to basically ensure that the projects which are being implemented under these or using these particular specific grants, the utilization of the grants is being done properly. There has to be a review mechanism which has to be done even by the committee headed by the Chief Minister, but this is annually. Then these are some of the points related to the state-specific grants recommended by the 15th Finance Commission. Next, grants to local bodies. Okay, this is basically the last type of last but one type of the grant under the concept of granting aid. Again, just factual information here. Total grants allocated will be 4.3 lakh crore rupees to the local bodies. And when I say local bodies, we are considering all the tiers in case of the local bodies as such. Now understand this. Portion of this particular 4.3 lakh crore rupees is connected to the performance of the individual states. Now, out of this particular 4.3 lakh, 2.4 lakh crore rupees is for rural local bodies, 1.2 lakh crore rupees will be for urban local bodies, and remaining 70,000 plus or 70,000 crore rupees will be the health grants to the local governments. If you remember the earlier discussion, when I started sector-specific grants, there was certain allocation done for the healthcare, and I said the total healthcare sector will have an allocation of over 1 lakh crore rupees. Okay, 1.06 lakh crore rupees. But there I basically mentioned only around 33,000 crore rupees. Remaining will be from here. Okay, so 70,000 crore rupees for health grants will be provided in the form of grants to local bodies. But when these grants will be provided, have a look at this: conversion of rural sub-centers and primary healthcare centers (PHCs) to HWCs, that is health and wellness centers. Second, support for diagnostic infrastructure for primary healthcare activities, support for urban health and wellness centers, sub-centers, primary healthcare centers, and public health units at the block level. Okay, so basically these 70,000 crore rupees will be used for these kind of activities. This is grants to local bodies. And finally, the type of grants for disaster management. Now, please understand this: in case of disaster management, the 15th Finance Commission has provided two important recommendations. First point: total of 1.6 lakh crore rupees has been recommended for disaster management fund. But please understand this: out of this particular 1.6 lakh crore rupees, 1.2 lakh crore rupees will come from the central government, and remaining will come from respective states. That is, a basic contribution to this particular fund, that is a disaster management fund, will be in the form of 75:25. 75 will be central government contribution, 25% will be state's contribution. But in case of a northeastern states, remember this also: in case of a northeastern states, this will be changed to 90:10. 90 will be the central government contribution, and 10 will be the state's contribution in case of a northeastern states. But these particular funds will be distributed to the states based on the past expenditures done by the state governments, the area, population, and the hazard and vulnerability index. Okay, so this will be the allocation of the funds in case of a disaster management fund. In addition to this, understand this: there is another recommendation: mitigation fund. Mitigation infrastructure or mitigation tools will have to be developed at the state level as well as the district level. In order to develop this particular mitigation measures, the Commission has recommended a new fund to be set up at the national level as well as at the state level. That is, at the national level, this will be referred as a National Disaster Mitigation Fund. At the state level, it will be referred as a State Disaster Mitigation Fund, NDMF and SDMF. Remember this particular recommendation, very, very important. Now, these are the different granting aid which have been recommended by 15th Finance Commission. Now, we have taken care of vertical devolution, horizontal devolution, we have taken care of the granting aid. Next, certain very important other recommendations which have been provided by the 15th FC. First one, with respect to fiscal roadmap. Now, understand this: the Finance Commission says that in the present situation of, let's say, the volatility in the market, it is very difficult for the Finance Commission to recommend a debt roadmap. For the central as well as the state. That is basically the idea is, in the earlier Finance Commission for 20 to 21, the Finance Commission has basically recommended how the debt of the central government as well as the state should be reduced over a period of time like this. Right? For example, I'll take one point here. The Finance Commission, which had provided a report for 1 year, 2021, had recommended that the overall debt for the central government as well as the state government should be brought down to 60% of GDP. And out of this 60% of GDP, 40% of the debt should be allocated to state or center, and the remaining 20% should be the total debt of the state governments. But this particular recommendation, to be more precise, has not been provided in the present report for 2026. The simple reason is the Commission says because of the COVID, these kind of volatilities have been created in the market. There is uncertainty in the market. At this particular point of time, very difficult for us to give a debt roadmap to the central government as well as the state government. Having said so, it also says that each of them, that the central government has a fiscal responsibility budget management act, and states also have a FRBM acts. Whatever targets have been kept under these particular FRBM acts, the center as well as the states should stick to these particular targets. Then, second, in the recent times, there has been a lot of discussion with respect to extra budgetary borrowings. Basically, extra budgetary borrowings is whenever the central government or the matter state government wants to borrow or wants to take money from the consolidated fund, it has to take the permission of the parliament. But when they borrow going outside the process of the budget, that is basically without taking the approval, this kind of borrowing is referred as extra budgetary borrowing. And this leads to certain doubts with respect to the financial stakeholders in the market. For example, if there is a huge amount of extra budgetary borrowing, this is generally not represented in the fiscal deficit of the government. And very recently, central government has actually done this. I'll come to the point. But understand this: whenever extra budgetary borrowings are done, these are not part of the fiscal deficit calculation of the government. So this creates a certain opaque system. There is no transparency in the market. The investors are concerned about what is the exact borrowings of the government, what will the impact of this, what is the total debt of the government, so on and so forth. And it will also have a definite impact on the credit rating system or credit ratings of the sovereign entities. So what the 15th Finance Commission has recommended is the central government as well as the states should go for full disclosures of their debt and extra budgetary borrowings, and over a period of time should eliminate these extra budgetary borrowings. Remember this particular definition. And like I said, very recently in the concluded budget, the central government has taken care of this as a result of the fiscal deficit of the government suddenly ballooned. Okay. Third, expert panel should be set up by the government, and this should recommend a framework for a sound public financial management system, which should be used by every department of the government, which should be used in budgeting, auditing systems, so on and so forth. These are certain very important recommendations with respect to fiscal roadmap. Next, with respect to taxation, first and foremost, understand this: the overall taxes which have been collected by the central government as well as the state government are somewhere around 17.5% of GDP. And understand this: the Finance Commission says that this particular fiscal capacity, tax capacity of the government has been stable, has remained surrounding this particular number, has not increased over a period of time. Whereas the tax capacity or the same idea of a tax to GDP ratio of many other economies has kept on increasing during the same period of time. So what has to be done? The recommendations have been provided by the Finance Commission. It basically says broaden the tax base, right? Include more and more companies or bring more and more people who are earning incomes under the concept of taxation in India. Collect more and more income taxes, appropriate taxes, or the correct amount of taxes, because there is a tax evasion as well as tax avoidance which is happening at a very large scale in case of India. Streamline the tax rates. For example, the issue of GST slab itself is an example here. Increase the capacity as well as expertise of tax administration in all the tiers of the government. These are some of the recommendations with respect to the taxation. But specifically with respect to GST, the Commission has basically pointed out some of the challenges related to GST in India. Now, some of these particular challenges are: one, understand this: when we introduce GST, we expected that over a period of time, the revenue which is collected under GST will keep on stabilizing and increasing. But what we have seen is because of various issues, slowdown, pandemic, or tax evasion, because of various issues, there has been a huge shortfall of the collection compared to the original forecast. What is the problem with respect to this? If there's a huge shortfall, first and foremost, the amount of tax revenues which are collected by the government are very, very important. And these particular tax revenues, if these are not in accordance to the estimation, or there's a shortfall here, don't you think the total revenue collected by center as well as states will be very, very lesser, or the shortfall will be very, very high? This will definitely have an impact on the amount of expenditure that is incurred by the governments here. First point. Second, if there's a huge shortfall with respect to GST itself, as per the idea of compensation itself, understand this, the central government will have to keep on providing the compensation to the states, although the compensation tenure is going to end very soon, and that becomes a concern for the states also. Because understand this, if there is a high volatility in taxes as well as there's a shortfall in taxes, don't you think the states will start regretting giving away the taxation power to the GST council? Because under the of the GST, what we have done, we have taken away the indirect taxes or many of these indirect taxes at the central level and as well as the state level also. The states which had the earlier had the powers to impose different types of indirect taxes, now they do not have these kind of powers. And initially I said that most of the administrative work as well as development work is done by the state governments. Now there is a shortfall, volatility with respect to GST revenue collection. These form the most important base for the revenue for the state government as well as central government. So obviously this will lead to certain issues, expenditure issues at the central as well as state level. There have been technical glitches with respect to the invoice matching, and finally there have been delays with respect to providing refunds under the ambit of GST. These are some of the challenges which have been highlighted by the 15th Finance Commission under the ambit of taxation. Now finally with respect to defense, understand this, the 15th Finance Commission was basically asked to provide a roadmap or provide a different methodology to allocate the funding for defense as well as internal security expenditure. First and foremost, the Finance Commission has basically stated no, we will not be able to provide this kind of a methodology. Set up an expert panel, let them look into it and provide a different methodology to allocate expenditure for defense as well as the internal security. That's the first very important recommendation. Second very important recommendation is it has recommended a non-lapsable fund. Remember this. It has recommended a non-lapsable fund. The name which has been recommended by the Finance Commission is Modernization Fund for Defense and Internal Security, or Rashtriya Suraksha Naivedhyam Kosh. Any of them can be used in the prelims. Please be very, very careful. But more importantly, this will be non-lapsable and this will be set up in the public account, not in the consolidated fund. It will be set up under the public account. Basically, a non-lapsable is, imagine 100 crore has been provided for the tenure of 21 to 26. Is it? I'm just giving you an idea what is the non-lapsable fund. If it is allocated for the tenure of 21 to 26, if you don't utilize all the 100 crore rupees in this particular duration, the remaining amount will be taken away by the government. Is it okay? But understand this. This is basically a lapsable fund. But when I say non-lapsable fund, imagine the government has allocated 100 crore rupees from 21 to 26. After 26 is over, but still there are 30 crore rupees left. It doesn't matter. It will be still remaining in the fund itself. Again, government will add funds to this particular fund. Okay. So this is a basic idea of a non-lapsable fund. So it is a non-lapsable fund. It will be set up under the public account. For this, understand this. The funds will be coming from one consolidated fund of India. Right. The incremental addition to this particular fund. The money will be coming from consolidated fund of India. If there is any asset monetization, any of the lands of defense are sold, then that particular money will be taken and put into this particular MF DIS. If any of the lands of the defense is sold to the state government, that money will also be put under this particular MF DIS. If any of these particular defense public sector enterprises, okay, defense public sector enterprises are sold in the market, any money that is collected should be deposited into this particular Rashtriya Suraksha Naivedhyam Kosh. This is the recommendation of defense. I'm sorry, this is the recommendation of 15th FC. Now, how these particular funds will be used? For what purpose the funds will be used? As per the recommendation, this will be used for making capital investment for modernization of defense services, capital investment for CAPF and modernization of state police forces, as projected by Ministry of Home Affairs. Small component will be used as a welfare fund for soldiers and paramilitary persons. So this is how the usage of funds has been recommended by the 15th Finance Commission. So these are the different very important recommendations which have been provided by the 15th Finance Commission, which are applicable for the tenure of 21 to 2026. Now, based on this discussion, just to give you a brief idea, we have two descriptive questions here. First one, discuss the sector-specific grants provided by the 15th Finance Commission, and if at all these kind of questions are asked, maximum number of wordings that they can ask you is 250 words. Okay. Though the 15th Finance Commission has tried to address the concerns of the southern states, there are still issues related to devolution funds by the Finance Commission. Let me elaborate on this. I basically stated that when the terms of references were provided to the 15th FC, some of the southern states opposed this. And the Finance Commission in its report says that to address the concerns of this particular southern states, and as such there is a north-south divide in case of India, we have tried to protect the interests of the southern states by basically providing a demographic performance parameter, by reducing income distance weightage from 50% in the earlier Finance Commission to 45% here. We have also basically reduced the weightage for the population, although we have taken only population of 2011. In the 14th FC, the total weightage given was 27.5%. This has been reduced, right? So basically we have tried to address the concerns of the southern states. Having said so, please understand this. There are various concerns which have been raised even after this. And based on the detailed study of the Finance Commission report, it has been found that the states in southern India, out of the 5 states which are going to lose because of this particular recommendation, and when I say lose, how much they were getting based on the recommendation of earlier Finance Commission, how much they will get in the form of a devolution based on the horizontal devolution formula given by 15th FC. If you make a comparison like this, out of the top 5 losers, 4 of these particular losers will be from southern India. Such as Karnataka, it is going to lose big. Biggest loser will be Karnataka. In fact, it is losing huge amount of devolution funds. Apart from this, Telangana will be losing. Andhra Pradesh will be losing based on the recommendations. So yes, the Finance Commission stated that we have tried to address the north-south divide of the concerns of the southern states. Even after that, some of these particular southern states will be losing because of these particular recommendations. Now, question is why this is happening. On one side, the Finance Commission is saying that we are addressing the concern, but in reality or at the ground level, this is going to happen. What is the reason? The reason, simple reason for this is yes, whatever Finance Commission has stated is correct. Income distance, weightage has been reduced. Population only 2011, but the weightage has been reduced. All of these are in favor of the southern states, but the population is also used in the calculation of some of the parameters where population has no relevance at all. I'll repeat the statement. Population, 2011 population is used in many of the calculations of parameters where population has no relevance at all. For example, the idea of income distance. Right? In case of idea of income distance, I say per capita. And when I say per capita, it simply means the total population of the state is going to be considered. But the question is, what is the importance of considering the total population when you are calculating income distance? Okay, that is one argument. Second, when you calculate tax efforts. When you calculate tax and fiscal efforts, again, the calculation is based on per capita. In simple terms, total population of the state will be considered. In case of a demographic performance, again, the total population will be considered. So the argument here is, when you take the total population, obviously some of the northern states have a better or higher population compared to southern states. As a result of all of these complex calculations, the southern states will be on a losing end. And if you look at the detailed discussion provided for 15th Finance Commission, the northern states, except Haryana and Uttar Pradesh, except these two particular states, all the northern states or Hindi belt states, their devolution based on the horizontal devolution formula will increase. Whereas in case of southern states, these particular states will be losing because of this particular devolution formula. So whatever might be said by the Finance Commission, the ground reality is slightly different. That is the crux of this particular question. Hello and welcome to Byju's Exam Prep IAS. Today, Finance Minister presented the last full budget of the current government as the Lok Sabha elections are scheduled. Come to Byju's Exam Prep IAS. Today, Finance Minister presented the last full budget of the current government as the Lok Sabha elections are scheduled next year. Now, before analyzing the announcements done by the government, what is the context in which the budget has been presented? I'll be discussing the context under four very important parameters. First, the pandemic. Second, the possibility of recession. Third one, inflation. And the fourth one, very near and dear to every one of us, the situation of employment. Let me start with the first one, pandemic. Now, every one of us knows that the COVID-19 affected not only the Indian economy, but also the global market. India experienced slowdown, then technically a recession, and as the economic survey says, the recovery is complete now. We don't have to be worried about the impact of the COVID now. Economy has completely recovered. But is it over? In a sense, for India, we may not discuss the impact of the COVID anymore, or the recovery that is required from the impact of the COVID. But I'm pretty sure all of you have read the newspapers and you would have realized the pandemic even today is affecting some other country, that is China. China is experiencing a resurgence of COVID cases. Now, some of you might simply say, so if China is experiencing COVID crisis, why should I be worried? Why should India be affected because of that? A simple answer to that is because of trade relations. Thanks to globalization, India has a very good trade relation. Of course, there is a huge trade deficit. That's a problem. That's a concern. But we have a very important trade relation with China. And we are importing a lot of important raw materials, such as activated pharmaceutical ingredients, which we import from China, which are necessary in the pharmaceutical sector. Same can be stated in context of solar sector. Same can be applied even in the context of automobile sector or many other sectors as well. Now, if there is one more pandemic or wave of the pandemic in China, and as a result of this, production in China is affected, exports are affected, it simply means even India would be affected by this. So first, pandemic. Second, inflation. Inflation in the recent times has been a cause of concern, not only for the governor of RBI, but even for all of us. But again, is inflation a cause of concern only for Indian economy? Of course no. Western countries also have experienced a very high rate of inflation in recent times. And as a result of this, you might have read in the newspaper, the Federal Reserve, European Central Bank, etc. have increased their interest rates. Now, what is the impact of that? A simple understanding is, whenever there is a rise in the interest rate, especially in a developed market such as USA, there is a danger of capital outflow from India. And as we are discussing, the FOMC, that is basically the committee which decides the interest rates in USA, is actually discussing what should be done. Should they continue with the hike in the interest rates, or should they basically looking at the recent positive report on the employment should stop the hike in the interest rate? Now, on the domestic front, is inflation a cause of concern? And please understand, whenever there is a higher inflation rate, whether you like it, don't like it, doesn't matter, it will have a huge impact on the growth prospects of the Indian economy. With a higher inflation rate, RBI doesn't have any option but to hike the interest rates, and as a result of this, loans will get costlier, and it will have a huge impact on investment, that is specifically private sector investment, as well as the demand for loans in the market. But luckily, in the last couple of months, the retail inflation has actually cooled down. But necessarily doesn't mean there is no danger of inflation in Indian economy. Core inflation is higher, food inflation rate is higher. So second factor, inflation. Third very important factor, recession. Not specifically from the context of Indian economy, there is an expected recession that would take place in the developed countries. And if there is a recession eventually happening in the developed markets, rest assured, there will be an impact on the Indian economy. How so? Simple. Again, thanks to globalization, we are integrated with the global market. So we import a lot of goods and services. And more importantly, we want to export. And when there's a recession in the USA, let's say, and there's a recession in the European market, it will definitely have an impact on the imports as well as exports, which will go from India to rest of the world. And as such, in the recent times, the exports from the Indian market have actually gone down, and that is a cause of concern. And when the exports will go down, automatically the trade deficit widens, current account deficit will also widen. And the fourth very important parameter, in the context of which the budget has been presented, is the situation of employment. Now, many of you might simply say, sir, employment situation has improved. Agreed. But in the recent times, one after the other, not only the Indian companies, that is the domestic companies, even the multinational corporations have started firing the employees left, right, and center. The reason is, again, they're expecting a recession to take place. Some of the companies, because of the situation of their poor revenues, poor financials, have started removing the employees. And as per the recent data published for the last month, there is a 14-year high unemployment rate recorded for the Indian economy. So keeping in mind these particular four important factors, or the context, the government of India today has presented the budget. Now let's look at the 7 very important priority areas citing which the government has basically announced all their important announcements. The 7 important areas are 1. Infrastructure. 2nd, the green growth. 3rd one is inclusive development. 4th one is youth power. 5th one is unleashing the potential. 6th one is reaching the last mile. 7th one is financial sector, as mentioned in the graph or in the graphs on the other side. So let me begin the discussion for the budget announced by the government for the next financial year 23 and 24, with the first very important area, that is infrastructure. Now, the infrastructure, as such, please understand, is very, very important for a simple reason. Infrastructure is associated with multiplier effect. Now, what is this multiplier effect? Let me explain it to you. Now, wherever you see infrastructure investment being done by the government, the reason is simple. Infrastructure leads to a lot of investment, not only by the private sector, even from the side of the government of India. And if you see the trend of investment in the infrastructure in the last couple of years, you will realize that in the last 4 to 5 years, there is a rising trend of investment by the government in infrastructure. For example, for the financial year 22-23, that is the financial year in which we are there right now, the government of India initially proposed investment, that is a capital expenditure of 7.5 lakh crore rupees. 7.5 lakh crore rupees, not the highest that has been proposed by the government. And please understand, as per the revised estimates which are given by the government today, the 7.5 is not yet reached, but already they have achieved 7.3 lakh crore rupees. And please understand this, this is not the actual amount. Some of you simply say, sir, if the government of India has proposed the 7.5, they have basically invested only 7.3, then they have not achieved the target. In that context, you have to remember 3 very important terminologies. 1, the budget estimates. Budget estimates are provided by the government, which basically says in the next 1 year how much money I'll be spending or collecting. Revised estimates, government on the 1st of February. And please remember, the financial year is not yet over. So on the 1st of February, we'll basically revise whatever announcements they've done in the last year. And finally, when the financial year is over, I repeat, when the financial year is over, and the current financial year is not yet over, it will get over on the 31st March of 2023. So please be very careful here. Government of India has proposed 7.3 lakh crore, 7.45 lakh crore rupees, out of which already 7.3 lakh crore rupees has been estimated, and after the end of the current financial year, I'm pretty sure it will be more than that, but that data you will get it in the next year's budget. Now some of you will have a look at it and say, sir, you're saying 7.5, 7.3, etc., but there is one more number here, 3.3 lakh crore rupees. What is that? Now I'll tell you that, before that, have a look at the budget estimates for the next financial year. The total capital expenditure that has been proposed, estimated by the government, is 10 lakh crore rupees. And please be very careful here. You will see that there is a hike of more than 33% in the capital expenditure that has been proposed by the government. And that trend is constant. That is basically more than 30% hike has been done in the last couple of years. Point number one. Point number two. Is it only that the government of India has proposed 10 lakh crore and nothing else will be invested in the capital expenditure? Of course no. Whenever you talk about the central government or the budget announced by the central government, there are two very important components to look at. One, where government of India will directly spend the money, which will be counted as a part of capital expenditure. And second, the grants for the creation of capital assets. In your classes, I'm pretty sure you must have come across a terminology called as GCCA, grants for creation of capital asset, which is generally considered as a part of revenue expenditure, but nevertheless, that is also associated with creation of infrastructure, creation of assets. And that is the precise reason you will see there's a breakup of the total capital expenditure incurred either directly by the government of India or indirectly by the government of India. So to put it in a nutshell, the total capital expenditure or total expenditure that would be incurred in the next one financial year, as per the estimates given by the finance minister, is 13.7 lakh crore rupees. That is 10 lakh crore directly the part of capital expenditure, part of the budget, and second one is part of the revenue expenditure, 3.7 lakh crore rupees. Now, coming to the next point, some of you will basically remind me saying that, sir, you started the statement with the concept of multiplier without explaining it. I'll come to that now. Whenever you talk about the capital expenditure, it will refer to the investment in the asset. That is, let's say, government of India will spend money and develop roads, develop ports, airports, etc. And whenever there is an infrastructure investment done like this, either by the government or by the private sector, you will realize that there is a rising demand for, let's say, labor, rising demand for raw materials, rising demand for various other important components which are needed for the development of the infrastructure. And as a result of this, don't you think employment will be generated, production of other goods and services will be improved, households will start earning more and more, and that basically kickstarts a virtuous cycle in the economy. And that is the reason why government of India has been spending so much amount of money in the last couple of years related to capital expenditure. So the first point, important point that you need to remember, and the most important one as far as I'm concerned, is the total amount of capital expenditure which will be spent by the government of India will be 10 lakh crore rupees. Now, let me go to the second point. Yes.
Allow me to interrupt for 1 second.
Yes, sir.
So I have a question from the side of the students actually. So we have already looking at this graph and we see all the buildings going up in increasing order. Now, don't you think it would put a lot of pressure on the government's expenses? I don't think the revenues are actually increasing in that speed. So they are actually spending a lot of money in capital expenditure. Doesn't it put a lot of pressure on the government, or would it not compromise their priorities somewhere else?
Definitely yes. Whenever the government spends a lot of money on the capital side, or for that matter any side, the overall expenses of the government or expenditure of the government goes up. But on the other hand, it's basically an analysis where you need to understand that rising capital expenditure is always considered good. Point number one. Because government at any point of time, right, please understand this, will borrow money from the market, except in a case where the government has a surplus budget, which we will not see in the last, let's say, 10 or 20 years in India. So until unless there is a surplus in the budget, government simply means borrows from the market. And when government borrows from the market, now you have to answer a simple question. Would you want to borrow from the market in order to develop an asset, or you want to borrow from the market for revenue expenditure? And the golden rule in the market is that you should borrow only to create an asset that is always economical, or let's say will provide a lot of benefits for the economy. That is point number one. Second point is, will it have an impact on the fiscal deficit? Yes, it will lead to higher fiscal deficit. But the advantage of having a higher expenditure like this is that the multiplier effect. As I've already discussed, it will lead to a lot of multiplier effect, or multiple outcomes can be achieved by the economy. And the third one, the government itself has given the data, the taxes have, or the collection in the taxes last year have increased by 11%. And even this year, right, we expect, that is when I say this year, for the budgeted year, we expect that the tax receipts are further going to increase by 11%. So with the rising tax receipts like this, it always makes better sense if the government of India uses the money to spend on capital expenditure rather than revenue expenditure. So let me go to the second point here. The government has announced that it will continue to support the states. Now many of you ask me, sir, what do you mean by supporting the states here? Simple. In the budget for the year 21, government of India announced certain amount of money that would be loaned to the states for incurring expenditure under the capital head. And understand the term capital head, meaning creation of assets here. And in the last year's budget, that is basically when I say last year and this year, please understand I'm talking about the financial year 24 as the current year, because the budget is for that year. And when I say last year, assume it for the financial year 23. So for the last year, the government of India further increased the amount of loans to 1 lakh crore rupees. And please understand this, the amount of loans of 1 lakh crore rupees, there were certain conditions attached to it. What is the condition? 1 lakh crore would be provided to the states. And all this 1 lakh crore is not unconditional, nor can I say all of it was conditional. Some part of it was unconditional. It would be distributed as per the recommendations of devolution provided by the 15th Finance Commission. And remaining was conditional to certain reforms being implemented by the state governments. Now this year government says, we will further increase it from 1 lakh crore rupees to 1.3 lakh crore rupees. From 1 lakh crore to 1.3 lakh crore rupees, which means there will be further more support by the central government to the state governments to develop infrastructure at the state government level. And that's very, very important. And again, what are the important features here? It is interest-free loans. Please understand this. It is interest-free loans. And second one is, the loans will be given for a tenure of 50 years. The loans are given for a tenure of 50 years, which means the repayment will be done in 50 years. Right? And as already mentioned, part of it will be conditional and remaining will be unconditional in nature. So second, the government has already announced that they will continue to support the infrastructure or the asset creation that is done by the state governments. Third one, UIDF. Very recently, there have been multiple reports in the context of urban finances. One report came from Reserve Bank of India, and when I say report, in one of their monthly bulletins, RBI in a detail discussed about urban finances or urban local body finances. And apart from this, even the World Bank also came out with a report which basically stated that in Indian economy, in the next couple of decades, the total population which resides in the urban bodies or in the area of cities will balloon. It will simply increase. And if the states, and specifically the urban local bodies, want to ensure that the infrastructure will be provided, required services would be provided to them, there would be a requirement of a huge amount of investment. And in connection to that, have a look at the third very important point here. Central government now proposes, it's a proposal right now, it has proposed to set up urban infrastructure development fund. Under the UITF, the funds would be utilized for the development of infrastructure at urban level or at the city level. Again, please understand this, it is just a proposal. It is yet to be set up, and how much funds will be there, how it will be distributed, what conditions have to be met by respective cities to get the access to these funds, because there are certain conditions. For example, the central government or the finance minister stated that we would start providing assistance when the state government will ensure that the credit rating of the urban local bodies will improve, because that is one of the very important factors that is connected to the concept of municipal bonds. Because whenever any municipality for that matter wants to borrow from the market, they will have to have a credit rating. That is very, very important. So that is the third very important announcement in the context of infrastructure. The fourth one, related to infrastructure investment, the railways. I'm pretty sure all of you know this. Earlier, we used to have a separate railways budget. And this convention or the practice of separate railway budget has been discontinued, and now railways budget has been brought under the union budget itself. Now, what are the important announcements in case of railways? The capital expenditure is one of the highest. More than 2 lakh crore rupees will be spent in the railways development of infrastructure. In association with that, please have a look at the operating ratio. You will realize that operating ratio of the railways is actually improving in recent times. I can understand this. It is actually improving in the recent times, but again, there is a concern over the operating ratio all over again. Because please understand, the operating ratio is basically a comparison between how much expenditure has to be incurred compared to how much revenue has to be generated. Now, when I say it has gradually improved or recently has been improved, don't worry about this data from 1 year to next year. Right, the data will keep on changing. But definitely, yes, the railways finances are under pressure. In addition to this, please have a look at the amount of expenditure that is incurred by the railways, right, compared to the amount of revenues that they are generating. And finally, also have a look at how much percentage of the revenues will come from the freight component of the railways and how much from the passenger component of the railways. So these are the very important areas. Please do not buy out any of this data. This is not going to be asked in the UPSC either in the prelims or mains. Right, so these are certain important areas of announcements within the infrastructure sector. Now, let me go to the next one. That is the next area of discussion. The next area of discussion will be green growth, which will be taken by Harshmeet, sir.
Before I come there and take up the green growth, one more question that I had in my mind.
Yes, sir.
We have been reading and discussing a lot about the financial problems in railways for a long, long time.
Yeah.
I remember at least more than a decade, the same talks go on, the railways were in a great financial condition. Do you think this time around the budget actually tries to revise that, the budget actually tries to help that, or no, the government is just trying to run the railways as it is?
The issue related to railways finances is nothing new. Right? Even before this year, there have been multiple instances where there has been pressure on the finances of the railways. But rather than looking at only one budget, what would make it much better is an analysis of what reforms have been implemented by the ministry as well as the government in the last couple of years. For example, the government of India has proposed a railway plan of 2030, under which they want to increase the amount of freight transportation that is handled by railways. As per the government report, around 27% of the freight transportation actually is done by the railways. We want to further increase it to more than 40%. So in the budget, you may not find specifically certain announcements which will suddenly improve or let's say reverse the course of the finances of the railways. But in a totality, if you look at many of the other reforms announced by the government, definitely yes, there will be an improvement in the finances of the railways in the coming decades. So I'll be basically handing over the discussion to Harshmeet sir to take up the discussion related to green growth now.
Thank you very much for that, sir. Now, if any one of you have been reading and following what the government of India has been doing in the field of sustainable energy and in the field of switching to renewable energy sources, you will not be surprised. In fact, many of us expected a lot of announcements in this field. How is it that the government will now be moving towards renewable energy? Is the government actually trying to spend more money there? Now, there are a lot of initiatives that the government of India has taken in this budget. Let me quickly go over them one by one in a bit of detail. Now, before we begin analyzing this one by one, do remember the mantra is the devil lies in the details. Whenever the finance minister actually makes this speech, do remember the entire budget document has a lot more details apart from the announcements that are made over here. Now, if you actually see in the field of renewable energy, more specifically, in order to give a push to India towards using more and more renewable energy, the government of India has taken up a lot of initiatives. You all would know how the government of India has already committed to achieving net zero by 2070, and in order to achieve that goal, we have been investing a lot of money in different sources. For example, if you see how the government of India has been focusing a lot on solar. In the past few years, India has actually become one of the leading producers of solar energy in the entire world. From a time that solar panels used to be the most expensive source of producing energy, we have now been able to make it much more affordable. Not just this, if you have been following the government initiatives, you also would notice how the government is taking a huge bet on green hydrogen. Now, green hydrogen or using hydrogen as a fuel is not new. You would know, even today, many industries around the country actually use hydrogen as a source for their fuel. However, green hydrogen would be different in a sense that green hydrogen is prepared by ensuring that there is no harm done to the environment. Apart from that, if you look at how the government of India has encouraged more and more people to take part in these initiatives, one very interesting thing that the government of India has come up with is a green credit program. Now, what exactly is this and how would it actually impact Indian government's efforts to go green? Now, in simple terms, local communities who are not even connected to the government, let's assume that they have their own land. Now, as a community, they can take up an initiative where they will ensure plantation on their piece of land and they will take care of it for about 3 years minimum. After 3 years, the community would have an option. They can actually ask for compensation for that piece of land from the forest department. Now, why would the forest department do that? The government of India, as you know, each and every year extends its goals for forestation. The government of India, for example, wants to achieve as much forestation as possible. If the government can't do it from their own funds, from their own resources, it is easier for the government to just compensate the community who has grown a forest out of nothing, and the community itself would play a major role in taking India forward towards a green country. So this is the green credit program. Now, as I told you earlier, the devil lies in the details. A lot of details are still to be finalized. For example, let's say you are a community who has undertaken this project, and now you want compensation against that. Now, it's not that each and everyone will be eligible. You will have to fulfill certain guidelines that are finalized by the forest department. Only when you fulfill those would you be eligible for such an exchange. You know how the guidelines can keep on changing depending upon officers to officers, government to government, but it is a good initiative at least to begin with. Then there was also announcement of Pradhan Mantri Pranam, that is PM Pranam. If you have been following current affairs religiously in the past few months, you might say, sir, this is not something that we are hearing for the first time. If you actually realize this, the government of India a few months back did say that we will come up with something like the PM Pranam. Now, what exactly is this and what is the government trying to achieve through this? In simple terms, this is an initiative of the government to encourage states that in turn will encourage the farmers to go ahead and use alternative fertilizers. Now, India being a green country has a lot of demand for fertilizers. Because a lot of our farmers are small scale farmers, they can't afford to buy fertilizer or urea at the market rate. And that is why the government of India has to have a huge subsidy bill to ensure that urea becomes affordable for most of the farmers. Let me share a number with you so that you can actually see what is the impact of that subsidy. If you talk to farmers who have been given subsidized urea, most of the farmers would have to pay 6,000 rupees per ton of urea. Now, let's take a guess of how much is the real market rate. If you go to the market, the domestic manufacturers of urea, their cost of manufacturing urea per ton is 17,000. the gap is filled up by the government through its subsidy. Now just imagine the scale of farmers that we have in India, the scale of farming, and then imagine what is the total amount of subsidy that the government now has to bear. This is a big problem that the government of India is now trying to solve through this by pushing farmers in a positive manner, saying that if you do not use your run of the state urea and you actually go ahead with alternative source of fertilization, we might give you certain incentives from the side of the government. Apart from that, the government also has certain ways to bear.
Before you go forward, I have a doubt regarding this.
Yes.
Right? I'm pretty sure most of the students also have the same doubt. So there are so many numbers that you have provided with, let's say, the PM Pradhan scheme. But what is the ultimate objective of the government of India by implementing this scheme now?
Right. So, as I said, if you look at the objectives that the government of India is trying to achieve through this scheme, there are a lot of objectives that are on the minds of the government. Number one, we need to push our farming towards a more sustainable form of farming, and that is not possible with the kind of profile that we have in our fertilizers. Secondly, because the government of India offers a lot of subsidy, as we just saw in case of urea, there is a case of our farmers using fertilizers on a much larger scale as compared to what they should, and that is why the overall productivity of our agriculture has not improved in such a speed as we had actually expected in the past couple of decades or so. So the government is hoping that this would give a positive push to the farmers to introduce a change in their behavior. So it would have, number one, economic impact also. It would ensure that the government does not have such a huge burden on its pocket. Secondly, the government is also trying to do good by our agriculture, making sure that we have healthier food to eat, making sure that we have a sustainable form of agriculture going forward. The other initiative that I want to talk about is the Waste to Wealth initiative. Again, something that the government of India had started some time back. It's not a new scheme. For example, the government of India has launched the Gobar Dhan scheme. Now, the interesting part is, which is the ministry that has launched this? Usually when you talk about these kind of schemes, you would assume that is the rural development ministry doing something, maybe agriculture, but actually it is the Jal Shakti ministry that is behind this initiative. As the name suggests, the government of India wants the farmers to augment their income through some additional source of income and not just focus on their primary source of income, that is agriculture. The government wants to train them to have much more generation of, let's say, biogas that can be used as a fuel later on. For that purpose, the government is coming ahead and saying, don't worry, we will invest money and we will set up 500 new waste to wealth plants. The government of India has also focused on the Mishti scheme that will be taken up for mangrove plantation. Now, mangrove again is something that usually is in the news whenever we talk about environment. The government of India and other governments around the world realize the importance of mangrove to such an extent that in fact in COP27, if you have been reading in COP27, we had a multilateral alliance especially for the mangroves that was launched. India, Sri Lanka, Indonesia, multiple countries came together and they decided that yes, we need to take certain action to preserve mangrove in the long run. I'm sure all of you are very well aware of the importance of mangrove. All of you know the part that they play in not just preserving our environment, but also safeguarding the local communities against a lot of natural disasters. The government of India also came up with Amrit Dharohar, that is to take better care of our wetlands. Again, wetlands, mangroves, these are some of those parts of our ecosystem that have played a very, very important role in ensuring that the local community can have a lot of benefits. They can also have additional source of income, and if required, we also can depend on them for ensuring that our environment is safeguarded. Now, this is just a very small screenshot, a snapshot of the huge details that would entail in the budget. As expected, the details will trickle down slowly, and as and when we come to know more about it, we will be discussing more of these. But these are the major initiatives that the government has focused on mainly in the field of green growth. Now, the next major point under which the government of India released its budget was inclusive development in agriculture. For that, Shams, I would like you to please take over and guide the students on that.
So under the inclusive development, government of India has covered multiple areas. So let's restrict our discussion related to agriculture sector. Because agriculture sector is one of the very important sectors where, let's say, generally around 45% of the workforce is involved. And it's not that. Agriculture sector contributes to overall GDP as well as to the exports, to the earnings in terms of forex, etc. Now, in case of agriculture sector, what important announcements have been done? Let's have a discussion. The first very important announcement that you need to have a look at is agriculture credit. Annually, government of India, the budget comes up with a certain amount of a target of how much loans have to be given to the agriculture sector. And I'm pretty sure all of you know to what extent the loans which are issued are important to the farmers, especially to the small as well as marginal farmers. So compared to last year, this year, the agriculture loan or the agriculture credit that has been targeted by the government has been increased from somewhere around 18.5 lakh crore rupees to 20 lakh crore rupees. So that one will ensure that there's a lot of credit inflow that goes into agriculture sector. Second very important one is agriculture accelerator fund. Now, before I tell you what is the idea of agriculture accelerator fund which has been proposed now, let me give you a data which has been given by the economic survey yesterday. Economic survey says there are thousands of agriculture technology startups in India, thousands, and a large number of them are concentrated in one area, that is supply chain of millets itself. And in the last 4 to 5 years, more than 6,000 crore rupees has been pumped in the form of private equity in agriculture tech startups. Now, focusing on the same idea of agriculture tech startups, the finance minister has announced that there will be a setting up of agriculture accelerator fund. Again, this is just a proposal here. The whole idea is that for the startups which are involved in agriculture technology, funding will be provided, they will be promoted, right, and that will contribute to the development of technology in the agriculture sector. And I'm pretty sure all of you know this. To what extent India in the context of agriculture technology is lagging behind, and how much important is the development of technology, research and development in agriculture sector. That's the second very important announcement. Third one, related to millets. Right? The year is International Year of Millets, which has been announced very recently. And millets, in essence, are nothing but these are grasses with certain types of seeds. For example, jowar, bajra. These are nothing but examples of millets. India is one of the largest producers of millets in the international market. Just to give you factual data here, India accounts for more than 20% of millets which are produced in the global market. And India is not just the producer, one of the very important exporter. India accounts for more than 60 to 70% of the total millet production done in Asia. More than 170 lakh tons of millets are produced annually in India. So citing all of this, or looking at all of these factors, the government of India today has announced that they will basically make India a global hub for millets. And another name that was used by the finance minister to represent millets is Sri Anna. Now, apart from this, in the context of agriculture sector, the finance minister also announced that they will be investing, or they will be promoting investment and development of storage capacity. Now, why this is important? Annually, there is a large amount of production of the cereals as well as horticulture products in India. It's basically the output in the agriculture sector. But how many of you know that part of this production, both agriculture, that is cereals as well as horticulture, part of this production is destroyed, is wasted because we do not have sufficient amount of storage capacity. And because this is like a destruction of agriculture production, the farmers who are involved in the cultivation of this, they will not be able to generate or earn sufficient amount of revenues, creates a distress in the agriculture sector, and more specifically, there is a disturbance in the supply and demand of these commodities, which might contribute to spike in the prices of the commodities in the market. So in order to address the issues that are faced by the farmers, the government has announced that they will be promoting development of additional storage capacity. And one more important announcement is already the government in the earlier budget has announced Matsya Sampada Yojana associated with production of fishes, again associated with blue revolution in India, and one more sub-component or sub-scheme under the Matsya Sampada Yojana would be launched now, and the allocation for this Matsya Sampada Yojana sub-scheme will be more than 6,000 crore rupees. So these are certain very, very important announcements that the government of India has done in the context of agriculture sector. Now, having said so, please understand this. Whenever you talk about agriculture, are these reforms sufficient? You might simply argue, so these are good reforms, no doubt. But a lot of experts estimated or expected that there would be some reform associated with, let's say, EMSP, some reform associated with PM Kisan scheme, etc. Right? Again, government of India, let's say the finance minister in the budget speech did not mention PM Kisan as well as the concept of EMSP. Right? So these are certain important areas of the reforms which have been covered in the budget under agriculture sector related to inclusive development. So the next fourth, that is the next area of discussion, fourth key pillar, key priority that has been covered in the budget will be the youth power, which will be taken up by Harshmeet sir.
So please allow me to interrupt here once again. So as far as I know, in our economy, one big problem that we have been seeing is people are just not buying enough, people are just not consuming enough, and that is also why the business is also now facing lack of demand. Do you think this budget particularly has done something to boost consumption in the general market?
Definitely yes. I would completely agree with the argument that the budget which was announced by the finance minister today contributes to a rise in the consumption demand, and that's very, very important for a very simple reason. If you look at the first advance estimates which were announced in the month of January for the current financial year, you'll realize that more than 60% of this, that is when GDP is calculated in different ways, more than 60% generally comes because of expenditure done by you, me, and anybody in the private sector. And the consumption demand, specifically the expenditure of the consumption demand contributes a lot to the GDP like this. And in recent times, one of the reasons that has contributed to the slowdown and recession, again not now, 2 years ago in the Indian economy, was that people lost jobs. People were uncertain about their future, as a result of which people reduced their consumption. Not the complete consumption of certain goods and services was cut. And when the consumption of goods and services is reduced, automatically you will see that the demand for these goods and services, or the aggregate demand, will go down. That will again snowball into lower production, lower employment, or let's say higher unemployment, lower GDP. Now, looking at the current year's budget, when you talk about, let's say, higher infrastructure investment, when you talk about, let's say, investment in the form of, let's say, 20 lakh crore rupees loans given to the rural market, that is for the promotion of agriculture sector, etc. What is the outcome of all of this? The outcome is simple. The money supply in the economy is going to increase. That is, the money that goes to the households is going to increase. And that will basically lead to higher demand or higher aggregate demand for goods and services, thereby contributing to growth in the consumption and contributing to the growth in the economy. So now let's have a discussion on the fourth very important key pillar, that is the youth.
Thank you, sir. So the government of India has actually announced a slew of measures, especially keeping the youth in mind. Now, when we say the youth, there have been a lot of different initiatives that have been taken by the government of India. Now, be it ensuring that they have enough skills, be it ensuring that we focus on education, and also ensuring that we become a major source of very good skilled labor throughout the world. Now, let's have a better discussion on this with me going here on the screen. Now, if you actually look at how the government of India has reacted to a very interesting situation that we are seeing globally. Just a few weeks back, you saw the population number of China actually come out, and we all saw how, for the first time in almost 6 decades, China's population has declined. Now, you might say, what does it have to do with India? But I would argue it has everything to do with India, India's youth, and the global opportunities that you might aspire for. Now, India right now is actually getting the benefits of a great demographic dividend. When we say demographic dividend, that means a major part of our population right now is in the working age. The average age of India is not even 30. That is why we have a lot of people who right now can contribute in the economy, and they can actually contribute more to taxes, the GDP. This is where we have an advantage as compared to many other developed nations and even China. This is where there is one interesting gap that we have to fill. Just having a lot of people in the working age group would not really mean that the people would automatically be beneficial for the GDP. The gap that we have to fill is that of skills. Now, the interesting part is the word skill might have brought very different kind of examples about 10 years back. And today, when you say I require a skilled person, the kind of skills that you're talking about can be very, very different. For example, 10 years back, people did not really hear about robotics, AI, mechatronics. All these things have emerged in the past few years. And these are the jobs which nations around the world actually require. And this is where India has a great opportunity in ensuring that if we give proper skills to our youth in this kind of a field, the government of India can actually make sure that we become a net exporter of skilled labor. You know, the government of India has been running the Skill India program for some years now. This program will continue. However, the interesting part is the government of India, keeping in line with the present demands, would actually include all these things as well in the Skill India missions. So, youth will be given training on AI, robotics, there will be 3D printing, drones, etc. In short, all those technologies which will enable our youth to ensure that they have a very lucrative job not just in India but also outside India as well. This is one very, very important takeaway because it is very heartening to see when the government realizes what is the need of the hour. Rather than government realizing it 10 or 20 years later, it is always important that the government initiatives stay one step ahead. And this is where we have a big, big advantage. The government of India is also giving a Skill India digital platform under which, again, the Skill India program is the central focus, and the government of India will make sure that in order to give as much support to entrepreneurs who actually get some skills and they can actually go on and build a business of their own, the government of India will provide as much support as possible. Interestingly, in this category itself, the government of India has said that we are focusing a lot on tourism as well. Now, the interesting part is, if you look at the government initiatives in the past few years, right from the very top, the Prime Minister himself, talking a lot about tourism and how it can have a very, very positive impact on India's economy. Just a few days back, you saw how the Prime Minister of India actually made a statement that if you travel across the country, you should make it a point to at least spend 5% of your expenditure in buying locally produced goods. That can give a big boost to the economy. Now, tourism is one sector that was hit very, very badly due to the COVID-19 pandemic. It is also one sector that has a lot of auxiliary jobs related to it. Drivers, tourist guides, hospitality sector, cooks, people who actually have local shops outside the tourist places. All of that is the focus of the government. That is why the government has to ensure that they are attractive destinations for people to visit. We have to understand, we take it for granted, but there are very few countries around the world that can claim to be as diverse as India. Having deserts where you can actually see temperatures reaching upward of 50 degrees Celsius, having cold deserts where you can see temperatures going back to minus 50 degrees Celsius, having the wetlands, having all sorts of things that people are attracted towards. And that is why the government wants to give a boost to tourism also. The government also interestingly focused on setting up unity malls in state capitals, mainly to focus on something called one district, one product. Now, this is an initiative by the government of India that was launched some time back, wherein the government said that we expect every single district to make sure that they choose one single product in which they have unique skills so that they can promote those products. The government of India will also give a push to people to buy those products. It can be through GI tag, it can be through government's promotion, it can be through other initiatives. Now, what the government is trying to do is to give further boost to this one district, one product initiative. The government now would be setting up unity malls in state capitals. So, for example, you visit Madhya Pradesh, you visit Karnataka, you visit Tamil Nadu. In the state capitals, you will have these malls where unique products of districts of those states, especially, will be kept there for you to go buy, explore, etc. Again, the hope of the government here is that underlying all of this, the government would ensure that our Amrit Piri have enough jobs. Because it is one thing to say that yes, we are in a very advantageous position with a lot of youth being a part of our economy, but that can very easily be a big challenge if we are not able to provide enough jobs for them. So behind all these initiatives, what the government is not saying openly is that the government is hoping that all of these will bring in more and more jobs in all these sectors, which will in turn result into government having a better earning and the people having a better standard of living. There are other initiatives as well taken up by the government. For example, the government has increased budget in all the different areas which concern the youth specifically. The government of India, in fact, has also decided to set up multiple labs for state-of-the-art technology, AI, 5G, etc., where you will see a lot of new apps being developed and people across the country will be getting a taste of that. So in the coming years, we have to see how this actually rolls out. Apart from that, there is one other very interesting point that the government of India focused on.
Before you move forward to the healthcare sector, since you're discussing youth, I'm reminded of one very important discussion that has happened recently. There are multiple reports recently in the newspaper stating that due to pandemic, the education sector has been affected, and especially it has been the primary education. The children who are going to get the primary education have been affected. You discussed multiple aspects of the announcements done for the youth. Don't you think government of India has overlooked the primary education in announcing all of these areas?
That's actually a question that would force you to look at the budget very, very carefully. Now, on one side, you may say that the government has focused more on that sector, that requires more jobs, that requires more employment. However, the interesting part is the headline of the budget in that sector is that the government's education sector budget is now the highest ever. Even when you look at the breakup of that, the budget given to higher education and the budget given to school education, both of these are at a very, very high level, much better as compared to what we had the last year. So that's a positive thing to look forward to. The other side of the story is, during the pandemic, as Sarai pointed out, there was huge number of dropout that we saw, and it was expected. Families did not have many jobs, they required as many people who could earn, so a lot of children dropped out from the school and unfortunately were engaged in child labor. However, the interesting part is now we are seeing most of them going back to school. Even more heartening is that the enrollment ratio amongst the girls is improving drastically. So that is again something that the government has to be appreciated for. That is their focus on education. There has been multiple mention of the national education policy, and the government has been trying to implement a lot of its initiatives as well. Now, somewhere related to the youth also, we have the healthcare sector. You know, the entire world went through the most difficult travesty of a lifetime, and that is why not just India, multiple nations around the world have had a relook at their healthcare budget specifically. So what the government of India has said is that we will be increasing our health expenditure. The interesting part is the health expenditure did increase during the corona or the COVID lockdown years, but in the subsequent year it was again cut down. Now the government has said that we are realizing that healthcare sector in India needs to have much more expenditure because of the simple reason. India, anyways, if you look at the generic population, if you look at the per capita income, most of the people can't afford good private healthcare. In that aspect, it becomes the government's responsibility to take care of the people who can't afford private healthcare, especially. And for that purpose, we have to ensure that the healthcare budget is enhanced, and that is what the government has said. The government has said that we will take it to 2.1% of the GDP. There are two ways to look at it now. One, yes, it is very appreciable. It has now crossed the 2% of the GDP mark. But now, the interesting part is, if you compare this to some of the developed nations in the world, there are nations such as Israel, South Korea, that continuously spend over 4% of the GDP just on the health budget. So yes, we have a long way to go, but this is a good, appreciable step forward. The government of India also announced that the sickle cell anemia elimination mission will be launched. The government of India says that we will try to eliminate this deadly disease by 2047. Now, there are a lot of different programs that the government of India is running even today, hoping to eliminate certain diseases by certain time period, and this adds to that list. This is an initiative which has set a very long deadline, but this is keeping in mind the difficulty that we have. As you know, sickle cell anemia, basically, sickle is an instrument that you use in farming, so this is what sickle would be. If you actually see this, so the red blood cells take up the shape of the sickle, and they become very, very harsh, and they don't move along your body. When the red blood cells don't move easily, they lose their elasticity, the flow of oxygen in your body also reduces, and that leads to very, very deadly outcomes. Sticking to the same field of healthcare, the government of India also has decided to open up many, many more nursing colleges. Now, one interesting sector of our economy that gets overlooked time and time again is that India is a net exporter of healthcare workers, and not just doctors. Indian nurses, in fact, have been all around the world for the kind of quality of care that they provide. You find a lot of Indian nurses working in the Middle East, and even in the European nations, there is a very, very large representation of Indian nurses if you look at those countries. So the government of India has realized that this can also bring in more development opportunities and make India a bigger net exporter of healthcare workers, and that is why 157 new nursing colleges will be set up. Similarly, the government wants to give a boost to ICMR also by setting up more labs, this time with participation from private medical research as well. We also saw the importance of ICMR, especially when the entire country was going through the pandemic. We also saw the importance of putting a lot more investment into medical research, and the government has thankfully learned this the right way. We have also been focusing on bringing new programs to promote research in pharmaceuticals. Now, in the beginning of this class, Shams actually discussed about the need to have our own ingredients for pharmaceuticals, because we are not dependent on China to import those ingredients using which we actually make our pharmaceutical products. India is renowned as the factory of the world when it comes to generic medicines. However, in order to be self-dependent on that, in order to ensure that we are not dependent on China for imports of the APIs, we have to ensure that there's much more research that goes on the field of pharmaceuticals. One other great initiative that the government of India had already taken earlier was launching the Jan Aushadhi Kendras, where you can get a lot of medicines at a fraction of their price just because they're not branded, they're generic. The government of India is taking forward the same ideology, making sure that healthcare becomes affordable to each and everyone, and people don't lose their lives just because they're not earning as much money as someone else is. One other very interesting point that the government of India mentioned in its budget was how the government of India is now planning to take India forward, keeping our 100th year of independence in mind. Now, this is a long way away, but 2047 will be very, very significant. India will complete its 100 years of independence. So the government of India has already set up certain goals keeping that in mind. We already discussed how the government of India is trying to fight against sickle cell anemia, hoping that we are able to eliminate that by 2047. Apart from that, the government of India also realizes the role of women in Indian economy, which has had the amazing Republic Day, where the theme of Nari Shakti was the highlight. Not just this, the government realizes that in order to give the important boost to our economy, we need to ensure that there are enough women who are a part of the workforce. For that, we don't just need to give them enough skills, but we also need more women entrepreneurs. This is where the government has now set up a team that 81 lakh self-help groups will be set up by the government of India, and they will be given proper training to make products that are in demand not just in India but across the world as well. The government of India is also giving due importance to the traditional artisans under the Pradhan Mantri Vishwakarma Kaushal Samman. The government of India has realized that with the introduction of more machines and technology, the traditional artisans are not getting their due. It is only when we go outside the country that we realize that those countries have certain traditional artists and we want to buy their stuff. But we undermine the significance of our own local artists, and the government of India wants to bring that back into focus. We already discussed how the government of India is tapping into tourism by launching multiple tourist circuits, by launching schemes, and also one very interesting part that does not really get highlighted is that in the past few years, and you would have seen this around you as well, a lot of tier 2, tier 3 cities have been given airports. Now this is a very, very, very welcome change, because that now makes the connectivity towards tier 2, tier 3 cities much better. So that now if there is some attractive place to visit in those cities, we have a direct route there. The government of India has also ensured that especially in the field of green energy, we have enough jobs, because again, there has to be a balance between demand and supply. On one hand, you are giving enough skills to you. On the other hand, you also have to ensure that there are enough jobs to absorb all of them. And that is how we can have this equilibrium that will take the country forward. Now, the next theme of our budget was unleashing potential, for which Shams will come here and take it forward. Over to you, sir.
Now, the fifth very important key pillar, or the focus area for the government of India in the budget has been unleashing the potential. Under the unleashing of the potential, certain very important announcements have been done. Very often you will see that when the surveys are done, when the certain institutions will go to startups, or certain businessmen, or will go to agencies and seek their replies on certain survey, one of the very important concerns that is raised is government of India should make it easier to conduct business. And in the context of making it easier to conduct business, now government of India has made certain important changes to compliances and has made certain changes to decriminalize certain acts. Now, what are these? Let me show you. First, under ease of doing business, government, that is the finance minister today announced that 39,000 compliances have been reduced. Now, some of you might be thinking, sir, if the compliances are reduced, how is it beneficial? And first and foremost, please tell me what you mean by compliance. A simple definition of a compliance would be that any kind of regulation that you're supposed to follow. Right? For example, imagine you start a manufacturing company, and the government of India says, if you want to work as a manufacturing company, you'll have to generate all these receipts. Now, in order to generate these receipts, you'll purchase a printer, you'll purchase a laptop, or let's say a computer, and to operate this particular machine, you'll have to hire one more person. Now, some of you basically say, sir, I won't do anything of that sort. I'm a billionaire. I will hire a chartered accountant. There is a company which will offer all these services. I will simply hire the company, and I'll take their services. But please understand this: whether you appoint someone, hire someone in your company, set up all of this infrastructure, or you take the services of, let's say, a company outside, which will basically provide the services, nothing comes free of cost. There's a very famous statement in the economy. There are no free lunches. Means whether you purchase a laptop, purchase a computer, hire a person to print the receipt, or you basically hire the services provided by an external company, everything will cost money to you. So one of the ways to make it easier to conduct a business is reduce the compliance requirements. So finance minister has announced that 39,000 compliance requirements have actually been reduced now. And is it dead? Absolutely no. In addition to this, the finance minister also stated that 3,400 instances have been decriminalized. And that is also very important. Because what if even smallest of your mistakes will be treated as a criminal offense? The criminal agencies, or let's say investigative agencies, will come to your home, arrest you, you'll become a celebrity in the newspapers as well as various news agencies, and basically that will have a huge impact on your business. But more important to understand this, your thinking is that it was a mistake, a small mistake. It is not such a big deal. Yes, it is a mistake. I should have penalized. I should have been penalized. I would have paid certain amount of penalty and then conducted or carried on with my business. But rather than that, now I've been treated as a criminal. I'm a criminal in the eyes of the law. Now, right, my business will be affected much more. Now, that is one very important announcement. Government of India has introduced or had made certain changes to promote ease of doing business in India. Second, production of lab-grown diamonds.
Shams, I'm sorry to interrupt. I know students want to know how to grow diamonds in the lab very quickly, but I'd like to interrupt just for 1 second. Now, you said 39,000 of these compliances have been reduced, but would it actually make an impact on the ground? Do you think it is enough, or there should have been some better measures, more drastic measures? Maybe, for example, many state governments announcing that you come and open up your company, we see the paperwork later on. Do you think some kind of drastic measures were required, or this is good enough?
Now, whenever these kind of measures are announced, the point to note is individually these measures might not look very great. Some of you look at it and say, what if none of these 39 requirements are applicable to me? These are not applicable to my business. Then how do you say this will promote ease of doing business? So whenever you look at these particular measures, individually it doesn't make any sense, or it might make very little sense to you. But if you put together, right, all of these components in a pie chart, right, what do you mean by the components in a pie chart here? One, these measures. Second, let's say introduction of GST. Third, insolvency and bankruptcy code, right, or let's say single window clearance system, etc. Then you'll realize that over the last couple of years, governments continuously, or let's say various ministries continuously have been implementing various measures which will ultimately lead to promotion of ease of doing business. Next, production of lab-grown diamonds. Now, tell me who doesn't like diamonds? You will like diamonds. You love diamonds, right? Or your spouse will fight with you for diamonds, just like mine. Generally, the idea is the diamonds which are available in the earth, right, which are mined out, the availability has reduced. Now, rather than being dependent on the diamonds which are available in the earth or in the earth crust, now there is a rising trend of growing diamonds in the lab, just like growing or producing meat in the lab. In order to promote production of lab-grown diamonds, Government of India says we are going to promote this by reducing, let's say, customs duties. We are going to provide certain incentives in order to promote lab-grown diamonds in India. So that is the second very important area to unleash the potential for the Indian economy. Third one, an entity like DigiLocker will be set up. Again, this is just a proposal. Under DigiLocker, the government says all the requirements of multiple documents can be stored safely in this DigiLocker, can be used for distribution for requirement of any of the agencies. But again, this is just a proposal as of now. How is it going to be implemented? In what way it will be useful for various, let's say, stakeholders in the economy? For that, we'll have to wait and see. For a very simple reason, I keep on telling the students every time. Many of these are just proposals. The details always lies in the the implementation, or the key is always in the process of implementation. Over a period of time, government might realize this is not feasible, or government might simply say we will use this entity only for these purposes, or we will change this into this, etc., etc., etc. So this is just a proposal as of now. One more way to make it much more easier to store, to transfer, or let's say to provide all these documents which are required by multiple agencies, especially from the businesses at multiple points of time. So these are the three very, very important areas of announcement. The next important area, that is the sixth very important key pillar of announcement, is reaching the last mile. That will be handled by Harshmeet sir now.
Thank you for that, sir. Also, one very quick advice to all of you: if you are still not using the DigiLocker app, please do use it. I really like this app. You can, as you know, you can download your official documents, be the documents related to the vehicle that you have, your driving license, insurance, registration certificate, etc., your Aadhaar, etc., and you can actually carry that, and that has the validity of just being like original documents. Now, coming back, the next key point that the government of India focused on in this year's budget was reaching the last mile. Now, what do you mean by reaching the last mile? India being such a diverse country, we have various sections of population that require the government's help more as compared to the others. You can calculate, you can actually categorize them into tribals. You can also say that these are the backward classes, these are people who have been discriminated against in the past. All of these are the responsibility of the government. That is why the government of India has ensured that we take steps so that they can actually reach at par with the other sections of the economy. Let's go then and see what are the different types of initiatives taken by the government of India in this regard. The government of India mainly focused on Pradhan Mantri, particularly vulnerable tribal group, that is PVTG development mission. As you know, the government of India has been focusing a lot on tribal development. Now, this includes a varied variety of announcements. This can also include the Eklavya model residential schools. These are schools that are based on the model of Jawaharlal Navodaya Vidyalaya, which are renowned for their quality across the entire country. These residential schools mainly will be for the tribal community, so that their children can also get great education at par with anyone else in the entire country. You all know, India right now has its very first tribal president, and that is why the government of India has been putting a lot more emphasis on the rights of tribals that should have been done much, much earlier as well. The government will also provide financial assistance for sustainable micro irrigation in drought-prone areas of Karnataka. Now, you might say that why only single out a specific state? There are a lot of different states where the government has to provide these kind of issues. Now, in these issues, what usually happens is that government usually starts this as a small model or as a driver and see how this actually pans out in a particular state. Once this pans out well, and once the government believes that it can be a successful model, these kind of models are then replicated in other parts of the country as well. We already discussed how the government wants to give a further boost to the Eklavya model residential schools by having even more teachers, by giving them much, much more facilities to ensure that the tribal community also becomes a part of the mainstream in India. The government of India would actually continue giving free food grains to all Antyodaya and priority households for 1 year, as we have continued since the pandemic had hit the country. The government of India also wants to focus on the long heritage that we have been very, very proud to carry forward. Under this, the government of India would ensure digitization of ancient inscriptions. Now, you would have also seen many times that the tribal community, many of them who reside in the forest for many years, have their own way of life. They have their own knowledge system. They know that if they fall ill, how to cure them, what are different types of plants that they have to use. All that knowledge is hidden and passed on from generation to generation in the tribal community. To make sure that the other parts of the country can also take advantage of such kind of knowledge systems that are actually hidden in those tribal communities, the government of India will ensure that under Bharat Shri, we take up digitization of all these ancient inscriptions. This is not just about passing on scientific knowledge, this is also about passing on literary knowledge, because there are a lot of manuscripts and inscriptions that might have a great cultural value. A part of the budget was also about the government of India giving out of the PM Awas Yojana, which was increased by 66%. The budget allocation for this crucial scheme also got increased considerably. As you know, the government of India has been putting a lot of focus on ensuring that everyone across the country, doesn't matter the size of the flat, doesn't matter the size of the house that you have, but everyone should have a residence that they can call their own. That is why the government of India has taken multiple initiatives in the past few years as well. This includes ensuring that you get certain rebate on your interest. This also includes the government actually helping with subsidy of your first home loan, and the government continuing with the PM Awas Yojana. The government of India has especially ensured that the vulnerable section in the society is at the center of the government's attention with this year's budget. Now, a lot of these schemes, as pointed out earlier as well, it is very easy to announce these schemes and announce your intention. My intention can be that from tomorrow I will study 20 hours a day. My intention can be that from tomorrow onwards I will not sleep, I will just keep on studying. But whether you are able to implement and ensure that your attention actually turns into reality or not, this is where the problem would lie. So yes, from the side of the government, the announcements are on the right track. The government has focused on those sections of society that do require the government's help more than the others. But again, it remains to be seen how in the upcoming financial year we see the implementation of all these projects. Now, to move on to the financial sector, to talk about the real numbers, how much is the government earning, how much are they spending, every single thing, we have Shyam sir, please.
The seventh key pillar that is covered in the budget for the next financial year is the financial sector. The finance minister has announced that there will be certain amendments done to the Banking Regulation Act of 1949, Reserve Bank of India Act of 1934, etc., in order to protect the customers or the interest of the customers in the banking sector. In addition to this, finance minister also has announced certain tax incentives to be provided to the GIFT IFSC, that is the international banking units, which will be set up in the GIFT IFSC. But one important announcement that basically is connected to the backbone of the Indian manufacturing sector as well as the service sector is the revamping of Credit Guarantee Trust Fund for micro and small enterprises. Now, what is the announcement? Why this makes much more sense for the micro and small enterprises? Let's try and understand it. The government earlier announced Credit Guarantee Trust for micro and small enterprises. What is the side of a Credit Guarantee Trust? Simple. Imagine you are owner of a micro enterprise, you go to a bank, apply for a loan. But by the virtue of being a micro enterprise, your revenues, first and foremost, that is earnings, are very, very low. Second, you are much more vulnerable to the events of the domestic market as well as international market compared to a bigger company. That is, let's say there is another way of the pandemic. Again, hypothetically, I'm not saying there is another way. Hypothetically, in India, there is another way of the pandemic. Who do you think will be most affected? Micro enterprises or a very, very big companies such as Adani's or Tata Group of companies? So who do you think will be much more affected? You already know the answer to that. Right? So these micro, small, and medium enterprises are very much vulnerable to the events that are taking place in the domestic market as well as the external market. Now, because of this, a bank manager will consider it very risky to give a loan to micro and small enterprises compared to giving a loan to a very, very big company. Now, in this regard, government through SIDBI has implemented a scheme by the name of Credit Guarantee Trust for Micro and Small Enterprises. And the logic is very simple. Government of India set up a fund, and by installing or by setting up a fund, they will guarantee to a certain extent the loans that are taken by the micro and small enterprises from the banking sector or from the financial institutions. And because now the bank is guaranteed that if a micro enterprise which has taken a loan doesn't repay it, I can get the reimbursement in simple sense. I can get the money back from the fund. One, the risk component of giving a loan will automatically go down. So as a result of this, what do you think will happen? One, risk component will go down, so the rate of interest charged on such loans should go down. And the finance minister in the budget specifically stated that because of the revamping of the CGT-MSE, the interest rate on the loans given to the micro enterprises specifically or small enterprises here will come down by 1%. And that makes a huge amount of difference for a micro enterprise. Second, because now the banks are guaranteed, yes, there is a fund like this, they will issue more and more loans to the micro and small enterprises. So two outcomes. One, rate of interest is supposed to go down. And second, revamping, I'll come to this, right? Second, loans are supposed to be issued for the micro and small enterprises now. Now, what do you mean by revamping here? It is nothing new. This scheme is not new. In the last year's budget, finance minister initially announced that we want to revamp, basically restructure the CGT-MSE. Now, in this particular budget, or the budget which was announced today, finance minister stated they would be allocating 9,000 crore rupees under this scheme or this fund. As a result of this, large amount of loans will be guaranteed and issued to the micro and small enterprises. So that is the context of announcement of CGT-MSE here. But please make a note of this. The CGT-MSE is very, very important in the context of the MSME sector. Because I'm pretty sure all of you know this. The pandemic affected the MSME sector much more, or the hardest hit, or one of the very important hardest hit sectors in Indian economy because of the pandemic was MSME. So one way a relief has been provided to the MSME sector is this announcement. That is CGT-MSE revamping. Now, this is the most important announcement that the finance minister has done in all these 7 key pillars. But should we stop the discussion of the budget after covering 7 pillars? Of course, no. Right, the key area that most of you are waiting for to hear about is taxation. Let's start. Now, a large number of announcements have been done by the finance minister, starting with indirect taxes, and where basic customs duties have been reduced, customs duties have been slashed, etc., to promote production of lab-grown diamonds, to promote the production of televisions in India, to promote the production of mobiles in India, etc. But you don't have to remember all of those reductions in the basic customs duties, but because these are very, very large number of announcements, and moreover, UPSC doesn't ask those kind of questions. Now, what are the important areas of announcement then in the taxation? First one, tax exemption for the startups has been extended by 1 more year. Whenever you read about startups, one of the very important factors to define a startup is they will have to be registered within certain number of years, and because these are identified as a startup, the startups are eligible to claim 100% tax exemption. But now the question arises, what should be the tenure? Till how many years should we keep on providing this tax exemption to the startups? The exemption was supposed to end many years ago. The finance minister has kept on extending the tenure, right, for the period of exemption by 1 more year every time. And adding to that particular, right, the second mention, finance minister today again announced that the tenure for which, or the time period for which the startups can claim tax exemption, 100% tax exemption, will be extended by 1 more year. That is the first very important announcement in the context of startups. Second, presumptive taxation limit for MSMEs has been increased. That is basically under the presumptive taxation. What is this idea of presumptive taxation? You have to pay taxes to the government, but to prove that you're paying the right amount of taxes, you have to maintain all the account books. You'll have to hire a person, expert, etc. But there's a scheme called as a presumptive taxation scheme, under which you don't have to maintain the record books. You don't have to get all of these, right, proofs of all these documents. But based on your amount of revenue, right, based on your revenue, the government will collect certain amount of taxes from you. Generally, the presumptive taxation rate is in the range of 6% for some, 8% for others. Now, the government of India states that, or the finance minister stated that for MSMEs, one more very important reform, the limit, right, or the threshold limit will be increased. Until now it was 2 crore rupees, now it will be increased to 3 crore rupees, which means more and more MSMEs will get the benefit of the presumptive taxation scheme. Third one, cooperatives. The cooperatives which will be there in the manufacturing sector, now if they start manufacturing in the next 1 year, they will be getting a benefit of lower corporate taxes. That is, a tax rate of 15% is applicable on them. Next, triple E status has been provided to Agniveer funds. Government of India has announced Agniveer scheme. And once anybody is selected as an Agniveer, part of their salary will be contributed into a fund called as Agniveer fund. But generally, whenever these contributions are done like this, is it taxable, or can the Agniveer claim it as an exemption while paying the taxes? The government now says that the contribution, the earnings, as well as the withdrawal, whatever it is, that is the contribution accumulation as well as the amount of earnings, all of them will be exempted. It is not taxable. Next, as a result of all of these reforms, the amount of tax expenditure the government would be incurring, that is the amount of tax revenue that the government of India will forego in the next 1 year, will be 35,000 crore rupees. Many of the newspapers when you read tomorrow, or many of the websites that I already referred to, will say that it is 38,000 crore rupees. But please understand, on one side tax revenue has been foregone, and on the other hand, certain amount of additional tax revenue is being collected. If you basically account for both of them, the net or the total tax expenditure for the government will be 35,000 crore rupees. And finally, the most important one, right, as far as income taxes that you pay, that I pay is concerned, is a new personal income tax regime. Under this, what has been proposed? Simple. Earlier, 2 years ago, government of India already had one taxation system, this personal income tax system. In addition to that, introduced one more taxation system. Under that, there are multiple slabs. But the concern has been that, despite having multiple slabs and calculating the income taxes, the taxes that you pay would be lower. Only around 5 lakh people, that is personals who will pay the income taxes, individuals who pay income taxes, actually chose that regime. And the reason that was cited by most of the respondents was, no exemptions are provided. If I don't get any deduction, no exemption, etc., why will I choose this tax regime? I'll stick to the earlier tax regime where no doubt tax rates are slightly higher, but I can get multiple deductions. In order to improve the adoption of this new tax regime, now the latest tax regime or the new tax regime has been restructured. That is, number of slabs have been reduced. That's the first very important change. You do not have to buy hard. First and foremost, you do not have to buy hard. Number of slabs have been reduced. Second, until the last financial year, the rebate, the taxable income on which you can claim rebate. If your taxable income is up to 5 lakh crore rupees, you could claim a rebate. Now that has been increased to 7 lakh crore rupees. Please remember this. It has been increased to 7 lakh crore rupees. So these are certain very important announcements that the government or the finance minister has done in order to restructure, increase the adoption of new taxation system. Now, apart from this, where is the government of India spending? Which sector accounts for the highest amount of expenditure? You do not have to buy hard, but as usual, the highest amount of expenditure that the government incurs will be in the form of interest. What is this interest? It is, please understand this, right? It is basically the amount of the interest on the past loans that the government will keep on paying. And in addition to that, you see transport sector accounts for more than 5.7 lakh crore rupees, defense, right, 4.3 lakh crore rupees, etc., etc., etc. So these are certain very important areas of expenditure to be incurred by the government. Now, in addition to this, one more table for you. Please do not buy anything. This table basically provides you the consolidated data for 3 budgets. That is the actuals for the budget 21-22 because the financial year is already over. The revised estimates for the current financial year because we are yet to finish the current financial year. And the third one, the budget estimates for the next financial year. What should you observe? One, the total amount of expenditure obviously has to be equal to total amount of assets. That is, the income that is earned by the government is equal to expenditure incurred by the government. But generally, what you observe in the context of Indian economy, generally, is that the amount of revenue or let's say amount of income, which is purely income for the government, is generally lower than the overall expenditure incurred. And that is the precise reason government is forced to borrow from the market. And the amount of borrowings that have been proposed by the government for the next financial year is more than 17.8 lakh crore rupees, which is slightly higher than the revised estimates for the current financial year. That is overall borrowings. Please do not be confused between the market borrowings as well as overall borrowings. Right? So many of the newspapers or let's say the websites would have already told you like the market borrowings is somewhere around let's say 11 net as well as 15, around 15.5 in gross. But the total amount of borrowings by the government in the next financial year will be 17.8 lakh crore rupees. Now many of you simply say it is very difficult to remember all of it. For you, right, basically you have to remember deficit numbers as a percentage of GDP, which you will see now. We'll see deficit numbers, we'll also see the expenditure as well as income wherever or in which area government incurs. Now let's have a look at the deficit numbers first. If you just observe this particular graph, you will realize that there are 4 deficit numbers which are given to you. And And for examination, you need to understand only these four deficits, nothing else is required. What are these four deficits? One, fiscal deficit, obviously that is important. Second one is effective revenue deficit. Third one is revenue deficit. And the fourth one is primary deficit. And what do you observe? You'll see that the fiscal deficit target for the current financial year, as per the budget estimate, was kept at, right, let's say 6.4%. And today, the finance minister has revised it and still kept it at 6.4%, which basically means government is on the path of fiscal consolidation. And you have to remember that. Why? Under the FRBM document, government says by financial year 25-26, will further bring it down, reduce it further to less than 4.5%. Now, next financial year, the target that the government has set up is 5.9%, which is on expected lines, which is basically slightly on the higher side compared to market expectation, but on the expected lines. In addition to that, you'll see that the primary deficit target has been lowered. It is much lower now, right? The effective revenue deficit as well as the revenue deficit, which are basically fixed at 2.9%, 2.3%, and 1.7% of GDP. Now, these are deficit numbers. So, from where does the government collect money? If they say 45 lakh rupees, government collects money to spend 45 lakh rupees. From where does the government collect this particular 45 lakh rupees? Let's have a look at the representation of it. Generally, you'll see that government, if I simply say government is collecting 1 rupee, government will collect it from different sources. And the most important source, which you should know, is the form of taxation. And if you see that government collects the money in the form of taxes, most of it comes from the form of taxes. For example, just have a look at it. You will see that the government is collecting corporate taxes, it is collecting income taxes, it is collecting excise duties, it is collecting GST. And if you add together all of them, and obviously if you look at the data, you'll realize that most or the highest amount of tax revenue collection or tax receipt collection is in the form of GST. So if you basically add all the sources of the tax receipts that the government has proposed, it is somewhere around 58 paisa, which means 58% of the total income of the government for the next 1 year will come in the form of taxation. And that's very, very important. Nothing new in this. Generally, it is on the expected lines. Because if you see or analyze the earlier budgets, generally around 55 to 60% of the total income earned by the government comes in the form of taxes. But one important area that you need to observe apart from the taxation is the borrowings of the government. If you have a look at it, the borrowings of the government is on a higher level. That is more than 1/3 of the borrowings. Traditionally, if you see, borrowings generally is in the range of around 33%, 36%, 38%. Same can be seen even in the next financial year. Now, these are the sources of income. What about expenditure? Where does the government spend the money? Let's have a look at it now. And if you just analyze or just observe the trend of expenditure, you will realize that a lot of this expenditure generally government spends in the form of schemes. For example, you can have a look at it now. Central sector schemes, centrally sponsored scheme. Right? Generally around 20% or plus more than that, the government spends in the form of implementation of the scheme itself. In addition to that, another important area of expenditure is in the form of interest liabilities. That is, annually out of the total expenditure, how much money does the government pay on the loans that they borrowed in the past? And the trend in the last couple of years has been that the amount of interest payment accounts for more than 20%, mind you, of the total expenditure. And much more concerning factor regarding to this is, if you look at out of total revenue expenditure, right, in the last 1 decade, out of the total revenue expenditure, the interest payment, the amount of interest that is paid by the government would generally account for around 33 to 35%. But if you look at in the recent times, right, if you take out of the total revenue expenditure, the interest payment that is done by the government accounts for around 38% to 39 to 40%, which is on the higher side, which we need to contain. And that please understand this, that one of the contributing factor of that is the pandemic. Now, this is the income as well as the expenditure profile for the next financial year. Right now, having looked at all these 7 key priority areas, as well as the income, expenditure profile, and the important financials of the budget that have been announced by the government, what are the concerning areas? What are the problem areas that we need to be careful, right, before we come to a conclusion whether all of these are possible, whether we will achieve a growth rate of 7% or let's say 6.5% in the next financial year? That is the issue of concerns. As already mentioned, right, I'm pretty sure all of you know that, right, there is a issue of certain concerns. Right, that is one, inflation. Second one is basically the Russia-Ukraine war, and the third one is basically the spread of pandemic in China, and the fourth one, very, very important, that is rising current account deficit as well as trade deficit. Let me start with the first one. If you basically look at the last 1 year, the government of India announced a budget in the month of February, and immediately after a month, there was an outbreak of Russia-Ukraine war. Now, whether you're on the side of Russia or Ukraine doesn't matter. The fact of the matter is very simple. There is no denying the fact that there is a huge impact of this war on the fundamentals or on the economy of India. You might talk in terms of, let's say, import of crude oil. You might talk in terms of, let's say, import of fertilizer, etc. There was a huge impact of it. In recent times, it has got moderated, but again, if the war continues, go to the next level, definitely expect impact to be on Indian economy again. Second very important point is, like I've already mentioned, inflation and recession. If there is a higher sustainable inflation or let's say sticky inflation in the domestic market, international market, interest rate will go up, capital flight will take place, etc. That will dent a huge impact on the finances of the Indian economy. Third one is, like I already mentioned, pandemic in China, it will disrupt the supply chain, it will disrupt the trade between India and China. And finally, the fourth one, the ever expanding current account deficit, which is basically leading to outflow of the currencies from India, putting a lot of pressure on the rupee versus dollar exchange rate, depreciating and again contributing to expanding current account deficit as well as trade deficit. So whatever proposals have been done by the government, whatever financials have been provided by the government, always take these numbers with a pinch of salt. Why? If any of these 4 concerns that I've listed here materialize, if any of these basically materialize, what do you think will happen? Do you think if the current account deficit will widen, trade deficit widens, do you think exports will continue to grow from India? Do you think all of these fundamentals that we're talking about, let's say, whatever data we have provided, do you think that will be affected? Of course, yes. So these are some of the concerns. No doubt, these, if materialize, will have an impact. But let's assume everything goes smoothly for the Indian economy for the next financial year. But having said so, right, is there any factor which is in favor of India? Maybe you simply say, sir, you basically talk about these factors, right? We are concerned now. Right? Should we end even the answer on this note? Of course, no. There are certain factors which are working in the favor of India, which are expected to continue to work in favor of India. That is, no doubt, China is one of the very important manufacturing centers. No doubt, there is a trade relation with China. We are import dependent on China. Having said so, in recent times, many of the countries, many of the manufacturers have started adopting the strategy of China plus one. That is, rather than getting concentrated in only one country, being dependent on one country, they are trying to diversify their trade. They are trying to diversify their, let's say, imports, exports, etc. by focusing into other countries. And one country which gives them a lot of hope is India. In this context, yesterday itself, I must stated that most of the growth in this year will come from India as well as China. Second, although inflation is a concern, no doubt, but like I've already mentioned inflation has been moderating. But the only concern is it has been sticky. Core inflation has been sticky. Food inflation is a concern. Third one, if you talk about investments in India, multiple analysts, multiple experts pointed that private capital expenditure has got stagnant in the recent times, etc. But if you look at what has been the overall flow of FDI into India for this year, we are expecting the total amount of inflow of FDI to cross more than $100 billion for the first time. And on the other hand, if the CAD is a concern, right, the depleting forex reserves is a concern, then there is a good news for you people. India is going to receive more than $100 billion for the first time ever in the form of remittances, as per World Bank report. So no doubt there are concerns, but having said so, there is a silver lining in every one of them. So these are certain very important points which will work in favor of India in the coming year and ensure that India will continue to remain a bright spot in the global market. So that's it for the budget discussion. If you like the initiative, hit the like button, provide your comments in the section below, and if you have not yet subscribed to Byju's Exam Prep IAS, kindly do. But before I wind up, I would remiss if I don't thank my friend, my colleague, Harshmeet sir, who happily, basically was happy, very much happy involved in the presentation of the budget. Thank you. Have a great day. Good night.